barking. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola. Oh, look, so your gray and black tones were all there today.
Yeah.
Oh, I like your
Look at your stars on your, very nice.
Down, boys. No, thank you very much. Thank you very much. No.
Just trying to be complimentary
Yes.
here this morning. Start my Wednesday off on a good note.
How was your evening?
My evening was good. I'm going to have a lot to add tomorrow morning. So if you're at home and you catch the morning show very early, you're going to want to have a cup of coffee with you tomorrow. I'm doing something tonight.
I don't know if this is our. You're
Yeah,
hyping this up. Like, whoa.
You'll never guess.
Is this going to be a PG thing that we hear
Yeah,
about tomorrow?
You'll never guess. Don't even try. It's going to surprise everyone, but I will give you full details tomorrow because I don't want to be teased all day today and tomorrow. I would just like to be teased tomorrow.
I mean, if you're just getting a colonoscopy, just get a colonoscopy.
No,
You need to like hype it up, man. Like,
No, I've had that, and I think did they lower the age?
they did lower the age, yes, to 45.
So you were on the
So-
cusp before.
Yeah.
You're in the zone now. Get
Yeah.
yours done. That's a very
No,
easy.
but why are you being so cryptic? Why you're
Yeah, I
being
don't-
kind of like a pick me girl right
Yeah,
now?
a little bit. You're trying to build suspense for this.
No, I'm not trying to build suspense. It's a Valentine's Day pay forward thing that I have to do to get everything I want for Valentine's Day. But I will.
Oh, God.
I will. I told you to wait.
I didn't know
I
Valentine's
asked you
Day
to
was
wait.
this transactional. I didn't know that you had to work this hard.
Everything is transactional. Okay, I mean, I know you're young, and I know you're young too. But everything moving forward.
The shade, honey. I mean, only one of us moisturizes, so.
Yes.
No, I've been moisturizing too. I've been for like the last year or so.
Good.
Yeah.
We're SPF.
I'm not sure if it has any SPF in it.
Well, no, I mean in the daytime SPF,
Oh.
but at nighttime, yes, you should moisturize.
Yeah. My wife has been buying me products for years and years and years.
Yay!
Now I finally decided to do it. Like
I need to do that. I've been getting roasted for the humidity in my condo.
Which is like negative.
I didn't
or
even
no, it's
think about
high.
it. No, it's too low.
It's too low, yeah.
Too low, 'cause
I would
it's
imagine.
freezing outside.
Yeah.
Like, how do you get 40% humidity when it's negative 15 degrees
put a
outside?
humidifier.
I do. I got one now.
Yeah.
But also check your HVAC because your house might have a already built-in
Unit.
humidifier,
Yeah.
and like you could be doing too much.
I never had one of those that worked right. Like,
Mine works pretty good. Like
Does
you
it?
have to set it. Like
Yeah, I
it's
got a
based on
setting on
the
it.
What do you think
temperature.
at? What do you get it at in your?
In my house, like 35.
That's good. I was going to say like 40 is, I think.
Yeah, 35.
I was at like 25.
Yeah.
And I had to get that up. Mikey put me on this because his girlfriend was roasting him for this. He was at a 22.
See, women just make your life better.
At 22, she was like, I can't even breathe in here.
You see, Mikey didn't
And I'm
play
like-
it right, though. You said, now, if I get this humidifier, what do I get? See,
You don't have to play that game.
Yeah, well,
Okay.
But it's just they're annoying because like
Not yet.
they're impossible to clean and but humidifiers are good. Like it's just like
gotta
it's
put
such
the
a crappy
distilled water.
right. Yeah.
Oh,
it's
you
just-
will so get over the distilled water thing.
I don't do that. No
Oh,
chance.
You can't. It'll be.
That's for the first hour because I use the Brita, which isn't even distilled water. It's,
filtered.
Yeah.
Yeah, but there's
Yeah,
a
it's
real
going to be
narrow.
scaly. You buy one every year is what
Yeah.
you do. It's
Yeah.
a disposable.
I know, and there's a narrow band of it being
Yeah.
good, and then it's just spewing bacteria.
Yeah.
Yes. So
It's a real.
it doesn't seem like a long-term thing. You just do it for a little bit, then everybody stops talking about it.
Yeah.
We tried.
Yeah. Okay, your special night.
No, I don't want to talk. I like your
Is
humidity
this
talk.
like,
I like my special night. I'll talk about tomorrow. I don't want to talk
Is
about
it happening tonight or it's happening?
Yeah, it's
tomorrow?
happening. It's happening tonight, so I'll be able to talk about it tomorrow.
Okay.
Hey.
Yeah. So I'll have a.
Is it in the city? Is it in the
Okay,
suburbs?
you really,
No, I'm just asking. Is it in this? Do you have to come back into the?
Yes.
Are you going to stay here?
Yes, I have to
all
come
day?
back into the city.
Okay.
Wow.
Okay.
Scary for you. Suburbanite.
No, I've been in the city just about every other day this past calendar week or so.
Ooh,
Yeah.
Driving, traffic.
Gets dark out.
Yeah. Oh
Get tired.
Yeah.
No, we're gaining daylight every day now.
We are gaining daylight every day.
It's nice.
Yes,
It's
yes,
getting
yes.
like gonna turn that corner.
Can't wait.
Now, I don't know.
Can't wait to turn that
How
corner.
about you, Nikki? What'd you get up to last night?
We started golf league again.
Tuesday, that's right.
We're back. Yes. The spring golf league. We just finished the winter golf league. So
I was like,
Do you
I know.
you play different courses? I mean, I know you were playing Arizona courses in the winter. What do you play in the spring?
they're
now?
different courses. I forget which one we did last night. I can look it up. But this was a handicap one, so we didn't actually like compete against another team. And
Oh,
it
you were
didn't
just
count toward-
you were sorting out your handicaps.
Yeah, but we already have handicaps from the last one, so it was really just a night out with the boys to play some golf.
Did you get better? Did you shave strokes off of your handicap, or do you want to get
Oh,
worse?
don't get better now.
Yeah, no, yeah.
You got to
what's
get better during the season. You don't get
What's
better
the
now.
strategy?
Now getting better
I
does
don't
you
know
no
what
good.
they did for this one because my handicap went down. I was kind of right where in terms of my play.
It's like 15, right?
I played really good. I
Okay.
just had one hole that I had a quad bogey. That because everything counts. There's no
Right.
you can't.
No inside the grip. And,
Yeah, you can't be like, all right, I'm picking up at a triple. It goes, you go into the bush and you try and get it out and it doesn't get out of the bush.
Now you're going into the imaginary bush, right?
Yeah, the imaginary bush. Like you can't just grab your ball and move it, a foot and hit from there.
No foot wedges,
Yeah,
no
no foot
country,
wedges,
no
no
country
nothing.
club
Yeah.
lie.
The Texas wedge.
Yeah. Yeah. No, none of that. So, but it was fun. So it was just, night with the boys playing golf.
Very sweet.
Yeah.
Very sweet.
But you're
Take it
not.
sports
Don't
back
give up. Don't
first.
give up that day. Don't give up that night or whatever.
I know it's tough. It's tough.
I had that for a long time. I no longer have it, but I had it for a long time. Don't give that one up.
Oh, boo-hoo. Boo-hoo. Your wives are at home raising children, and
Yeah.
you're like, don't give up, man. Don't give up your beer league, you guys.
give up. Don't give up.
ever give it up.
Give up that night out with the guys. Don't give up that passion, whatever it is.
Also, the same
The
dudes.
sports car.
Also,
or
the same dudes.
thing
The
that you
divorce
have.
came out of nowhere. I love that pipeline. So good.
Don't give it up.
So good.
Don't give it up.
Anyway.
I can't. What about you? What did you do last night? Anything fun, exciting?
No, went to
Please
the
don't tell
gym.
me you went through news articles again. Please, no.
Well, it's my literal job. I don't know how you
Yeah,
think the
well.
news gets done. Well, I
Take
got
a night off every once in a while.
I got a trick for you. But no, I just went to the gym and it was chill. Just I don't know, doing my time.
No soups.
No soups.
You get on the soup train.
I
You made
do-
soup again last night?
No.
What are you on, like a liquid diet over there or something?
No.
No?
No.
No?
I
That's how you
I
went
gotta
out.
find like a high protein soup though.
There's protein in everything now.
I know.
They do.
Yeah.
The protein
Why are you
pancakes.
yelling at me about what I want to eat
I use the bone broth.
in the house that I pay with my
I
money? Why are
I
you-
can tell the next
Why are
half
you
hour,
mad?
45 minutes, I'm gonna need a little bit more
Like,
coffee.
why are you mad? Why are you mad at what I'm cooking in my house?
I'm
When
not
people
mad.
in your house can't even cook.
I'm not. I told you it was gonna be an extra
Yeah.
coffee day.
Yeah, you need to bring in one of the beers, one of the Vinny beers.
Okay, I can do that.
How long?
I'll do
What's
that-
the
I'll do that
fermentation
tomorrow.
process? What's the fermentation process?
It's like in jail where you piss in a bag, like you.
No, I don't know anything
No.
about beer or beer. Like, does it take weeks or days?
Yeah, it was
or
like 4 to 6 weeks or something like
Okay.
that. But his, I think, went a little bit longer. Whatever it was, it went longer.
Okay.
And it was supposed to be like cool, dry place, so we did that. And he has it in like a jug that has like a little apparatus on top of it that's filled with water, so air doesn't get in.
Sure.
And then his got a little bit too much fermentation, so he had to scoop a little bit out, and then they do like some cheesecloth to strain it a little bit.
What is your
Then he got a thing to put the bottle caps on top of the bottle.
what is the
My
capital?
dad had to build like a whole
He has a
addition
room.
on the house.
We took one of the rooms
Yeah,
and
you
we
had
made it a
his-
beer den.
His home office was turned into a.
What
a
is the
beer-
Half of it.
I just want to
Half
know
of it.
what's the capex on this? What is the capital
Oh,
expenditure
oh,
for this hobby?
So each bottle of beer I got to put at about
It only got 6. He only got
6 bottles. It's got to be $100 a bottle.
No.
It's got to be.
I'm saying $2.50 a bottle.
No, it was about $20 a bottle, I would say, right now. But the next ones will be so much cheaper because he doesn't.
No, but I'm talking
need
about all of this equipment
Yeah, the
and the
equipment.
gauges
Yeah,
and
he
the funnels.
bought like
and
a used bottle. He was pretty economical about it. Him and his friends. I mean, there was like 3 or 4 of them that did it. You know what I mean? So
It's funny that their parents weren't stupid enough to let their 16-year-olds brew beer in the house.
no, their parents. No, I told them you couldn't start it in my house, so they had to find another parent to do it. So they found another parent to do it. So they did it in their kitchen. Like this was in my
I know who's
garage.
sanctioning all of this.
Yeah, this was in my garage because we have a heated garage, so they were able to do it. In
Oh,
there.
me lord.
Yes. So they were able to do that in there, but I was not letting it because I've done like the vodka, making the limoncello kind of thing. The whole house smells like it's just, and the beer was going to be even worse because they're going to spill it
I'm
everywhere.
sorry, but were you doing this when you were 16?
No, I was like 36.
Okay, well then.
No, I wasn't doing it. When
I
was 16.
remember the limoncello.
Yeah, it was good. It was good. It was fun. It was
That's
fun.
a good midlife crisis hobby. Yeah.
Pre-COVID, I mean, I was like, I was well ahead of the curve.
You weren't 36 pre-COVID.
Well, I was just threw out a number.
Okay,
I wasn't 16. I was maybe 46.
I was like,
I don't know.
Great financial crisis.
Yeah.
Right, I might have been 46. I was
Okay.
just doing the 6 thing and
Yeah.
maybe taking a little leeway with a decade or so. I was just trying, Vanetta, but
Okay.
you outed me.
That's fine. You're on my age timeline. That's fine.
I'm going to get you. You want to get it and we'll try it?
Vinny told me one of them was coming my way.
Okay. You want to try it on air maybe?
Well, yeah, why don't you bring it in?
Yeah, why not?
We'll all 3 try it?
I'm not drinking that.
Come on.
I'm not-
You'll have a sip. Just a sip.
I am not messing up my immaculate gut biome that I've
No,
meticulously
it's
created
good.
with my pro and prebiotics.
1 ounce, a little something. Come on.
I don't give in to peer pressure, my guy. But
We'll share it with the production team too. We'll all have like an ounce of beer. We'll see how it goes.
We will all be ground zero for the next pandemic.
That's perfect. All right, we'll do that tomorrow because it'll play into what I have to do tonight.
Oh.
Yeah, a little bit.
I'm still betting on colonoscopy.
That's a good guess, I think.
What's that?
That's a good guess.
Colonoscopy?
Colonoscopy.
Yeah.
No, I had that done already. Yeah, all good. Clean.
I don't.
Amazing.
All right.
All right. Well, cool.
I gotta remember. You gotta remind me though, like about the beer. Don't make me forget.
All right.
Yeah. So anyway, that was my.
Did he make label? Like, what kind of beer is it? Like,
I
is
don't
it a
think he
pilsner?
labeled
Is it
it.
an ale?
Oh, I got a label maker.
Oh, okay, beautiful. Well, there we go.
Yeah.
Make something up for tomorrow. Just stick on there. No, I'm just kidding. Oh, we have a label maker too, like just a.
No, I got the labels from my Jardinary. Remember
Oh.
my labels? My
Oh,
labels
right.
are amazing.
You made they were with the tuna on it. It was beautiful. Yes.
With the chain, with the
the
Italian
chain.
horn? Yeah.
Yes,
It was actually really cute. I was very
Cigar.
impressed.
Designed
Yeah.
by in-house designers.
Yeah, by your
Not him.
girlfriend.
I mean, but yeah, the better half. Yeah, for sure.
I'm saying.
Yeah, very nice.
I get you a good deal on the
On the bottling labels, beautiful.
But no, what kind of beer is it?
So he asked me. So the hardest thing. Well, not the hardest thing. Like, so they go to this make your beer place, which I'm amazed that they sold them the ingredients to make the beers. Right? They're all.
Oh yeah, you would.
Well, they
think.
just figure it's such a long shot that these kids are going to be able to pull this off. Why not sell it to them?
I mean, I get carded for my sinus medication, but sure, walk in, buy all the beer supplies you want, kids.
Yeah, I gotta to buy sinus medication. You got to get like
Right? Yeah, I have to have my license.
right?
Yeah.
I didn't know this, but he was having his fermentation. Like I said, was getting it was too much fermentation.
Right.
It was getting too much. So him and his friend, who just got his license, took the gallon of beer or whatever that they had, stuck it on their lap, and brought it to the place so that the guy could see it and tell him.
Oh,
He goes,
right. Give them some help.
give him some help, and that was great. But he said, like, you can't drive with that.
It'll
because-
explode.
No, it's open beer. Like you're not allowed to
it's
have
an open container.
Oh. Your driving career could be over. Before
You're not even supposed to have like more than one person in the car with you, let alone a gallon of open beer.
I didn't even think about that.
Me either.
Yeah.
Me either.
Whoops.
Yeah.
Okay.
Yeah.
Well.
Yeah. So that was the biggest faux pas that they made.
Amazing.
I'm just looking to see if there's any payment for tips in Glenview. Hold on. Mama needs new shoes. Hold on. Crime Stoppers. Where are you at? Where's that dog? Yeah. Hey, we got a great show for you today. It's a wonderful Wednesday here. Tastylive. The top of the 8 o'clock hour. We have an options jive. Why futures beat margin. Ooh.
Was it like a battle royale? Futures beat margin?
Not really.
Not really?
It's going to be just a quick one about just kind of the leverage that you get with futures versus spots. So we're going to talk about like the carry costs and just, how much added leverage you get with futures.
Okay.
Good.
And then we have what's your assumption? Because it's assumed the position Wednesday. So it's where viewers write in their trade ideas to the bats, and the bats are going to look at all these trades. Viewers have picked an underlying, and they have a directional bias with a bearish, bullish, neutral. And the bats are
my favorite segments, I think, because I get to hear what the viewer out there in the camera is thinking.
Sure.
See what they're doing. It's pretty cool.
So that is going to be at 8:40. Then 9 o'clock, a little tasty extra TP in the house with cherry picks.
Yes.
Hopefully things are thawing out nicely in Texas, but TP is going to be in at 9 o'clock. And then we have live from the trade desk today. We have Quentin counting down all the top trending tickers over at Tasty Trade, and Mr. Ryan Grace in to talk about crypto and the crypto crisis. We need the graphic, like the markets in crisis. Crypto in crisis.
Yeah.
Maybe that'll turn things around. I did hear, though, and we can ask Ryan about this, the McRib is slated to come back in April. So this could turn things around.
2x, average 2x.
2x, so.
Did it do it last time, too?
No.
It did not.
I brought that up. Remember I brought it?
Yeah, the McRib.
Yeah, it was in September or whenever.
Right.
I don't know.
The background was when they bring the McRib, Bitcoin goes to the moon.
Yeah.
But it did not happen last time.
It did not.
As a matter of fact, Bitcoin
It's modern day astrology,
Yeah.
Track the McRib patterns.
Also, it was not October either,
Yeah.
but that's neither here nor there. And then you missed them yesterday. I mean, they did do last call, and they were on yesterday. But today at 10 a.m., Liz and Jenny are live from the floor of the SIBO. It's as always electric when the ladies are live. But you missed them yesterday.
Yes, we need.
So yes, Liz and Jenny live from the floor of the SIBO. So always great. And if you have questions for Liz and Jenny, they love it when you tweet at them. Just use the hashtag LIZJNY, and you could see your appropriately worded tweet on the show.
Good call on that.
Yeah, I see everyone's comments.
Yeah.
Like, I see everything. Anyway, that's the run of show. You guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
news.
across the wire. Our leading story, top story.
In today's headline. This just in.
You popping a beer early over there?
All right, everybody. Today's a wonderful Wednesday. It's February the 4th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings for this evening.
Google's on deck. Qualcomm.
Big boy.
Yeah. ARM. Another one, right? Snap, if you're into that.
Okay.
This is probably the top 4. There are others that might interest other people, but those will be the ones we'll
Those are the big ones. We are not getting a jobs report on Friday, but I guess private payrolls came out this morning and they rose by just 22,000, which was short of expectations. So do with that what you will, but we're not going to get the big number on Friday. But good news is President Trump signs a bill ending the federal government shutdown. Hey, we did it. Especially as someone who needs to get on a plane in like a week or so. I'm so happy for this outcome.
We did it again.
Yay for me. President Trump signed legislation that narrowly passed the House of Representatives earlier Tuesday with the package of bills that will reopen most of the government, which did shut down Saturday morning. Just take a look at treasuries.
Treasuries actually did a trade for option trades today.
Hey, that's right. Stock replacement.
Yeah, 114.27 up 8 ticks. So got a little profit there.
How does Daddy do it? It's amazing.
You know how Daddy did it? By doing a stupid stock substitution.
Short put to buy a long call.
Short put spread to buy a long call spread.
Oh my God!
I got as Johnny as
risk on.
Yeah, I could be as Johnny as could be. Well, got a lot of feedback on option trades today. I was using too much buying power for smaller
Well, you've
accounts.
been watching me sling.
To show them something they could do, but I showed them how they could do it naked too, and use more buying power, kind of thing.
What about the dollar? What's that? Is it firming up?
Currencies are pretty much mixed. I mean, even the Swiss franc is unchanged. I looked
look
at that.
you.
I looked at
so
that.
sophisticated now.
Yeah, down a little. Small yen is down a little. Small euros.
Dollar had a little bit of a bounce back. And
little something.
Chopped around this spot, but
Yeah. No consequences one way or the other.
BlackRock sounded the alarm in its 2026 outlook, and again this week in its latest market analysis. The world's largest asset manager says bonds aren't a reliable hedge anymore against stocks.
Oh, I just did a bond trade. I didn't know this was coming out. What the hell?
But retirees,
They changed the game.
what
I
are
didn't get the memo.
retirees supposed to do now?
Oh no!
no.
After doubling on top of a doubling and a doubling, I'm so sad.
Somebody must need to buy bonds. That's what they're doing. That's exactly what I think here. When they say, "Oh, you don't want that," I know that's exactly what I want.
But real talk, if you're retired and you want safety in your portfolio, like what do you do?
You learn how to trade options, and you
Yeah.
do it in a defined risk trade, or at least know your size. I mean, there are so many times people will write into me and say that they're trading their account and they have, I'll throw out a number, 200 long delta, and that's, way too much for them. And I said, did you ever take a look at your 401k and see what your delta is in there? It's going to be a multiple of what you have on here. If you have an appropriate size account, you're using 1 to 3% on every strategy that you have, and that's your directional bias that you have, you're in good shape. Relax. Make a intelligent decision. You'll be all right. Reduce it by 25%. You'll feel great. That's 25 to 50 deltas. You'll be okay.
I kind of want to just tell my parents to just start YOLOing puts in gold and silver because it's back, baby.
Gold 5,000.
Gold over 5,000 last night. 50. Yeah, let's go. Fear. Go into the next story here. Gold and silver rally after a 2-session drop. The meme-like moves are just memeing. Gold has lost its reputation as a boring, low-risk, safe haven asset. It is that girl. What can be done in the metals or should not be done in the metals?
Silver going nuts. Silver at 90 here.
Yes.
So it's up 8%. Huge move.
I don't have the stomach for this.
And the gold-silver ratio spread, 55. It hasn't moved too much.
That's a good point of not having the stomach for it. These have been huge moves with tons of volatility. And a lot of people got bailed out on the downside move. We talked about this like in silver or gold.
After the downside move, getting bailed out to the the original players that got shorted.
Everybody was getting a little bit of short delta. You couldn't avoid getting short delta because volatility exploded into
if you were selling premium, not
you're
direct.
selling anything that you're doing, you're going to have short delta. You got bailed out, which was awesome. Now, I think a lot of people, and hopefully they took this advice because I've been avoiding the silver futures contracts, which are huge. Instead of trading the static delta, going to wide strangles now with much higher implied volatility. Into the rally, implied volatility was like 60 or 70%. We're now at 100%. So now you're getting paid a lot more to put that risk on relative to the face ripper that we had. So the move has to be even bigger than the first move for you to feel even close to the pain that you had on the original trade. So I think this trade overall has probably been great for a lot of people.
I agree. Even those who got caught that had a little bit of intestinal fortitude to hang in there, roll up the untested side, reduce delta by 50%, you kind of got bailed out here.
Yeah.
The volatility is high, and I'll use gold and GLD as just my example. But it has for the next 2 weeks, 16 days, it has a 30-point volatility expected range.
Wow.
It's moved 30 points in the last 24 hours.
No, thank you.
48 if you want to go from top to bottom on the.
Unbelievable.
So volatility is high in there, and it may settle inside this 30-point range over the next 16 days. But I think it's kind of a directional bias trade.
Okay.
I think that's the way it is. I mean, I love some sort of ratio spread if you have the buying power in there, call and put on both sides. Because remember, when volatility's high, spreads are going to trade cheap. Naked options are going to trade expensive. It's kind of a little bit of an omnidirectional trade, get you all the way out to that 1 to 2 standard deviation move. I think that's the play to make in GLD, SLV, GLD. doesn't have the greatest markets. SLV has good markets. I think that's the way to play it.
U.S. refiners are struggling to absorb a sudden surge of Venezuelan oil imports. Oil refiners on the U.S. Gulf Coast say that since last month's flagship $2 billion supply deal between Caracas and Washington, it's pressuring prices and leaving some volumes unsold. The soft U.S. demand represents an early obstacle for Trump's hopes of sending the majority of Venezuela's oil to U.S. coffers. What are we doing in oil?
Funny because oil's at 63.38. You would think if
like a glut of oil, like it, yeah. Why isn't gas free? Why isn't gas 99 cents?
Yeah, what the hell?
Yeah, give us some context. I mean, it was down at 58 just about a week and a half ago.
I know.
So it's moved a lot. $1,000.
It's got high implied volatility. So if you don't, I have an iron condor here. We've been trading it, kind of scalping out of these wider iron condors. Big move lower, you take off the call side. Big move higher, you take off the put side, and you kind of lean a little bit directional.
Which if you read between the lines, what he's saying there is volatility is so high that you don't have to put on these things and set it and forget it. You can actually trade around them a little bit. It's a hard pull when you put on an iron condor and something goes higher, taking off the put side, waiting for it to go a little bit lower, then putting on a put side or adding another call spread. I mean,
it's a product that traditionally stays in a
like gold and silver.
Yes.
Yeah. I mean, you got to adapt and change with the changing vol because it does end. Like, it will go away
at some point.
Yep. Vols mean reverting it a lot quicker than price.
A White House meeting aimed at breaking a months-long stalemate between major U.S. banks and crypto firms ended Monday without any agreement, underscoring industry divisions that threaten progress on a landmark digital asset legislation. The closed-door session was convened by the White House's Crypto Council. That is not helping as crypto fell, pretty low. And one analyst says it could drop below 60K. It's dropped by nearly $50,000 or 38% from its October all-time high mark.
Looks horrible. It doesn't go up when markets go up.
Doesn't go up when volatility the market goes up.
What the market goes down, it looks bad.
It goes up $1,000, down $3,000 kind of thing. Yeah, stair steps its way lower. 76
I'm a bag holder.
Off of its lows of 73, which it too made 48 hours ago.
Yeah, Diamond Hands is like crying.
I saw Switzerland, no taxes now on crypto they passed.
I didn't see that. Okay.
Yeah, I mean, so I don't know. Like I said, I bought some at 77, it's 76. So you can do better than me if you're interested in doing it. It's still all about trading.
Anything in MSTR, because they're in the red now, and Coin or IBIT?
Coinbase has been a dog. I mean, Coinbase is at 177. This has got to be going back to like.
Coinbase is back to where it was in April, May of last year.
The tariff tantrum.
Yeah,
down another buck or two this morning. MSTR.
I might look at something there.
Down another buck or two this morning. I feel bad for them, but they were rip fate. They went way too far. We talked about this ad nauseum and paid the price for some of our trades too. So it's about time we get paid.
AMD reported fourth quarter earnings that topped expectations and provided stronger than expected forecast for the quarter. AMD said they expected $9.8 billion in revenue, but some analysts, however, were expecting AMD to provide even stronger guidance as customers continue to ramp up spending for the chips. To which Lisa Su said, "What the hell do you want from me, people?" What are you doing at AMD?
AMD is actually down on those.
I know, that it wasn't enough.
Right, great numbers, down about 22 or 24 points right now. And it's easy for me to sit here and say, and which we've quoted numerous times, and say,
it was already baked in.
News is already baked in.
It did already go up $15 in the run-up to its earnings.
But we could have said that about SanDisk, too. That went up $120 on the open. I know it came back down, but it does seem like the upside has a little bit of a ceiling to it on these earnings plays. Now, Google is going to be a great, we'll see if Google is going to be a great example of that. Google has not had a downtick until yesterday, but it's bringing it back today. Yeah. It's 443. It's up $3 or $4. If it closes here, it'll be a new high. Yeah. We'll see what goes on in Google. I don't want to play Monday morning quarterback and say, it was they were destined to fail, even with great numbers. But it does seem to be more times than not that that's the way it's been playing.
AMD brought in $10.27 billion in revenue, and I just think that that's hilarious. That Wall Street was like, "We're not mad, we're just disappointed." In other news, Supermicro logs record revenue from AI demand, and the stock surges. Supermicro's revenue explodes to $12.7 billion as delayed orders finally materialize. Again, putting that in line with the revenue that AMD brought in. So Supermicro bringing in more, but again, that was delayed orders that then got pushed to the next quarter. But aggressive competition and rising costs have pushed gross margins to a razor-thin 6.3%. SMCI, you ain't got no alibi. What'd you do in Supermicro?
We didn't trade this one. It's up like $2-3, so pretty decent sized move here. The expected move was right around there. So, I mean, if you were selling premium here, you probably did okay. I mean, the stock has been at lows here going back to April too. It has not been like one of the winners. It had the crazy run up, and then it split the stock, and there was all sort of accounting.
Oh, I forgot about that. Yeah,
remember that? And then they were like, they got included in the NASDAQ, but then there was the report that like their books were cooked, and then like they did the Carvana thing where they just like don't respond to it, and then it just goes away, and nobody cares anymore, and then the stock just like kind of languishes in purgatory.
I would hate it. I would hate it when they wouldn't call or text you back. I mean, that was the worst. Honestly, that was the best when they would do that. I mean, that was such a.
Hey, in other earnings, Chipotle stock sinks as the Slopageddon continues. The restaurant chain reports falling traffic and weak guidance for 2026. The company is projecting flat same-store sales growth. The stock has fallen around 33% over the last year, probably due to inconsistencies. Every time you eat at that yawn, like if you go in to the store, they say you should wear a fake pregnant belly because then they'll scoop big. But if you're ordering on the apps, you got to use a dude's name because they tend to give men's names bigger food. So
see, this was a conversation at my desk yesterday.
Are you kidding me?
Vanetta and Gus are talking about Chipotle, and it goes to the. I agree with you that this, and I think Chipotle is a slop bowl of slop bowl. I think it should go away. I
still love Chipotle.
You should go to a local Mexican restaurant and just eat real food.
Goy slop.
This is slop, and they were talking about all these like tricks of the trade.
Right. So if you want double meat, so you have to have them scoop it first and then say double.
So like because they give you a half portion. If you say double, they just give you like 2 half portions or 2 3/4 portions. You know, not a real full scoop. It just.
But you shouldn't have to play these games. It shouldn't have to play this game. It should be the same.
Do we have a Chipotle close to us here?
There's one on Roosevelt. I go in the South Loop there.
Oh.
Yeah.
I think that's the closest one.
Yeah, I was gonna say I would fund it or whatever. Yeah. We'll call up 4 orders, 2 from.
An analyst did this. Like he ordered. He ordered like 50 bowls around Manhattan.
Oh, there you go.
And he weighed them meticulously. And there was a. It was a.
Better than I was gonna do. I was gonna eyeball it like they do with babies when I was born. 7 pounds 11 ounces.
What's CMG stock doing?
CMG just under 37. That's down about $2, 2.25 or so. And I know you quoted it, how far it's fallen, and it has fallen, and it has been a take under. And since the split, it's been horrific. But it did get down to 31, 32 at the end of last year.
I hope Netflix doesn't go this route.
Netflix?
Like, you get the big split, and then the stock.
I was going I was saying Netflix is selling burritos now?
No, but Netflix has been a dead stock. I mean, it's cut.
Well, it kind of has gone that way, right?
I know.
Netflix around 130, about 80.
Yeah.
Pfizer beat quarterly estimates despite COVID product decline. The company reaffirmed a modest outlook. The pharmaceutical giant is looking to longer-term investments, including its $10 billion acquisition of an obesity company called Metsera. Pfizer brought in revenue $17.56 billion versus $16.95 expected. Shares fell more than 3%.
Yeah, Pfizer Ivy rank is anemic at 9, just under $26. That's where it closed. It looks unchanged, but you are right. It went from 26 and change to 25 and change where it's sitting.
I don't have
too much to say about
I don't have a
that.
slide for this, but Novo Nordisk, they accidentally leaked their earnings yesterday.
Yeah.
So they came out, but they were bad. And then when they came out, they're like, yeah, these are bad. And then the stock is down, I think 17, but almost 20%.
Yeah, it's down $8 or $9.
Yeah.
Yesterday.
So,
Eli Lilly had earnings this morning too. It's
thank you, Nikki.
there.
Yeah, but
up about 80.
Lily's untradeable. It's a $1,000 stock. Well, now it's going to be almost $1,100 stock. It's up about
Untradeable.
$85 or something like that. But it's untradeable on the option side. If it stays here, it'll be flirting with new highs.
Something interesting did develop in the markets yesterday. NASDAQ down 2.3% as Anthropic came out with more, sustainable AI that could do way more tasks to completion.
Yeah.
And it totally annihilated $300 billion from software and data stocks, from LegalZoom to Expedia to Adobe. All the shares fell. Salesforce was down almost 7%. Adobe was down 7.3%. Someone tweeted out something interesting. They said on March 12th, 2020, the trading day after Tom Hanks said he had COVID and the NBA shut down, Expedia was down 15.2% and Booking was down 11%. Yesterday, after Claude Code Legal Connector came out, Expedia was down 15.3% and Booking was down 9.4%. That is wild.
I want to make 2 points. First of all, do you remember when everybody roasted me for saying Claude was my favorite AI? And that Claude was the best one.
You right,
and
you
now
right.
everybody's saying, oh, Claude do this, Claude do that. Look at the Claude bots. Look at all this cool stuff. So
Claude was your boo first.
Claude was my
You hit it first.
and I got roasted relentlessly by you peeps in the chat too. So
I remember that. Not that I'm a homer,
Vindication.
but I am a homer.
yeah, and everyone
Vindication.
was, so I'm
Me too. I don't even know what it is. Not me.
I will say the software stocks all of them have gotten murdered. So,
Yeah.
Tech got killed yesterday.
yeah, but specifically this sector,
Yeah.
Adobe, ServiceNow, Snowflake, CRM, Adobe, they've all gotten murdered.
Expedia, Booking.
Expedia, Booking.
Thomson Reuters was down 15 point. LegalZoom, LZ down almost 20%.
There was a time, and I'm sure some of these are going to go bye-bye. I mean, some of the Adobe, for one, probably it seems like that one is pretty redundant with all the AI. But there was a time when we were talking about Google going away. You remember when nobody was gonna nobody was gonna use Google anymore, and Google was dead, and Google was trading at 100, and nobody wanted to touch it, and now it's the biggest company in the world. And I don't think Adobe's gonna be the biggest company in the world, but a lot of these are starting to get to prices where it's like, okay, you got to kind of look at it.
You do, and the Ivy ranks are high.
I got
too.
long a couple yesterday too, so I'm talking my book.
Where is all the trading going now? You told me this morning we're getting out of these stocks and we're going into.
Chips,
no.
memory.
Memory is there, but
yeah.
now we're going to optics.
Optics.
I'm sorry, what are optics?
You'll find
like
out.
lasers,
Freaking lasers. Too much to get sharks with freaking lasers.
yeah.
Austin Powers.
Oh, that's
Okay.
That's the next round.
Okay.
Yeah.
Freaking
I still
lasers.
think cybersecurity is one of them, but they got killed too because they're service. They're in the service basket.
Well, here's a country that doesn't want a specific group of service. Spain is going to be the next country to ban social media for children under the age of 16. Spanish Prime Minister Pedro Sanchez says children must be protected from the failed state of social media. They would follow in the wake of Australia, which successfully enacted their ban.
I don't know what to say.
I mean, when you have a
Seems like a good
16-year-old.
idea. Yeah. Now he's over 16, so it doesn't matter to us anymore.
Well, he's 16. Like, that's the.
It says under for children
Okay,
under 16.
all right.
Yeah.
Yeah.
Okay,
Pass.
well.
Yeah, he's passed.
I just don't know how you can enforce this.
yeah, that was always what
Well,
I
the
said.
apps they all get removed from the. I know. I don't know how
it's
they.
like you get a phone that's
You think they don't know about incognito and
VPN. That's
Yeah.
incognito's not doing what you think
Yeah.
it's doing, so be careful.
Oh, the VPN. Then.
Okay, yeah.
I mean, these kids are pretty. They're making drop shops, okay, and
Not drop shops.
Yeah.
Crock pot.
and drop selling products to people. They'll be fine.
Yeah.
They'll figure it out.
Ooh, can we look at Meta though?
We can look at
There we
Meta
go.
if you
That is
like.
affected by stuff
I have
like
no,
this.
I have no
Yeah.
problem with that.
it's pulled back a little bit from
And Snap reports their earnings, I think, today after the
it
bell.
does.
so.
After the market closes.
Meta trading at like $6.90 here. It's about $50 off of the high, but it's
Yeah, just under
it's
6.
filled that gap.
Yeah. Ivy rank of 15. Probably a directional play if you're looking at something there.
NVIDIA is nearing a deal to invest $20 billion in OpenAI as part of its latest funding round. The ChatGPT maker was looking to raise up to $100 billion in funding, valuing the company at an eye-watering $830 billion. News broke earlier this week that Jensen Huang was maybe concerned about some aspects of how Sam Altman was running OpenAI because they had not yet given any money to, like, NVIDIA and I have given the same amount of money to OpenAI, $0. But now it seems like they're getting closer to investing $20 billion. Not sure what NVIDIA is doing.
NVIDIA at 180, it looked horrible yesterday and has generally just not done anything.
Yeah, it's gone sideways, but it's definitely on the lower end of a very, very tight channel.
Sure.
I learned
There you
that
go.
from Ilya yesterday. Channel.
Good channel guy. I got some long delta yesterday. I think into earnings, we'll probably look at this as a spot that was a good spot to.
Yeah, I hope you're happy. My bonds are down 6 ticks now.
Oh, you stink.
You stink. World's worst bond trader. Hey, Intel CEO Lip-Bu Tan said the company plans to build GPUs, the category of chip popularized by NVIDIA. What are you doing in the Intel?
Right
It's
here.
been in it's been in the government portfolio, right?
Yes.
Yeah, $49, hanging tough, up about 20 cents or so. Skosh off its highs. I mean, it made highs up at 55, but that was just for a day. It too is
Been a good trade. Good two-sided action.
good IV rank of
we've
43,
scalped a
good
lot of-
two-sided action.
When are their when are their earnings?
They had it last week.
Oh, so the IV's still really high.
Yeah,
So then
yeah.
that's great.
Yeah, no, it's been a perfect, and you're getting these big moves in
Right.
both directions, but it's kind of settled here around 50. But it's been a really good vol trade, and it's a lower price stock, so you can do naked positions in a smaller size account. We've traded it in the Johnny account multiple times. It's a good one.
Cisco has finally surpassed its .com bubble high. Is the reinvented stock a buy from here? What are you doing in Cisco?
Ooh, Cisco, $83, going sideways, no more. It's had a 7-day rally. It was hanging out around the low end, around 75, the high end around 80, just kind of hanging out there. Now it's 83 and change, top end new highs for Cisco. What do you think about Cisco? IV rank is 69.
I can't remember the last time we traded it.
Me, the earnings February 11th. You're looking at.
We can look at that.
We can look at that.
Need some
Expected
short
move, again, February 11th is a week or so away, but got about expected move of $5 in Cisco for earnings.
This is crazy. Walmart has hit $1 trillion market cap fueled by the growth of its e-commerce arm and new businesses. The retailer, which relisted on the NASDAQ, has tried to compete with Amazon by growing its digital business, and it becomes a group of mostly tech companies that are in the $1 trillion market cap club. They've also won over higher income shoppers during a period of elevated inflation, get that K-shaped economy, and now the top of the K is shopping at Walmart. What a time to be alive.
Yeah.
But did you ever think that, like, it's so crazy to me that Walmart is worth $1 trillion?
And it was quietly, like, I saw that headline hit my, like, Twitter, and then it was like, it felt very quiet that this would, because, you know, like every
Well, the software stocks were getting annihilated.
that too, but it was like every time we had these these trillion marks, it was always like, oh, is Apple going to get 2 trillion today or tomorrow, or the, you know,
4
like you're
trillion,
like on
yeah.
you're on like trillion watch, and then now we have so many trillions that everything's a trillion, and then Walmart's the next one.
It's amazing how you get used to things, isn't it?
Yeah.
Yeah, but when you were a trader on the whole market wasn't even worth $1 trillion. Right, yeah, that's wild to me.
Are you trying to say that's how old I am?
No, I was putting it in
I'm just kidding you. Oh, Walmart, 127 and change, up about 20, 30 cents, which would be a new high. It too has not had a downtick, as you both have mentioned. The IV rank of 45 is pretty good, and it has earnings coming February 19th.
PepsiCo reported their earnings yesterday, but they also announced they are cutting the price of Doritos, Cheetos, and other snacks by up to 15%. The maker of the popular snack brands say they are slashing the price because customers have complained they are becoming too expensive. Look, you would think in this GLP-1 dominant society, Pepsi would be doing everything that they could to make the people who still want to eat chips able to eat chips.
And that price will go down with the same amount of volume that goes down as well. So the the air that gets pumped into the bags will be a lot more.
Sure.
The weight of the bags will be like, go from 8 ounces to 6 ounces.
I know.
It's like it.
I buy the Tostitos, the like pure corn like tortillas, and I can only make one plate of nachos with and all the rest of the chips are just broken. And I'm like, what is this? What is this? There's maybe 10 whole chips in that whole bag.
This should be price adjusted by the serving size.
Yeah.
And tell me that it's going down 15%. There's no way. No way they're just slashing 15% off.
But I hope the price cuts go into effect as you stock up for the big game this weekend.
Yes.
So Starbucks is promising love at first sip. No, with the new Valentine's Day menu, the chain unveiled 2 new Valentine's Day themed drinks. There's a white chocolate strawberry cream cold brew, Nikki. Ooh. And a strawberry shortcake frappuccino. A Valentine cake pop is also available for tea lovers. There's also an iced double berry matcha and a banana bread matcha nobody asked for. What is Starbucks doing?
I had to taste the Starbucks cake pop, Valentine's Day cake pop. Very, very nice.
Was it good?
Yeah, it's good. It's good. I had to do it so that my grandson would eat it too. So I had to take a little.
He doesn't have teeth. Oh, no, Tristan. Oh, no, I thought you meant the baby. I'm sorry, my bad.
No, he's 2.
Oh, yeah,
He got teeth and he got a mouth on him too.
Okay.
You don't like these foo-foo-y drinks, do you?
I drink just straight rocket fuel.
That's my man. That's what I like to see.
I do enjoy these occasionally. I mean,
Sure,
it's like a dessert in a glass.
Sure.
Like a little sweet treat.
Yeah, when I've been a good boy, I get a sweet treat.
Starbucks sweet treat. Starbucks 93. I don't know. Starbucks has been at a tight range for about a year now. You know, the last stocks we've talked about, we're talking about a month or two. What's that? Big move on earnings up to 105, back down to 93. It's been hanging out around high end 95, low end 85. I'm just throwing out all the highs and lows and sitting at 93. You think it's going to go back to that earnings number of 105? You got an opportunity here. If you sit sideways, you can sell some premium, but I'd be ranking 20, sorry.
In a feat of just pure grit, determination, and dare I say insanity, 41-year-old Lindsey Vonn on a training run had announced she had to be airlifted off of the run, tore her ACL 9 days before the Olympics, but she said she is going to race. She's going to put on a brace, and she's going to say a prayer, and she's going to send herself hurtling down an Italian mountain.
And she was performing.
What are we doing?
Overperforming everybody
But why would you ski on a blown up ACL?
Fish got to swim. I mean, this is what she does. In her
she
passion.
retired in 2019 due to chronic knee pain.
Yeah.
And she skipped the 2022 Olympics. But
the last one. I mean, she's not.
She's not. I mean, you're not going to get a chance. 4 years from now, probably going to age out a little bit or something. I mean,
she's 41 already.
I know. God bless her, man. I hope she makes it. What a story it'll be.
No, it's a generational talent. But I'm just worried about long term, being able to just walk upstairs.
You did the articles on the bionic knee brace that you put on yourself and you walk upstairs. It ain't going to matter.
Yeah, you just keep the leg from the Optimus Prime and
I don't know. You'd be good.
This is hilarious to me. Fanatics company, I think they're hoping to IPO. They're in a bit of a kerfuffle as they had to issue a public apology for the quality of the Super Bowl jerseys that the company was putting out. I'm on the last story here. Fanatics apologizes, but they said, this is true. In our defense, the Patriots and the Seahawks were so bad and they missed the playoffs last year that they were not prepared to make jerseys for the teams this year. That was their corporate response.
That's
pretty amazing.
That person should be fired. I'm not anything for people losing their job, but that person should be fired. And they should really rethink.
So these jerseys, the fonts are weird. They don't line up. The hats are bad. They're bad. So, but they're charging $160 for one jersey that you literally Tony could buy on Temu.
Well, that's where Fanatics got them.
Yeah,
that's why they got this crap.
But do better, man.
So. I know you're leaning towards the Seahawks for the
Seahorses.
The Seahorses for the Super Bowl. But if the Pats win, won't they be the most winningest football team? I think it'll be seven.
Maybe.
I think
I
seven.
Maybe.
don't know that stat, but I did see a stat that over 3.5 point spreads, the favorite has only covered that like one time in the last 20 years, and it was the Bears or the Colts against the Bears in 05. Or was it 08? Was that
08, 10, 08.
08?
I don't know.
Something like that. So it's only covered one time, which doesn't sound good. Sorry.
One time. So we like the
Super
Seahawks.
Bowl,
We're
2007.
1-20.
I'm saying that the Seahawks bet doesn't feel as good.
Oof.
Finally today.
That means Dr. Jim is correct. That can never happen.
Never.
Finally today, speaking of things you might want to bet on, I guess it's the most wonderful week, depending. But it is Waste Management Week.
Oh.
So the Waste Management Golf Tournament. This is the craziest time in sports. It's so, I don't know, discordant with how like professional golf is. But I saw this on TikTok. Watch this. I thought you'd like this.
Generals gathered in their masses.
Great song.
Just like witches.
Someone wipe her up.
She is wiped up already.
Evil minds that plot destruction.
That's a good buddy.
Sorcerer of
Why is he dressed like George Washington?
It's amazing.
In the fields of bodies burning. As the war machine keeps turning.
Oh, that's good.
Are white people okay?
You're driving us nuts.
Poisoning their brainwashed minds. Oh, Lord, yeah.
Wow.
Generals
I love it. I love it. I've been trying to get Mikey to go with me.
I think
This is
Trav
what
and
happens when
Tay-
you get old school Italian.
I think Travis is going to be there. So I think Travis. So I'm going to be locked
you're gonna be
in.
watching.
Yeah, I'm going to be watching.
You might like golf.
Help me get
after
the
this.
feed. I know.
You're gonna
Let's
be a
go.
golf girl now after that.
She's already a golf girl. She's good. She's
Yeah,
an
no, I
athlete
mean,
herself.
watch it.
Yeah.
Craziness. I don't know
Love
what's
it.
going on. What's going up next?
We're going to take a quick 90-second break. We'll talk about the markets, and when you get to confirm and send on this Wednesday, February 4th, 10 days before that day that you have to perform. We'll be back in 90 seconds. Stay Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Niggy, we are back, son. You know what that means. Time for a little bit more Tastylive with Confirm and Send. But before we do, let's take a quick look at the market. Is the market surprising you? Even the S&P's up 5. They were down over 100 yesterday. What's the low from yesterday on the even the S&P's trading down under 6,900, 68.86. I'm talking about even the S&P's right now, 86 and a quarter. We're back to 69.47. What do you think about the market itself?
I've been leaning short. Yesterday was good.
Yeah, we had the ick. We talked about it.
Yeah.
Volatility was only, I'm sorry to interrupt you. Volatility was only up, it was up 70 cents or so when we got off the show. And even the S&Ps were kind of catching a little bit of a bid. We talked about how volatility wasn't contracting. That gave it a little icky feeling.
Yeah.
Came to fruition.
I was surprised at the move from Sunday's open to Monday.
That was a bigger surprise.
That had me. I thought I was losing my
matrix,
my matrix that I was in, and I maintained that position, and it worked out. So we
had to take it.
But it made me. I was like, this just didn't feel right.
Yeah.
So now it's more of the same. We're sitting at 69.50 on the E-minis. We have been in this spot for what seems like an eternity. If you've been a passive investor, you have made no money or lost no money in the last 6 months, while SanDisk has 4x'd. The money is being made in individual names, and that's how this market has been overall. When you take the whole basket,
but you can buy the dip in SanDisk. It's down $20 right now.
This is my example of just like what's been happening. It's all been about the Momo and these moves of single name stocks where the indices have gone pretty much nowhere. The 69.50 spot has been kind of the middle ground of the 7,000 floor or ceiling and the 6,900 floor. That feels like we've just been bouncing this range, and so I think more of that continues here. I mean, the gold and silver are where you're getting paid for vol. Everything else, you gotta pick bottoms and sell tops.
I agree with you. NASDAQ has been kind of the weakest of the group, right? Even yesterday, I believe the Russell turned green at the end of the day when even the S&Ps rallied back about 30, 40 handles. Russell was actually up on the day. It's up today, up around 12, which is about half a percentage point. Even the S&Ps unchanged. NASDAQ down small, 88, about a third of a percentage point. Dow up 86, volatility in by 7 cents, 1884. But look at this move up yesterday, just over $20 on volatility. Yeah. Volatility certainly had some good movement yesterday. I would imagine we're going to get a little bit more of that movement. I mean, so now in volatility, 20's not out of the question moving forward for the next week or two going, and you can say that 18's not out of the question, or sub 18 is not out of the question. So volatility is in play here, whether it be /VX, VIX, products that you trade. If volatility is too low in there, go someplace else. Volatility is going to contract and expand, because if volatility contracts, expands in /VX, is doing it all over the world too, meaning all the other stocks.
Yes. I don't know. So we've been super low volume except for these downside moves in the E-minis. Mm-hmm. And you've seen all the attention kind of move to single name equities, a lot in the gold and silver space. Like that seems to be where the money is going.
All right. You want to talk about it? I'll go there now.
No.
Go ahead.
But I just want to add the volatility move that we saw on Monday from 21 to 17. That doesn't happen on high volume. Like it tells you that nobody's trading E-minis right now. Nobody's trading indices. No, I feel like it's just not where the money is flowing right now. I feel like that sort of move tells you that people are playing elsewhere. Like I don't think they're playing in the E-minis. Is that a crazy thought?
No, not a crazy thought.
We've had less than 1 million contracts basically every day of January, besides the down days.
Yeah, and that's worrisome to me.
But you talk about all the flows coming in, you hear all this.
No, but it's
all this stuff.
No, it's worrisome to me because that's when you have your exponential moves in the market when there's low volume and low. And I'm going to dare to say that I think that gives a little bit of a foothold to the bulls and not the bears. And I actually would like to see the market sell off a little bit. I think it would be a little bit healthy and then catch a bid. So for me, when volatility is low and volume is low, you don't sell a creeper kind of thing. And it seems like it's got that creeper attitude to it. You also have a lot of these Mag 7 stocks that have gotten annihilated relative to
the market's gone nowhere.
The market's gone nowhere. Now, if you start getting that, value play where they start buying, bidding these up,
goes up 100 points from here back to 500. Where's the E-minis at? 75.
Take all of that with a grain of salt because Nasdaq is weak and that's been the leader in the market. It's down 100. Volatility down 5 cents. Bonds down 3. Bonds have had a relatively tight 15, 16 tick range here. Bitcoin has been the pig of all pigs. 75. Now down 1,600. Caught a little bit of a bid last night to 77. Not anymore. Ethereum down 61. Again, another 2-3% move lower here. You can see that Ethereum, Bitcoin, all doing the same thing, going lower. Oil down 32 cents. Gold, let's get to it, up $141. It's moved about 10% or more in the last 48 hours after going down to 4,500. Now over 5,000, 5,075. Good IV rank of 83. Good implied volatility. Not the best markets in /GC or GLD. So be careful with your pricing there in GLD. Silver, good markets there, up another 10%, mirroring and doing the same as gold. It was a little bit of an underperformer yesterday relative to gold. It's an overperformer today to gold. They're just taking chance apiece here.
The gold-silver ratio is moving 2% a day.
It is back to 55. It's down 5% overnight.
Yeah.
From around $60-ish just about a night and a half ago.
Yeah.
Crazy moves in the gold-silver ratio. And, you're either doing 2 gold, long or short, and 1 silver /SI.
Can we get back into that right now?
If it dips a little bit more, it would be hard-pressed.
Right now, it's back to kind of where it was prior to silver's 120 print or whatever the hell it got to.
That's right. That's because I bought it around 56 and watched it go to 45. Yes.
Yeah.
Yes. Mm-hmm. Yeah.
All right.
Exactly where you are. So I'm a little more shell shocked than you at this point with it. Only took about a week and a half to get back, but it was a terrible week and a half.
I look at those sort of moves, and that was obviously historical, but trading through that is so valuable because you'll know how to address that situation the next time it happens in something else.
It has meme stock-like volatility to it right now.
Yeah,
if you traded meme stocks in the years past, this is what you're trading again now in gold and silver. Corn, wheat, and soybeans all a little bit lower. Your yen a little bit lower too, and your euro unchanged a little bit higher. Dollar catching a small little bit. Let's get to confirm and send. You want to?
Yeah.
Wednesday, February 4th.
Let's do it.
First question, please. My understanding is that the theta continues to accelerate as expiration nears. However, you have a rule of closing trades at 21 days. Why don't you hold longer, especially when positions not in danger of being in the money?
Oh, well, not in danger is that's
relative
objective
term, right?
Yeah. There's always risk on it. And I think that, obviously theta does increase. The number increases. The actual value of the position is going to be lower. So you have to look at, theta is a dynamic Greek. If you have $10 of theta decay with 2 days to go till expiration, you have 20 cents to make on that position and X amount of risk. So like the theta number is great, but it only tells one part of the story. You have to look at the actual value of the position. There's a lot of risk in that position relative to the reward you're getting. Even though the theta number is high, it doesn't tell the whole story of that position. So there's always going to be a trade-off with risk and reward and opportunity cost, which I don't think gets thought of by, people that are like emailing about this. That 20 cents and $10 in theta decay and $1,000 in capital could be better used on a new position 40 days out in time. You just don't have to get every piece of what you're selling. You want to capture, 25 to 50% of that and roll into something that's got more opportunity than the high theta, not in danger position.
And the 21-day rule is really just a suggestion. I mean, from our research, it's optimal to close trades at 21 days. Yeah, you can stay in the trade longer if you like it. You're making X amount of dollars. Let's say you make the whole spread. I mean, you use some amount of dollars to make X amount of dollars. Maybe you could have gone somewhere else and get that acceleration of volatility decreasing and making more money with that buying power that you're using. So to go to your point where, there's only a few dollars left to make, yes, the theta is higher, but relative terms, the money number could be a lot less than if you put the money someplace else. Listen, it's just optimal. You can do whatever you want. I mean, there are times when I stay in trades after 21 days. There's times when I put on trades that are lower than 21 days. But it's, again.
But that last sentence scares me because things move. You wake up one day and
they seem to go a lot further than you expect them.
Like I got people mentioning APP in the chat here. APP is at 400 now. This was a $700 stock a week ago. And you think, I have this put spread.
The end of the year. Yeah, a month ago. Yeah, sure.
I have this put spread, and this is an extreme example, but I have this put spread. It's so far out of the money, it's not in danger. And then all of a sudden, it's fully in the money.
It's in the money.
And you're out, you tried to make $10, and now you're out $1,000.
Yeah.
That swing, the one that you lose is going to be magnitudes greater than the $10 that you give up closing the position.
Right.
So it's... You got to just be done.
Yep.
Close it, move on. Next one, please. Tasty doesn't use fundamental analysis. I don't know about that, but you will often talk about underlyings being at an extreme. How do you know if something is at an extreme if you aren't using fundamental analysis?
I mean, listen, one investor's floor is another investor's ceiling. One investor's technical analysis of bullish is going to be somebody else's bearish. You look at a 1 week time frame, it's bullish. You look at a 1 year time frame, it's bearish. It's so subjective to me. When we say something's at an extreme, we're talking about its expected move. And that's what the option pricing is expecting. So what we're looking at, I think it's absolute. It may continue going in that same direction, but for its implied volatility, it's at an extreme. And we like to play reversion of the mean to that extreme. That's all it is. You want to do the opposite, do the opposite. I have no problem. A lot of times, you're more of I know you love to sell premium and you'll be a directional, you'll do it in a
high gamma,
I don't want to say sophisticated because that makes it sound like nobody else can do it, but you'll do it in an intelligent way. You'll say, all right, I love this Momo stock. It's going higher. I'll do a diagonal spread that sells front month premium that's elevated and buys back month premium and that's lower. And I have positive theta decay, but you definitely have directional risk on that trade. So I have no problem with continuing with the extreme or using the technical analysis. Just do it in an intelligent fashion. Don't just buy the stock or buy an out of the money call shorter term. I mean, it's feast or famine, and usually it's famine.
I like to look at the 52-week high and low. That's how I quantify things. I mean, when I'm trading, I'm not looking at the fundamentals of Tesla. You're trading Tesla's aura for all my kids out there. You got to have that big time aura.
Yeah,
he tells you that all the time, I'm sure.
Right.
But from a fundamental perspective, I mean, it's hard to use that as a 30-day metric. I'm just trading what the market is doing. I'm not. trying to make. I'm not trying to find the next Apple in 25 years from now.
Right. And I don't have 25 years, so I can't even look for the next Apple.
No, don't say that.
Well, put me.
I'm going to make you like a hologram.
Put me pushing 90. That'd be. I'd be happy with that. I'd be happy with that, especially if I wasn't wearing diapers. Next one, please. What do you take? What do you make of the drop in Bitcoin? Go ahead. What do you make?
I think Bitcoin has just lost.
Are you long any coin? I've never asked you.
Yes.
Okay.
Yes.
Okay. So you can answer this question. 'Cause I'm long a little coin. I can answer the question.
It's an asymmetric bet. I think it's, it makes sense to have some just for the volatility that it once had. It has not been there, and maybe that comes back. Maybe it doesn't. But right now, it's just not the story. And it's a story-driven thing. I was even mentioning it with you. You talk about silver and gold being kind of memed.
Mm-hmm.
Bitcoin is a very small asset that, and maybe the run up to 125 was memed.
Yeah.
But if you're talking about assets that can be moved,
Didn't have the velocity to it, though. I mean, for it to be a meme stock, certainly had the price of it. But go ahead.
It had the velocity, dude. It went from 70 to 125 in about 6 months.
Okay. All right.
I mean, that's a pretty big move.
Yeah. Okay.
And prior to that, I mean, the FTX, it was at 12.
Yeah.
It's gone 12 to 120.
Yeah.
We've had some moves there.
Yeah, I'll throw it up here. You're
10x in
correct.
5 years.
In April, it went from 70, 80 to 125 in 6 months or whatever. Yeah. Okay. I'll give it to you.
So that's how I look at it. I look at it as an asymmetric bet. I'm not huge in it, but in terms of size of my position, but I do think there is going to be a point where it makes another crazy move, and it makes sense to have some of that there.
Yeah, you see, I'm going to do some
think
technical analysis for you here.
Yeah.
If you draw this line right across here that I have, it's probably a buy.
There you go.
Now, if I can't do
an inverse cup and handle,
I can't do a diagonal line. But if you draw a diagonal line going this way, it's probably not a buy until you get into the 50s. So there you go. Place your bets.
Next one, please.
Yeah, sure.
On a day like Tuesday where we had some big moves, do you still put on earnings trades, or because there is so much opportunity elsewhere, do you pass?
It's a great question. I'm not your earnings trade type of guy. I like post earnings trades, if anything, and I like to play reversion a little bit on the price. I usually don't have the volatility being higher. Mm-hmm. So if a stock moves well outside its expected move in one direction, I like to eventually, day 2 or 3, put something on in the opposite direction that has a little bit of delta. That's the way I like to do it. So yeah, I look at these big moves as opportunities. When it goes nowhere and volatility contracts, when I see no post-earnings trade possibilities. So kind of a little bit of the opposite thinking for me than the question here. What about you?
I mean, overall earnings trades are small for me as a piece of my portfolio. So they're always, lesser. Mm-hmm. I do think on big down days, the upside is muted just because of kind of the volatility in the market. So, I will kind of take that into account with earnings trades. But overall, the earnings trades just for earnings are much smaller a piece than anything else in my portfolio.
Very good, sir. We're going to take a quick 90-second break. We're going to come back. We got an option jive coming at you next. Back in 90 seconds. Tastylive. You mean the S&P's up 3?
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
It's options. Nicky, we are back, son. And you know what that means. Time for a little bit more Tastylive with an option jive. Go. You mean S&P still up 3.
Let's do it.
I'm ready.
Why futures beat margin? Why? You tell me why.
Because they have span margining, different margining than, options or futures? What are we comparing it?
Yes. In general, well, both, because
it's more leverage, more delta futures than equities. If that's
span margin applies to futures options too.
That's correct.
It's both, but yes, that is the point.
It's the different margining background. The whole takeaway from this is span margining can change intra trade while you have the trade on, where options on equities margin, all things being equal, doesn't change intra when you have the trade on.
Yes.
If you're short premium kind of thing, if you're short options. But go ahead. It can even be different when long options too. So it works both ways in span margin.
Yep. When we consider trading futures over stock, one of the most overlooked benefits to doing so is the access to wholesale financing rates. So there's a cost to carry with futures that is priced into the buying power that you're using. And it's a cost, but it's cheap relative to what you would get on the street. Like if you went to a bank and asked for a loan, you're paying 7, 8, 9%.
Right.
Wholesale prices are basically where, short-term rates are at. And this is kind of where we're going to go with this. So this differs from retail margin financing that you would pay if you utilized broker margin. So you're getting leverage basically at cost. And we're going to talk about how you can kind of figure that out and figure out what that embedded rate is. So on the next slide here, margin financing. So with a traditional margin account, you're able to purchase a stock using up to 50% of the purchase price as margin. So this is borrowed capital from your broker. This is not margin debt. So margin is there's no cost to that margin. If you are using more than your cash available, then you are in margin debt. So, and by margin debt, there's a cost.
You're borrowing money from the broker.
Borrow that money.
Right.
the margin you get from a broker is given to you based on risk parameters. It's basically saying this asset costs $100, but the realistic risk of it is $50. So they give you, so you can buy that asset at $100 only using $50. So you could theoretically buy 2 of those for the amount of cash that you have. So your 2x margin, you're using 50% on that position. If you were to buy 3 or 4x, then you would be in margin debt because you're borrowing more money because you don't have that cash to buy at 50%. But that's what margin is. So if you're buying stock and it's using half the capital, you're not paying the broker to have that, assuming you have the cash for it.
If you have $100,000 in your account and you're using $50,000 in margin or buying power to buy that stock, you are not being charged anything. And if you have $50,000 in your account and you're using $50,000, you're not being charged anything. If you have $40,000 in your account and you use $50,000, you're being charged on $10,000. Just to put things very simple and easy. And you can click on on the Tasty Trade platform.
On the balance.
Yeah, just click on the balance. If that balance number is positive, does not have parentheses around it, which our accountants will say is a negative number, then you're in good shape.
Yes.
It's a very easy way of looking at it.
Yes, exactly. So, and you don't get charged there. You can't go margin debt on options.
Correct.
So that's another part of it. So the current average margin rates for a 25K account hover around 13%. So this is a part of the risk-free rates plus an added cost there. So when you talk about margin, when you talk about futures financing, when you trade futures, there's no direct margin being charged on any of the leverage that the position offers, nor is the buying power of the position marginable. So this is span margin. There's a different margining system versus equities or ETFs, stuff like that. So with ES, trading at a notional of about 225K, but only requiring about $12,000 in buying power, how do you calculate the implied financing rate for that 18-to-1 exposure? You're getting so much leverage here. How do you actually figure out what the cost of that leverage is that's embedded in that position? So we're going to talk about that here. So here's how you do it. So on this next slide here, it's the futures margin, the futures price divided by the spot price. So you look at ES and SPX, and we used 4,400. This from a little bit ago. Divided by the number of days. So here you get about a 4% rate, which is what we're kind of looking at here, and it's just short-term rates. And this is a financing premium priced into the futures, and it's the rate that you are paying on the full notional value. So when you look at futures versus spot, they trade at a different price for the front futures. And that is a cost to carry on the futures, plus whatever if there's a dividend within that expiration, that will also be priced into the futures as well. So this is just generally how you calculate the cost to carry that is embedded in that margin requirement.
Perfect. I can't add any more. Plus, it's not my forte.
I know. This is getting into like how the sausage is made.
Yeah.
You know, we're just kind of explaining because we get that question like, what's the carry cost? Am I paying this? You're paying it with leverage.
Yes.
Like it is in the price. It's not like something where the broker is
opportunity costs.
Yes.
So the money gets taken out, and that's opportunity cost that you can't use someplace else. But you're again not being charged for it in our example that we were using. That you have enough money in your bank.
But it's not like you're paying the broker.
Not paying anything.
Yes. There's no value that you're like out because of this. It's priced into the futures contract. The futures trade at a higher price because rates are at 4%. If rates were at 0%, and nothing happened in the market, the price of the futures would go down to adjust for that interest rate. It's a zero sum in terms of like your person to person trading.
Yep.
There's no cost to you.
That's correct.
It's in it. So when trading futures, comparing borrowed capital dollar to dollar with traditional margin financing makes futures a much cheaper way to put on the same trade. The span margin gives you a lot more leverage than using SPX or SPY or something like that. You get that extra leverage. Even if you are not one to use margin, financing for 4.3% and leaving that cash free for you to use elsewhere can be a valuable concept when diversifying a portfolio. And so what this is saying is basically you can get long your cash value with futures versus spot for much cheaper and be able to use that extra capital to actually put into short-term rates. So like if you have 100K in cash, you can be a lot more capital efficient with the margining just by using futures or even spot, like in SPX or SPY, and then taking that capital and then deploying it into like something like a BIL or SGov or something like that.
Good job out of you. Great timing, too. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live. You guessed it. Even the S&Ps are up 3. We'll be back in 90 seconds with Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell. I've been quoting them in the S&Ps up 3. They're actually up 7 right now, $7 to the green side. NASDAQ was down a little over 100 a moment ago. It's down about 65 right now. Russell's your leader of the clubhouse, up 10, off its highs by about $5 or $7. Dow up 115. It's off its highs by about $100. It's off of its lows by about $100 in the middle of that. Volatility down by 6 cents. Tightish range last night after having a big range in volatility yesterday during the day. Kind of a tightish range here, sitting in the middle.
1880 again.
1880 again. Isn't it amazing? I mean, volatility is so mean reverting. I don't know how else to put that to people. Anyway, bonds down 3 ticks. I need them to rally a little bit. Bitcoin 75, over 75, 75.5, rounding up in the middle of its range for the day, but it's been anemic. Oil up 7 cents. There's your opening bell. And gold up $124, which is about 2.5%. It was up a little over 3% at one point. And silver up $7.50. That's about 9%. It was up over 10% a moment ago. For earnings, you had AMD.
Yes.
It was down around $22 pre-market. It's down around $26 now. CMG is probably the one that more people play just because of the lower price of the stock. Down $1 inside the expected move. Still a pig. I think you probably played a little bit to the upside, right? With
CMG, I did not play.
Oh, you did not?
I'm done trading CMG. Do you remember when we did those laddered puts and they went like $5 in the money the next day, and it took... I mean, it bounced back, which was great. I think that was the last earnings we did that.
Yes, we did. We did.
And it went all the way back, and I like scratched that trade, and I was like, I am never touching this stupid stock again. Now I'm in a bunch of other ones like DocuSign, which I didn't even look at it yesterday, but it's
down $1, making new lows.
Yeah, but
yesterday.
It went from 50. It went from 60 to 45 in like 3 days.
All right, 5 days, but yes, it felt like 3 days if you have
Something
long
like
delta.
that. Yeah.
Yes, for sure.
It just went nuts.
Even the S&Ps just turned red. They're down 2. Volatility up a nickel. Let's take a look at what's moving along here. Go to our watch list and click on the net change. We get to the downside. SanDisk down 67 or 68. AppLovin down 62. Big 13% move in AppLovin. Big 10% move rounding there in SanDisk. AMD for earnings, big 12% move. Tech continues to get weak, and there you go. NASDAQ down almost 200. MU down 18. IBM down 10. Meta down 10. Strong names here that have been leading the market now going lower. What's that?
Market looks
icky again with the Russell and the NASDAQ. Russell and the Dow higher, and the E-mini S&Ps and the NASDAQ lower. I concur with you. Snow down 6, CRM down 5 and change, Coin down 5, Palantir, which caught a little bit of a bid yesterday, now down 5. Let's see what's trying to lead this market. Lilly for earnings up $94. ENPH, I believe, had earnings too. It's up $11. Costco now following Walmart, up 10. Gold GLD up $6 and change. Apple up $3. Qualcomm has earnings coming after the market closes today. It's up $3. SMCI up $3.
I closed one of my NASDAQs.
Shorts.
Mm-hmm. I took about half off
yesterday.
And so
decent prices, not low lows, but
no, but I was close.
Yeah. You never catch the top, never catch the bottom.
No, of course not. But I just figure it's down 200. I think you can sell rallies today. You have volatility perking up a little bit. You got 19 on the vol futures. If we do get a rally, I think you can sell into it. I think that 7,000 mark, like until further notice, is the spot.
It's 50 handles away. I mean, it's the expected move for today in the 0-day options is about 40 handles. So you definitely have volatility expanding. Maybe we wait a couple of minutes and we'll put on a 0-day trade. We haven't done that in quite some time.
Yeah.
Got away from that. Yes. Talk to me, Goose.
I'm just trying to buy back some calls in Uber. I'm just going to lean a little bit long there.
That was an earnings trade, right? Uber down $3.30. Even the S&P is down 3. Pretty complacent market here with volatility upticking a little bit, very similar to what you saw yesterday as volatility kind of upticked. Now, we were lower yesterday in volatility in the 18 handle. We're sitting at 19 right now. AMD, you're selling some calls. That would be an adjustment to the earnings trade.
Yeah, I was going to buy in the risk on this butterfly on the upside. I guess I should just buy it. Why not? I like to. I had a short put with a call ratio spread that we did at $4. It's marked at like 10 now because you're test on the put side, we basically did the call ratio at nothing. It was the 283.10, so it's 30 points wide on the upside. If I buy this 340 call for 32 cents, it gives me a tail butterfly. I did sell the call, the 250 call, so really my risk here is basically nothing to the upside because I have that butterfly there that has a, I have a call spread that's 250, 280.
Yeah.
At $10 in premium. So I probably got, if you had an explosion to the upside, but doesn't.
Get exposed to the upside, you'd be all right.
Yeah.
And don't see that at this moment, but although volatility percolating a little bit, volatility percolates, usually has a little bit of weakness in the market.
Yeah.
And I don't like it when even the S&Ps and the NASDAQ are the weakest of the group and the Russell and the Dow is the top of the group.
Yeah.
Not for me. For the bulls is what I'm trying to say. It's subject to change, right? I mean, so far we've done absolutely nothing today, but we're in the middle of yesterday's range, right? So place your bets. I think a decent premium selling play here. You want to do that 0-day trade, or you want to abstain from it right now?
Yeah, let's do it. What are you thinking? 20 delta?
Yeah, I think we stay in the mechanics. Don't overguess anything. I expect to move about $38 higher than where we've been putting it on last time. You'll see that you're under a standard deviation on the downside. If you go to the 20-ish delta, 870, what do you want to do? $15, $20 wide? You did
69.55, 69.70, and then 68.75, 68.60.
15. You $15 wide on each side. You just laid out your NASDAQ futures as they rallied 125.
No, that was E-minis.
Oh, sorry, E-minis.
I am putting more NASDAQ on.
Got it.
And then that SPX trade, I did it at like $5, which is about 1/3 the width is
$5.55.
Yeah, so I will put in an order to close out. What do you want to take? Like 75 cents?
Sure.
That would put us at what? We'll put it at 4.75.
Sure.
80 cents.
Subject to change.
Yeah.
Yeah.
All right. So I'm gonna put that in. We'll see if we get filled on that.
Very good. The S&P is up 7. Cancel crash.
Yeah.
Gold GLD up $6.70.
I just scalped like 30 handles on the NASDAQ.
Yeah, NASDAQ is moving around. That is your scalping vehicle. Like if I was looking for scalps today, I would not be looking to do
the E-minis and the Russell have just not been.
Yeah, but I wouldn't be looking to sell the Russell or buy it. It just hasn't had that two-sided action. The NASDAQ's been moving 100 ticks at a time. It gives you a chance to play something. Even the S&Ps are even moving about 10 handles at a time. So you've got some play there. You don't have it.
I closed the rest of the NASDAQ.
Beautiful. Look at you. Scalpy.
Yeah, that was fast. If we get another move higher, I think you can sell rallies here. If we get
you said that from the very beginning today.
I also had long vol too that I closed out of yesterday. I've got a couple of those still left here too. I
haven't had any percolation there yet.
No.
In volatility. If anything, it's been a little bit depressed, but depressed by going nowhere.
It's like, is anything popping off your screen in terms of Apple is up $6?
Yeah, Apple was up $3. Now is up $6. That's your mover in the NASDAQ.
Yeah. So it's a goofy one today.
It is a goofy one today.
A lot of big moves in both directions. It's very there's no chop here. You have like Hood that's down $1 million.
It is down to $3.50. Once $140 stock, and by once I mean by the end of the year, December. Now 80 and change. That's a pseudo Bitcoin currency play there too.
You want to look at some of those? Coinbase has been an absolute dog.
Yeah. I'm not interested in catching a falling knife in those.
I was thinking a diagonal spread.
You could do a diagonal.
That's kind of what I did with I did Shopify. I sold premium in Snowflake. But I think a lot of these stocks, if you don't want the tail, like if you think these are going to fall out of bed.
Sure.
But, maybe there's a bounce. Doing a call diagonal spread, cheap way to put on a bullish trade that doesn't have the tail risk to the downside like I'm seeing in freaking DocuSign that's costing me $1,000 on a one lot.
Right.
This I could do in Coinbase.
$300-$400.
Or,
it's always going to hold $1-ish. So maybe your $3, $4, $5 in risk is really, $2, $3, $4 worth of risk. No black swan event.
Yeah.
One way or the other, but you'll get paid to the upside. You're picking up probably, and again, just rounding it, depending on how you do it, 20 to 40 deltas, depending on what strikes you're using. What delta did you just get in coin?
I did the 40-20-ish.
So you did the 40-20,
typical...
so you pick up about 20-ish deltas on the trade.
And I'm going to do a small short delta play in Walmart because that was another one I put on I'm going to do a diagonal spread there into earnings.
So to put it into perspective, he said, DocuSign cost me thousands on a one lot, $1,000 on a one lot. When the diagonal spread you're doing, you have 20 deltas and it moves $10, it's $200 at most.
In either direction.
In either direction.
If it goes up, I make $200 on that.
Yeah.
If it goes down, I lose $200.
Yeah.
And you don't have if the stock's down 50, you lose a couple $100 and you have no more risk.
And you're only using $700, $760 in buying power in our very high level example that we just gave you of risk. You can go to the analyze tab and take a look at it a lot better than we can. But
I'm going to do Cisco too.
Cisco Kid was a friend of mine. Even the S&P's up 3. You
remember the thong song?
Do I remember the what?
The thong song from Cisco.
No, will you sing it to me?
That thong, the thong, thong, thong. I love it when the booty joke.
I think I remembered it, but
you remember that song.
I just want.
That was a banger. That was a banger. Okay.
Banger. Got it.
Yeah, that was a classic.
Oh, you're funny.
All right, I'm working a couple orders here.
Beautiful. We have a pretty complacent market. Even the S&P is at the high end of its trading range for today. I know they were up 20 handles pre-market. They're up about 7 to 10 right now.
Yeah.
NASDAQ down 100. Russell up 6. And the Dow up 250. Gold, which was up around 3% or almost 100 and change, is now up $57. It's about a 1% move. Silver up 6. That gold-silver ratio spread trading right there at $56 hasn't really moved.
Yeah, we missed out on 2%. What do you mean? It was down at 54 and change when I told you we should do it.
No, it's been sitting right around 56. You can put it on. Hasn't really moved.
It moved 2%. The low today was
gold was up.
Low was 55. It's moved 1%.
What's that?
0.5%.
Yeah, it moved 0.5%.
You're right.
55.9 right now.
All right, I'm gonna try and get filled on this.
Sure. Bang it out. The key to you doing this gold silver spread is keeping it on.
Yes.
And not scalping out of one side when it goes in your face.
You trying to talk,
and then you get too heavy on one side. So if you want to put it on properly.
I sold another MES. I'm gonna get back in the NASDAQ up here.
Okay. Selling MES. Got that.
NASDAQ.
Selling MNQ. Do you want to do the gold silver?
Yeah, you want to do it?
It's better prices now than it's $300 better than it was before. Mm-hmm.
We're slinging them.
Very good.
Right. So we're in the gold silver ratio too.
And you did the proper MGC versus / SIL.
I've learned my lesson. I took a little.
You didn't do the big contract
They
versus
got
the
me,
small
and
versus
now,
the small contract.
And now I'm in. Oh yeah, because I did have a couple kerfuffles. One of them went in my favor when I did the GC.
Yes.
Which moved a big number, and that was nice. And then when I had the SI, I was like, "Ooh, that's painful." That was a little.
Let's take a quick 90-second break and come back. We got more Tastylive after this. Volatility in by 6 cents. Even the S&P's up 10. NASDAQ down 11.
One of the NASDAQs off.
Scalping your MNQ for about 30 handles or so. Good job out of you, just taking advantage of just simple, small price movement here. $30 to $100, 30 to 100 points. We'll take a quick 90-second break and come back. We got more. You're like a scalping fool. Tastylive. After this, what do we got coming up next? What's your assumption?
Yes.
That's what we're going to do. We're going to see your trades. We'll be back in 90 seconds with Tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tastylive. That's right here, right now with What's Your Assumption? I think we nailed it that time.
That was good.
I think we did.
That was a good one. We're finally learning.
It's going to be a good day.
Yeah, going to be a good day.
Mm-hmm. We are learning.
Thank you. No applause needed. No high fives. No high fives.
No high fives in trading. That's right. All right, what's our first assumption? Even the S&P is up 17, just like that, son. Volatility in by 25 cents. NASDAQ down 90. Only true believers.
Yes, of course.
I wasn't one of them.
Well, I just scalped out of another NASDAQ here.
You did.
Oh, we were
scalped them good. NASDAQ 302, you bought them to 360 right now. So here, going back to...
I think I gotta lay them out again.
Ooh, volatility.
You don't like it, I don't like vols
getting
smashed.
Getting smashed.
Yeah. Oof. I don't like it. All right.
You
What's
ready?
your assumption? What do I need to scalp when I got all these trades coming?
That's right.
Now you were. I
had done it. I'm a one and done. I'm old.
Yeah. USO, Jack and Philly.
Warrants a trade. Going to have good movement to it lately. A smaller product. Good IV rank of 59. Expected move for the time frame that Jack is looking at in March is about $9 on a $76 stock. Good one. Do it.
So
I don't think we need a good market. Market's
here.
like
85.75.
I mean, you can I know /CL is a bigger product, but it's a better trading product with tighter markets.
Yeah, you want to add to CL?
You can, look, they're going to a neutral position here, a neutral position in /CL, margin, everything else being there. It is going to be a bigger product than USO, so it's not for everybody, but I think better markets if you have the capital.
You want to do like
No. Yeah.
What?
Of course. You're looking at /CL?
Yeah. I already have an iron condor there.
Mm-hmm.
But maybe we.
So 41 days, right?
Yeah.
For this, you got 1 tick wide markets pretty much.
Mm-hmm.
They're disseminated 2 ticks, but they usually trade right in between. So what are your short strikes right now?
I'm thinking 75, 76 on the upside, and then
75 has about a 22 delta. 75, 76. And what was the other one? What's the put side? Somewhere around the 57.
I'm going to move this just to have different strikes on this iron condor because I already have a position.
Sure.
So I was going to do the, let's do this 1.5 points wide.
What do you want to do?
I'm going to do the 75, 76.5.
Oh, you're going to make it a spread. 75.
57, 55.5. And the oil futures, it trades at 50 cents.
57, 55.5, correct?
Yeah.
Yes.
Because I already have a position on in there, and I know, if you've been watching any of my craziness in silver, people are like, where are you? And I'm like,
Sure.
I'm trying to have different strikes here just so we can.
Right. Now remember, 50 cents is $500.
Yes.
So this might be too big for that, for Jack and Philly for that USO trade.
Well, if you're doing a strangle, you're using more capital than this in USO.
Oh yeah, you're only using $500 here at this time
margin,
because the span.
Yeah. But max risk is $1,000, which is even smaller than what your buying power will be on USO.
That's true.
Should have sold my NASDAQ. You stink.
Even the S&P is up $1. You are right. NASDAQ down 160 and change. Volatility up 4 cents. Subject to change. Oh, but look,
small little scalp on the MES.
Yeah,
took
so
2 of them off.
So
half off.
Yeah. So there.
What, did you do that?
No. I'm saying so you got a chance to take in, instead of adding, you got a chance to take in a profit. So what would you rather do? Add to a trade that's a loser or take the profits? Now you can do what you want on any type of thing.
Took the NASDAQ off.
Beautiful.
That's been a fun little NASDAQ move today.
Yeah. So you closed 100% of MES, you closed 100% of the NASDAQ,
yes.
Right? Yeah.
No, I still have some MES.
Oh, you still
I
have
closed
some
half MES, all of NASDAQ.
Gotcha.
And Vol's picking up, so I think if we get another little rally here, I'll whack him again.
Very good. S&P's unched.
I'll give this a half check.
Okay.
A halfy because we went to CL, but I think it's more capital efficient, especially going off of the option jive we had talking about futures and span margin, a little bit more capital efficient than USO. But I get it. If you want to use USO, go wide with the iron condor.
Very nice.
Next one, please. Google earnings play. Ooh. Think about Google. What's your feeling? I have these I have butterflies up between 340 and 370 in the February monthly.
Mm-hmm.
So I've got the upside ready to rock here.
$25 expected move in Google. So I would be looking to do something.
He's kind of neutral. This is from Mike in New York.
Yeah.
All the AI stocks tanking, kind of neutral here.
Mm-hmm.
To add, you want to do a kind of short delta skewed strangle because I have the upside kind of. I don't want to say covered.
Yeah.
But I have some buffer to the upside if it does go inside up.
Inside up?
If it does go inside up.
Right.
Inside the expected move to the upside.
To the upside. Yeah, I don't hate that because you have existing positions. I would probably be looking to do some side of upside call, broken wing butterflies. This is the way I would probably play it.
Oh, you're scared.
Yeah, a little bit.
What do you think about?
Or a Feb March ratio spread, which whatever direction you wanted to go with. I would probably go with a little bit of short delta just because I think it's a pop and flop, as my old friend Pete would say. You got 8 vol differential between Feb and March.
So you want to do something in March?
I mean, that's where my long would be.
I have the upside covered here.
Mm-hmm.
What about?
I think the upside is where I think the upside risk is 1. I think the downside risk is 2x.
Oh.
That's my thinking.
Okay, so what do you think about? So the middle of my butterflies on the upside is about 350.
You're in great shape for what I think because I think with a $25 expected move, $20 expected move for 2 days in February, that puts you right there. Stocks, let's round up 340. It's 360. I think it's going to be inside that to the upside.
What do you think about the February
20 options?
20-day options. The
okay.
310, which is about the 1 standard deviation.
You want to sell the 310 puts? What are you doing?
What
are you trying to do?
I'm thinking the 352.5, 310 strangle in February. The 352.5, because I want to go to a different strike. I'm wrapped around 350 for my.
That's going to give you that 15, 20-ish short delta.
Yeah. You're saying the downside 2x to the 1x upside. So this is it. Are you scared? You're scared of this. This scares you.
Yeah. With 16 days to go.
Okay. How about a March wide call ratio?
I love it.
Okay. We're going to do the 350, 370 for 52 cents.
Yeah, it's not. I would like it in February too. Like, I'm okay with that too. I would rather go to February. I would rather go to March, but I like your February too.
I'm going to March.
Yeah, I like that. Okay. Yeah,
let's do it for a little bit of a credit.
Okay.
Let's do the 350, 365.
350, 365.
Right at the expected move in March.
Right. It's the same exact short delta that you had on your strangle, but no downside risk. Little omnidirectional trade with the break even. Again, 44 days away at your 1 standard deviation that's just over 380. That's that little dotted line. Now, this could look great and have a great probability of success like it does, 83, but there's still a 40% chance at 380. So again, to that person who wrote the confirm and send question, so far away, it's free money, safe money. Nothing is free money. Nothing is safe money. Even S&P's down 9, NASDAQ down 225. You just closed the rest of your NASDAQ. Good job.
No, one more of my MES. I have.
Oh, you have one more.
Small, tiny.
Oh, I didn't notice your size there. You were you upticked
my
these.
Size,
Mm-hmm. Nice.
Quite
large. Big by big over there.
Next one, please. So we're with you, Mike. We did it. It's neutral, but has no risk to the downside.
Still, it's got a little short delta, 16, 17 short delta.
No, I know. No risk to the downside.
Yes, no risk to the downside.
Neutral-ish.
Yep.
Cool.
Mm-hmm.
Hood, bullish. I got this.
Okay.
It's down $6 today. I'm already short puts here. I've got the 95 puts in March, which are now $15 in the money. Just swiftly.
Uh-huh.
Okay. What is take your platform off. Yeah, there you go.
Sorry.
You're okay. I'm in Las Vegas.
I've just shown it to the audience. Yep. Earnings next week. Oof. This would be the opposite. Like I would look at this the way it's been getting killed, that the downside would be muted for earnings and the upside might have some oomph to it. But at $80.
Yeah.
It's in the middle of its most recent big range from last year when it was down, when it was $40 stock up to $140.
Do we add another put here?
Even the S&P is down 16.
Or do we do a call
diagonal spread. Poor man.
You lost the Russell too. Russell down 8, volatility up 30 cents. Go ahead. What's that?
Yeah, but the Russell has not moved the same as the rest of the market.
No. It's been a lot stronger.
Yes. All right, Hood.
Hood.
I think I'm gonna do a diagonal spread. I'm gonna do a little bit longer duration.
Okay.
I'm gonna do April. That's a lot of time. I don't know if I like that. I'm gonna do March. The 85, March. And then I'm gonna go into the February. I'm gonna sell the 95, $5. Doesn't really add much downside risk to the position versus like a put. If you wake up and the stock's at 50, this is no big deal.
Agreed. No big shakes on this trade.
All right, I'm in. E-mini's down 20 now.
E-mini S&P's down 20, flirting with their lows.
All up 36.
1927.
Yeah.
Decent. Decent 2% move in volatility.
Yeah.
I'll give you that.
Yeah, this getting interesting.
It always gets interesting, doesn't it?
All right, close the rest of that.
You're closing.
All right, so I'm
your
out.
MES. You're out of your MES.
I've got the gold silver ratio on and short.
That's basically unchanged, right? Silver.
It's down a little, down small.
It's
nothing. It's unchanged.
It's a tick. Yes.
And then I'm short the Russell and long vol. So I still have a little bit of.
You do 1930 on vol. You mean S&P down 23. Nasdaq, which has been the weakest of the group, down 300.
Cool. All right, so we're with you, Tom. I'll give you a check.
Mm-hmm.
Let's do it. Next one.
I'm ready.
ARM into earnings. What are we thinking here? Weekly bullish, Jake, Traverse City, Michigan. Beautiful place, Traverse City. You ever been?
I don't think so.
Nice beach.
It's up there, isn't it?
Yeah. All the way up there.
Yeah. I don't think so.
Down 40% from highs. I'm super bullish now. Thoughts?
Ooh. This would be an earnings play because it comes out after the market closes. ARM down $1.
Let's see where. So the April lows were around 90. You want to sell the March 90 puts? Markets are not great.
ARM, not great. 230, 330. Good open interest though. In all
trades.
What's that?
He wants to do the weeklies.
Yeah. Weekly move for 2 days is about $9. For 9 days, about $11. I'm thinking he wants to do the Feb 6 options. If you go to down to your 90 strike, you're selling 50, 70 cent options. I'm not interested in doing that.
You want to do like just a binary, like I'm going to do this. This is going to be cheap. This is a tiny upside play. I don't love this, especially after AMD's move.
Mm-hmm. What are you thinking?
I'm going to do I'm going to do a diagonal spread, a call diagonal spread.
Okay.
With the February and the weekly expiration. So I'm doing the February 20th. I'm buying the 100 strike call, which is about a 40 delta. I'm selling the 115 in the weekly for about $1 and change. That's a 20 delta. So it nets you about 20 deltas long. I did it at $2 and change. Small trade. I don't know how I feel about ARM here.
So,
I don't know if I.
So you're buying the 2-day option, the
16-day option, the February monthly. I'm buying.
Yeah, I'm sorry, and you're selling the 15. You're doing a $5 wide diagonal for $2.60 some odd cents
into earnings. It's pretty much an all or nothing.
It's going to be.
It doesn't have. Again, if we wake up and the stock's at 90, I'm not out $500. I'm out $200.
Maybe even less because that 16-day option is going to carry 50, 75 cents. It's like make 1.5, lose 1 kind of trade on a binary event here for earnings.
Yes.
Okay. Johnny trade.
I'm with you.
You're scared.
A little scared there. Yeah. Not scared like you.
Hey, even the S&P 6920.
Yeah.
The high was 7,020. We really haven't gone anywhere. No. I mean, I think there's some room to run to the downside, but we haven't done anything, right? I mean, so I'm scared with my trades too. So I'm looking to put on directional trades with muted movement like you're doing right now. I'm not looking until volatility gets back into the 20s. We're getting close, 1940 and change, to put anything on with undefined risk. Next one, please.
SPX 0 day.
Oh, we did it. We did it. And we're unchanged pretty much on our spread as SPX is down 25. It's been about a 50 cent profit. It's been a 50 cent loss. The spread that we put on.
We're short the 68.75, 68.60 put spread. That's kind of the meat of the position. The call spread's at like $1.
Yeah, but when EME S&Ps were up 25, it was exactly the opposite. The call spread was the meat of the trade, and
we get like a 10, 15 handle rally from
You'll
here.
take this off.
This will probably close.
That's correct. Trading around 520 to 560.
Yeah.
Right now we did it like 555, I think, and it got up to about $6, 6 and change. To the upside.
Cool. So we're in it already. We'll give you kind of like
brilliant mindset, think alike.
A halfie here. Next one, please.
EME S&P is down 16.
There's our rally. MRVL. Okay, March neutral. Ivy rank at 41. No earnings until March. Wide iron condor strangle. Stock's been kind of a pig.
Stock has my number, even though it's gone nowhere. So I am going to abstain from any commentary on this.
What do we think about 65.90?
I said I was going to abstain.
I know you are.
In March with 44 days? Yeah.
$4 and change.
Okay. 65.90 is basically a delta neutral trade. If I was putting on a trade here, like I would do exactly the same thing because let the stock try to beat me again, which it usually does. So,
thank you, Blake. We're in. We're with you.
Thank you, Blake.
Big green check for you. Next one, please.
Ooh, next one. You're looking at.
Oh, we did Marvell already.
Yep. Next one, please. Survey says. Number 7, please. Slide 7. Calling Dr. Bombay. Calling Dr. Bombay. Slide number 7.
Next one, please.
Qualcomm! I knew it. Oh, well worth the wait. Earnings coming in Qualcomm. Qualcomm earnings trade. What are you looking at here?
Ooh, this stock's been another. I mean, some of these stocks are like back to April-ish tariff tantrum lows here. What are they thinking here? Bullish, short put spread, earnings play. Andrew in Costa Rica. Andrew, thank you. You want to do something in March, like
we could.
You want to do a put spread like the 135, 125, or
okay.
I mean, I think you got to like move it closer just so you can collect. What about the 140?
Cancel crash, by the way. Even the S&Ps are only down 14 or 15, but volatility just took off of its 45 up to up 30 now. So that's a little bit of bid maybe in the market here. We'll see. And the Russell just went from down 7 to down 4, which has been the strongest of the group.
140, 130 in March. 30-ish delta for the short option. Put spread, defined risk. You're exposed to earnings, which are coming, I think, after the close today, but you got a little bit of duration left on your side here. So,
okie dokie.
Cool. We're in.
Beautiful.
Check mark for you.
Check market for you.
Costa Rica. Another beautiful place.
Yes, another one.
Alcoa. 45 days neutral, selling the 50.75 strangle. I asked Mikey this because we traded a lot of Alcoa like when we had our trade manager segment. And the stock was at like 30. So this thing has taken off. It's one of the copper plays. Copper or steel, something like that. One of the metals. All right. You're looking at the 50.75 March.
Okay.
You trying to work our order there.
Yeah,
This is why a team is so amazing. Because I got you slinging them over there. You take it. We talked about it. We got our 10-point rally. That spread moved 50 cents.
Yeah. I mean, Yeah, 60 cents. So I took it off. We know we were working for 70, 75 cents. I moved it a dime, get filled, and just take it off and be done with it. So just ring in the register, son. That's all I'm doing.
You're the best.
I don't know about that, but just ring in the register.
Market's kind of stinking, Alcoa. So I think I'm going to pass on this, unfortunately. But thank you, Jeff.
Beautiful. Even the S&P's down 5 as foretold.
Cancel crash.
Cancel crash. Crash.
It's been 6,900 has been. I mean, we didn't get to 6,900 today, but
I got close 6,910.
6,910.
Right there.
If you've scalped 6,900 to 7,000, you've been.
We went under it yesterday because I started buying some EME S&Ps around 6,910 and 6,900. We went down to 68, or 85 or so. So it was sucking the bag for a little while there. So took about 45 minutes to get us back over 6,900 and change. So yeah, I hear you. It's easy to say, it's hard to do.
Sure.
And if you're 10 handles away from something, like if that was your number, like, if you're a technical analysis, 6,900 is your number, you get to 6,910. And I
can't sit there and wait.
I can't sit there and wait either. So I have to trade multiple contracts. If you're doing futures, if you're a 3 future contract trader, I do one. It gets down to your number 69, I do another. And if it goes 30 handles below that, I do another. And I try to manage the position from there. If you're a one lotter, I mean, I give you a lot of credit waiting for 6,900 because I would be drinking if it gets to 6,910 and then goes to 7,010. And I missed my number by 10 ticks.
Yeah.
I can't do it. AA, I'm so sorry.
We passed.
Which is where I would be if I was a
AA
one-lot trader and I'm missing them by 100 handles. Go ahead.
AA gets the X. Thank you, Jeff. But we're going to pass on
No
this.
can do?
It's just not good.
Okay.
Last one here. Snap. Okay. This stock. My God. It's at 5 now?
It has earnings.
Okay. Just buy the stock or sell naked puts. Can't lose much from here.
Now, I agree with them in San Mateo, California there. I agree with you. I don't. Yeah, there we go. My friend over there agrees with you even more as he just bought the stock. It
can only go to zero.
$5.93, which it is probably destined to do. But don't worry, you'll be my age when it gets there. You'll be fine. You'll have an opportunity to manage this at some point as a winner. I say that because by a winner, I just mean a penny.
E-mini's unched.
E-mini S&P's unched.
Why'd you have to close our SPX?
I would imagine that
Just
SPX,
kidding,
it's $490 mid-price.
I know.
But you're right there. Your call spread now has a 16 delta, and your put spread actually has a 26 delta. So it has a little bit of long delta to it. We've rallied back on even the S&Ps and SPX, but it's still
Let's do the last one. We've got TP waiting in the wings.
Beautiful. Let's do it.
EWY. Ooh.
EWY.
Going into South Korea. Asia stock markets are on fire right now. When's the last time EWY had 100% IVR? That's a great question, Sean. I do not know. While trading at the top, maybe a strangle.
It's definitely caught some interest. Dollar-wide strikes, wide markets in here.
Yeah, the markets are not great. I would just be careful here.
It doesn't, listen, liquidity is king.
Yeah.
I get it. It has a high IV rank because some of those markets are wide, so that IV rank is a little bit skewed. So let's make it a 60, 70, or 80 IV rank instead of almost 100 what it is, because it's catching those out of the money options that have really high skew. It still has high skew, but volume and tightness of market, the width of the markets is king. I think you abstain from here no matter what. You got to take your eyes away.
I agree.
Even the S&P's down 10. We'll take a quick down 6.
Oh, we can get our little slide last one? Yeah, there we go.
Sure.
Good job out of the team here. We got a couple half ones where we already did something else or had a position. Couple
Batista's our halves. We're half right,
like
half Italian, half everything.
This is perfect. Right in line. C, like a good C, like a high C. C+.
We're Vinny.
Yeah, pretty much.
Apple doesn't fall far from the tree. We're going to take a quick 90s. We're overperforming C. Yeah. We're going to take a quick 90-second break and come back. We got more Tastylive with basically an unchanged market. Russell, Dow, higher. Even the S&Ps, NASDAQ lower, volatility up 24 cents. Gold hanging in there up $76. Silver hanging in there up almost 8%, up 6.5%. Bonds doing really nothing, down 3%. We'll take a quick 90-second break and come back. We got more Tasty Live after this with my man TP. We'll be back in 90 seconds.
House.
Yes.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man, Mr. TP.
Hey, Pat. Hey, Nick. How you guys doing?
Good to have you, my friend. Always great when you're on the show. Thank you for coming on. Do appreciate it. Pick me up here.
Thanks. And, okay, looks like we're getting a little cancel crash here. They were down about 12 points earlier. Now they're only down 6.
And now they're down 9, and they were just down 4. And NASDAQ is down 250. That's near the low end of its range, about 100 handles off its low end of range. And that's been the scalping vehicle that Nick has been doing most of the time here today. So
nice work, Nick.
It looks like we're going nowhere fast. You could sell rallies, you could buy dips so far.
Yeah, but the moves underneath the surface, there's been just some big, like these stocks, like I've puts in AVGO. AVGO's at 300. It was at 400 a month ago.
Yes.
There's been some.
Nikki, that's called the monkey hammer.
Thank you. That I was not aware of the monkey hammer. I feel well educated now after that short break.
It's a scientific term, like I say, when they're crushing stocks, and we'll talk about that for the cherry pick segment.
Yeah,
here.
Let's do it.
But one of the things I wanted to preface everything with is defined risk trades really quickly. So I put on, some SPX iron condors yesterday morning around 8:45, 9 o'clock, whatever it was. Took in a decent credit, and they were moving down a little bit. And at about, correct me if I'm wrong, but I think it was about 11:15 or so. They were down about $35. Wasn't at my short strike yet. I thought it was okay. I had to step where I was doing something else, took my attention away. An hour later, they were down about 90.
Yeah.
Okay?
That'll teach you.
Straight through my strikes, right? I was looking at a complete loser at that point. Yeah. But because I had a defined risk trade on, It sucked. I don't want to lose money on a trade. I don't like having a max loss, even on a short vertical. Okay. But I was able to hold on to the position. And what do? Cancel crash. They rallied right back, passed my long strike. I ended up making a couple of bucks on the trade.
Yeah.
Okay.
That's called better to be lucky than good, but it was lucky because of the strategy.
That 100%. And I am not taking credit. I had no freaking idea. Okay, because if I had an idea, I would have bought futures down at the bottom, which I didn't do.
Sure.
But my point is, and this goes out to everybody, there is a wisdom to defined risk strategies. They let you hang on to positions a little bit longer without having to bail out on a trade because of either margin requirements or whatever. You just don't can't take that big of a loss.
Sure.
So my point is, if you're trading these big products and the S&Ps are a $7,000 product, whatever they are now, $7,000.
We can round.
These are expensive things. Okay, using defined risk trades is my approach to them.
I agree. And we did a lot of the trades that we just did for What's Your Assumption. Instead of selling the puts in some of these stocks that are moving $20 a day, we did some call diagonal spreads. Like when you're looking at that and you're looking at ARM and it's down $15 in 3 sessions. It has earnings after the close. Volatility's high, but these stocks are moving like they're going to be repriced to half. And selling the puts for $1 versus doing a call diagonal spread for $3 debit that is defined risk, or even just buying the call spread, you don't have the same vol exposure. You don't have the same gamma exposure. It kind of takes a lot of those things off the table and allows you to, play that bullish, let's play for a bounce, catch a falling knife, but it doesn't give you the astronomical tail risk. There's sometimes where you don't have to, you don't have to sell the premium. You can buy premium, but sell something in conjunction with it.
100%. And the point is, Nick, you're just talking about a $3 diagonal. That's $300 of cash you have to put out for that trade.
Yeah.
You can incorporate that into a $5,000 account.
Yes.
Yeah.
Yes.
That if you're talking about trade small, trade off, and $300, okay, maybe it's a little high for a $5,000 account, but okay, for a $10,000 account, no problem. So that's the point I wanted to get across.
Yeah.
You're right.
All right, let's get into this cherry picks, because if you want to talk about monkey hammers, one of the things and Nikki, you're old enough to remember the pre-AI world. Okay?
Yes.
Yeah.
Growing, Tony, you and I remember where everything had to be worked out with a pencil and paper, and I mean everything. Okay. Sometimes, if you were especially confident, you used a pen. Okay. But you used to have to work stuff out with a pencil and paper. Maybe
you used a pen. If I used a pen, it had a pen with an eraser on top. I'm not gonna lie.
Oh well, because you were feeling pretty wealthy in those days, babe. You could afford the erasable pens. My little 19-cent Bics didn't.
No.
Oh,
TP, I couldn't afford not to have the erasable pen.
Yeah,
that was the
don't
difference.
Have the same brain power as the president here.
So here's my point. In the 80s, and especially the 90s, then we started to work with software, like things like Excel or Word or Photoshop, that sort of stuff. Okay. And that's how people, look at the wonders of computers. Okay. Yeah. Now, and Nick, maybe you can speak to this very specifically, but I can go into Grok or ChatGPT or OpenAI or whatever your AI interface is.
Yep.
Throw a bunch of numbers at it and say, give me the sum or the square root of something, and it just spits it out. I don't need a piece of software.
Yeah.
Okay. That's why the growth in AI has been so punishing to. And the term is used very broadly here. Software companies, software stocks. Okay, so let's go to the first slide and we'll see what monkey hammers look like in numbers. So the point is, These are, like I said, very, very broadly defined software stocks. Microsoft, Uber at the top. Uber, you said, is a software company? Well, it's a software platform, but SAP, Autodesk, Adobe, all those things are more traditionally software companies. They have been crushed over the past year with the bulk of the losses, the majority of the losses coming over the past couple of months. They have been whacked. Okay. And so does it present an opportunity? I don't necessarily think it presents an opportunity in most of these symbols. A lot of these things, looking at these for trading purposes, again, what's the mantra? Okay, liquidity first, then volatility, then probability. Most of these things do not have, when I look at these things, liquid enough options to actually trade. Okay, so going through the only ones, and I have SPY up there just as a reference, of course, that's the granddaddy of liquidity. The only ones that I would look at trading options on are Microsoft and Uber. That's basically it. I don't know if you guys have ever traded any of the other names on here. CRM, I've traded in the past. Intuit, I have in the past, but not recently. The markets on those things are wide. So even if I wanted to make a speculative bet on some of these software companies, I'm not liking the options. And if I don't like the markets on things, it doesn't matter what my directional belief is, I'm not trading it. I don't care.
Right.
I don't care.
I don't blame you. Right.
So I drilled down, guys, into the next slide. I just drilled down into Uber and Microsoft. And my humble opinion, well, what we saw is, if we go to the next slide, slide number 2, there we see the implied volatilities. Uber's came out with, and I don't, Nick, could you see what Uber's doing today?
It's down 3. It's been a little choppy. It was a little bit higher around the open at like 78, but it's pretty inside the expected move here. It's been getting whacked though over the last month or so. It's down from 100 to 75 pretty quickly.
Yeah, and that's what. So I think it has earnings today, or either before the open or after.
This morning it had
this morning. So it came out.
Yeah.
Okay. So the Uber implied volatility has been climbing up. That's the blue line you see. And naturally, when I wrote this up yesterday, we're staring into earnings for Uber to this morning. The implied volatilities are very high, naturally. Microsoft, the only other liquid product that I could find in that list, had earnings coming out last week. So the IVs dropped right after that, and that's the golden line you see, and of course they fell. Okay, so even despite the price weakness in Microsoft, the implied volatility still fell, even though it upticked a little bit yesterday, and I think it's ticking up a little bit now. So looking at some of these trades, okay, how do I approach these things? Next, I go to the IV rank, and this is the trade process for me. Okay. Is go to the next slide and we see the IV ranks, and they are all both of these relatively high. Microsoft's a little bit lower, I think about 27 or so. Uber's obviously higher, probably a little bit lower now after the number came out, but still relatively high IV ranks, suitable for short premium trades. The next point is, do I have any sort of directional idea in these trades? Well, not really. The only thing I look to is the volatility skew. That's it. Okay. So I compare out of the money calls to out of the money puts, which is trading over the other. In both of these cases, the out of the money calls, the out of the money calls were trading over equidistant out of the money puts. Does that say the stock's going up? Nope. Doesn't mean that. All it means is the market is placing risk to the upside. Okay, that's where the market sees its risk. And Uber, well, the market's wrong. The stock's down, and even though it had a lot of call skew yesterday. So there you go. It just shows you where the risk is. It doesn't mean the stock's going that way. But if you are a contrarian trader, If you're a contrarian trader, here are a couple of trades in these two stocks. The first one up is Microsoft, and let's see what Nick. What's Microsoft doing today?
It's actually up $5, but
it hasn't been able to catch itself a bid in forever.
From earnings, it went from 485 to 410. You know, a 65-point move over the last week.
It's been getting crushed. It's been getting crushed. Its IV ranks about 27 when I wrote this up yesterday. So if you go to the next slide, let's take a look at the actual Microsoft put spread. Here's the argument for Microsoft. Yes, is Microsoft a software company? Yes, it is. Does it have dozens of other businesses? Yes, it does. Okay, so it's being kind of included in these anti-AI companies or stocks. But really, it has other business revenue streams that have nothing to do with software. So if you thought that Microsoft might rally back, if you thought the market might rise up over the next few weeks, short put spread in Microsoft, that's all it is. This particular one, the 395-400, when I looked at it, took in a third of the width of strikes, had about a 76% probability of making 50% of its max profit. That's how I look at these trades. If you were bearish, you could probably find something on the call spread side, selling a call spread. But in this case, all I'm showing you is this is how I consider a short put spread. Defined risk trade, like we were talking about earlier, it's a $400 stock. That's expensive, guys. Selling naked premium in a $400 stock takes a lot of capital. Can't afford it with a smallish account or even a moderate sized account. Short put spread, yeah, I can handle that. Okay, it's got a $300 margin requirement. So the point is short put spread in Microsoft. Let's go down to the next one. Uber came out with earnings this morning. Uber, same situation, but given that it's a $70-ish stock, the margins are smaller. Again, it had calls. The skew is towards the call, towards the upside, towards the call side. Stock's down now. What's the price on it now, Nick? $70?
Uber, it's $74.50-ish. $75 basically.
$75. So this is it's where is this here? A little bit lower, a couple of bucks lower. You could get that. The trade I was looking at is the 72 half put with 17 days or 16 days this morning. Again, has decent numbers, 80% probability making 50% of its max profit, generates about $8.5 of theta. You could move that down to the 70 put at this point and probably get similar numbers. But if you were bullish, and again, Uber's one of those situations. Is it a software company? Sure, why not? Okay, fine. But it's also the biggest, at least in the US, the biggest ride-hailing companies, whatever you kids call it, ride-hailing companies right now. Yeah, Lyft is a close number 2, but Uber is still the dominant name. And that's not going anywhere. So if you're bullish on Uber, a short put in here. And that has a more moderate buying power reduction because it's only a $72 to $74 stock. That's all I got for you guys.
I'm with you.
That's a lot.
That's a lot. I'm with you on both these in a little bit different ways. I sold just the 40 or the 400 strike puts in Microsoft, wrapped around right where you were looking. And then into earnings in Uber, I had some long delta with a diagonal spread. I closed out the short options, so I'm just like long some cheap upside calls here. So I'm with you in a little bit different fashion here. I like it.
That's called flexibility, and how two traders, Nick on one side, me on the other, Bet on another side, we can have the same directional outlook on something expressed in 3 different ways. There is no best, there's just choices.
For sure.
Like he's chosen not to take 7 handles on his even the S&P scalp that he has, but he's sitting with it.
High fives.
Tony, kids, what are you going to do with them?
You think he'd peel off half or something like that? You know what I mean? And let the other half, they call them runners, flyers, whatever.
I have a little runner.
Give it a piece of work.
Yes, perfect.
I'll put one in for 10 ticks just to appease.
There you go.
You closed them all. Good job out of you. We're gonna take.
I meant to do half. But
I know, but you messed up.
I don't have my runners.
We're gonna take a quick 90-second break and come back. TP, thank you so much for your time. Always a plethora of information, and always good to see you. We'll take a quick.
That gold silver ratio has moved a full %.
The gold silver ratio.
$1,000.
Your way. Time to say bye bye.
Going.
See, that's why it's nice to have a partner. It's like having a trading room together.
It's a one-way street here. I'm waiting for you to throw something.
Wow, how soon they forget, TP. How soon they forget, I mean, we're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Nick?
Got the boys from the trade desk here.
Q and Ryan. We'll be back in 90 seconds. Let's Tasty Live. You screwed up your runner down 14.
Now.
We'll be back in 90 seconds.
Johnny.
You stink. I told you to let one go. You called it a runner. We'll be back, TP. Thank you for your time.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Diggy, we are back, son, and you know what that means. Time for a little bit more Tasty Live. What'd you just do in...
Took off half my Russell. Short.
Oh, very nice. Russell now down 22, trading right on its lows.
I still have those runners for your information.
Yeah, but you cost me on our E-mini S&P's runners because you're...
I cost you? I don't know about that.
Well, your assumption about selling rallies has worked out quite nicely today for intraday scalps. And I think when you have a conviction on the day, and you run with it, you're a lot more confident in doing it. You start out and you keep doing it. So I think it's becomes the occurrences, it becomes ringing the register. I mean, there's a lot of things that go into it to allow you to do that. Now you got volatility about 10 cents off of its highs, trading 19.35. You've lost the Russell, which was the strongest of the group.
Yeah.
You got even the S&Ps about 10 handles off of their lows. And the NASDAQ down 3 and change. I think you really have to key on volatility here again. before you get any type of up movement again. Watch for volatility to contract. If you get that volatility continues to expand, you're not going to get that. Bonds are down 2 ticks. Bitcoin, I know we got our friend Ryan coming in here in a moment, down 2,700, trading right at its lows for the day. You made a couple of other trades here just a moment ago.
I closed out of a CCJ strangle that we have been battling. If you look at that stock has gone from 50 to 125. I've had this trade on.
Yeah, from about, I mean, 50 to 90, 90 to 130-ish, back down to 117 and change.
It's not a profitable trade, but the stock is down $9 today.
I got to interrupt you. EMI S&P's unched.
What just happened?
I don't know, but that was one of the quickest moves that I've seen. Volatility up 16 cents. Nice little...
Did we get a taco already?
Maybe, but nice close in / M2K there. 635. Unbelievable.
Do I sell them out again? I don't know. What just happened?
I don't know. I wait. I don't know if there was...
I want to know what happened.
It was just too quick of a move.
That was crazy. And the NASDAQ really didn't...
NASDAQ really didn't...
I mean, it rallied like 50 handles, but not like 25 in in a single clip. 69.20. Wow.
Sorry.
That was interesting.
Yeah.
So I close out that CCJ
That said volatility back up 30 cents. There's something weird going on here.
You got the ick now.
Yeah, I'm getting the ick.
Took you a little bit.
Yeah, a little bit. My wrist is itchy. What does it mean when your wrist is itchy?
Your nose is itchy or something?
Right. I mean, when your hand is itchy, you're going to make money. When your wrist is itchy, I think you should close all more tight doors, get out of everything.
Yeah, I feel it.
All right, what do you got? Go ahead, continue going.
I sold the CrowdStrike puts. Stock is down 100 points from the highs. It does have earnings coming up. 350-ish, kind of the April lows. I kind of like the cybersecurity story. I think that one's getting caught up in the service stock kerfuffle here. Look at this moving. Do we sell it?
No, unchanged on the S&Ps now.
We're gonna do a little MES here because I get the egg too.
42. You just went back at 35, selling about 8 handles higher.
We get like 25. We get like another 75 handles in the NASDAQ. I would probably sell them there.
Enough out of you.
Sorry. My God.
Enough out of you. That's right. Q. What's up, my man?
Fellas, how's it going?
Always good to see you.
Always good.
Very nice. What do you got for us there? How's the trade desk?
Yeah, trade desk is good.
Little kumbaya moment going on there or anything like that?
No, but we're good. Everything's a little bit calmer than it been. And yesterday was a pretty active day.
Yes, even the S&P's down 100 at one point.
Yeah.
It was a positive call with China.
It was a positive what?
Call with China.
Yes. Oh, is that what it was?
Yes, it was a positive call. Which aren't we about
China?
a year? Yeah, China was supposed to get the tariffs like a year ago, right? And we still 90 days, and then it was like 180 days, and then it's like we forgot about them or something. What's it supposed to be now?
Bigger fish to fry.
Okay.
Yeah, they're always pushing stuff back. With the PDT rule, I think the SEC just pushed it back to April 16th.
Oh, no.
My! You're supposed to bring good news here, Q.
I know. I'm sorry.
That's still the beginning of Q1, right? I mean, right there. No, I'm sorry, beginning of Q2.
Yeah, which is, to me, disappointing.
Yeah, very.
Come on, no one wants it. Who wants this? Who wants any of this?
They put the carrot in front of us.
Yeah.
Yeah, but hopefully, because it could still theoretically be gone before then. That's just when some decision should be made.
I have a correction from Chris. The call, originally he posted that it was a positive call with China. He has given me the correction that it was an excellent call with China.
Oh, gotcha.
That is worth 20 handles in the MES.
That's right. There you go. Excellent.
Okay, there we go. And you guys were talking about confidence earlier. I think that's something super important that we see on the trade desk, and that's one of our roles as well. Is we want to make traders more confident in their strategies, because that also helps with better trade management and sticking to the plan. When you're confident in your plan and your mechanics, then that helps your P&L a lot, because you're not frazzled when things are going wrong. And having that confidence, having that reassurance that what you're doing is possible and feasible is a really good quality to have when trading.
I agree. Totally agree.
Good job out of you.
Yeah. All right. Let's get to the top 20 symbols and their IVRs. At number 1, you've got AMD 39, Palantir 23, SLV 89, Apple 15, Tesla 3, NVIDIA 27, Meta 16, GLD 81, Oracle 78, Microsoft 27, SMCI 18, Micron 78, IBIT 69, CMG 24, Robinhood 42, Uber 19, ENPH 41, SoFi 15, PayPal 37, and MSTR 48.
SoFi.
Good job out of you. Great job out of you. A list similar to yesterday. You always get somebody else to add it.
Yeah, I'd say that's like pretty common on the list. You know, PayPal. I don't know if it was on there yesterday, but we saw that move in PayPal, or probably was on there yesterday, but not
earnings.
Not a typical player.
It is the worst stock of all time. Do not touch that stock. Somebody needs to buy them or something. That stock is death to trade.
Yes.
Death.
Yes.
Death.
Yes. I'm gonna let you go. Is it okay?
Of course. Yeah, I got a job to do, fellas.
Yeah, go back and do it. What are you sitting here for?
Yeah.
Dapper young man too. Ryan, what's in the house?
What's up, my friends? How are you?
Morning.
I'm good. How are you?
Good.
Been a wild little market.
What's that?
Been a wild market the last.
Yeah, it's been a violently unchanged. We're going to talk equities for a quick second, Ryan. I'm so sorry. I know we're going to get to crypto in a minute.
I like talking equities.
Yes, me too. Violently unchanged on the EMA S&Ps. Violently unchanged on the NASDAQ, even though it's down 240. There's been upside, downside, back and forth, but the NASDAQ is definitely the weakest of the group, down a full 1%. Russell's unchanged, and the Dow is the strongest of the group, almost up 1%, 377. Volatility up by 25 cents. You've been scalping it pretty nicely too.
Yeah. I know Tom's listening. If he takes my violently unchanged and makes a T-shirt out of it, I'm suing him for everything he's got. That's mine. Okay, it's mine. Hear that, Tom?
We'll use Johnny Cochran.
Yeah,
We'll be good. What do you got for us, Ryan? Crypto, help me. Ethereum down 6% on top of.
He bought some Bitcoin at 77, and now he's mad.
Bitcoin 75, 74 and a half.
The beatings continue.
They will not stop.
Yeah, guys.
Beatings do continue.
Yeah.
I mean, it's weak getting weaker. Look, I think we'll go through expected moves here in a sec. I think the thing you want to key in on right now is vol.
Yeah.
So what we're seeing, we saw this when we bottomed last time. Doesn't mean that we're at the bottom this time, but in terms of the signals that you look for in the market, we saw this back at the end of November after the October flush. So what you're seeing right now on a short-term basis, if that's 15 days, 20 days, 30 days, is a very, very strong inverse correlation between Bitcoin prices and Bitcoin implied vol, which you don't always see. A lot of times we see that positive correlation, prices up and volatility is up. This is trading a lot more like you would expect in a risk-off move where vol was low coming into this. There's a bid for put options. You can see that in ETH and IBIT, IV ranks here. But I think you just kind of have to wait and see where does this peak. You're not at a 100 IV rank, not that you're going to get there, but I think you have a little bit more room to go in the vol expansion. And once you just see that start to roll over, that's where I would think you're probably closer to a bottom if you're trying to pick those levels. In my opinion, I'm in this for the long term. I've always said, it's 100,000, it's a 50 vol. Do we get 50 before 150? It looks like that's the path we're on, but I think you do see new all-time highs over the long term. Short-term trade, though, you want to be selling rallies in here until something changes. So to that point, if we actually jump ahead to the next slide, I want to just focus on a product. And I think that the CME updated this because the contract size was a bit different. But if you're looking to trade this market versus this long-term kind of core position, I've been trading the micro ETH futures a bit more. The symbol is /MET. It's 1/10 of an ETH, which at these levels, it's getting smaller by the day. But the notional value is $220 if we use a $2,200 ETH price. If you have intraday margin, I want to say this is sub $100, sub $50 per contract at a 10th of an ETH.
Nothing.
So you can use this as a way to size into it, right? For every $1 change in the price of ETH, it's 10 cents per contract is the way to think about that. So you're not going to make a ton of money per tick, but it allows you to size into it. If you want to get into a half ETH position, you want to see, do we take a shot at 1900, which is what the 1 week, 1 standard deviation move is implying right now. This, again, is going to let you get into that if you have a smaller account. So just wanted to highlight this given the elevated volatility and kind of the choppy market that we're in. This is one way to play it. Also a way to just play some shorts here versus your core position.
It also, just as like a little Johnny at heart, to throw out a 10 lot, which I just did. It just feels,
you can throw size and forward slash MET.
I feel like a man. I'm like, oh yeah, give me 10. You know, like I'm a big boy. Really, I'm just buying 1 ETH.
Yeah,
but it used $200.
Right.
We're in a portfolio margin, so I get a little extra, but it really capital efficient. And I haven't traded this in quite some time. I knew it existed. I know the ETH full contract is 50 coin notional. So it's like, it's one of those where the CME, they kind of missed the boat. Like, brother, give me like a 1 coin, 2 coin, 5 coin, you know, multiple.
But, this is much better now.
Yeah. And it trades. This
it does, yeah, absolutely.
Traded. Yeah.
So wanted to highlight that given the market environment that we're in. I think it's fun to trade. I think it's similar to the 1 ounce gold future, the very small, even smaller than the micro gold future there. So when you have some vol like this and you're waiting for an entry, this is a product to use to size into that. That said, if we go back and we'll just take a quick look at our updated ranges here. So like I said, vol has expanded on us a bit. That put option that I mentioned selling on Monday, it's a little bit more expensive by probably 40, 50 cents right now. So you're getting the volatility expansion. Bitcoin implied vol 52, ETH at 72. Get you closer to 100, but you're not quite there in terms of where we've seen the vol hit earlier, you know, on a 1 year look back. So that's going to be closer to that last time that we were down here at these levels back in November. So we'll see if we get back to that. But that said, what I do want to call out is within this downtrend, I mean, this is the first time that when we run these calculations, we've got a sub 70K on the low end of our 1 standard deviation move. Doesn't mean we get there, of course, but market's pricing that in, at least from a probabilities perspective. Same thing on ETH, sub 2,000. So personally, for just short-term trades, I'm working orders.
Yeah.
You're there, around there. Sometimes you get, you know, zero liquidity overnight. For these futures, they're of an MET, right?
You went back into / MXP.
Yeah.
I think you're more inclined to go back into it because you had a positive experience the last time you traded.
I went a little smaller this time.
Yeah, and I think that's prudent too because
those futures are not as liquid. You gotta. I put my price in.
They're small,
at 155, and I sat there. And they come to me. It's lower now, but just playing into this. I like this. I like this.
Yeah, you know, for XRP, it's held on to 150. It hasn't looked as weak, I suppose, as some of what you're seeing elsewhere in the market. And volatility hasn't really exploded. It's actually, as it's just kind of chopped here, vol and XRP's come in a bit.
Yeah.
I hope it bounces for you.
Thank you.
We get back up to 175 in short order.
Hope is not a trading strategy, but I'm hoping to.
Well, what's the range?
I got other hopes, bigger hopes places.
You could get to 168. That'd be a good trade off of 150.
Yeah,
on the future.
We had to stop there for a moment. The middle of your sentence got in the way of the beginning of his sentence. For him to tell you that he closed.
It's the freaking chair.
It's a chair. And he closed half of his MES.
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 And as you would like to say, I have a runner. Go.
And you have a runner. You have a runner now.
I want to propose this question to you because I talked about this with my dad. Crypto and Bitcoin specifically, small market. We talked about kind of how silver and gold have kind of been memed a little bit. It seems like it's a retail favorite. My friends are texting me about silver. It's there. It's on all over Reddit. Everybody's talking about it. You think, 2 questions. Do you think Bitcoin, or at least the idea that Bitcoin could get memed, it's a much smaller market cap. You think you could probably see that. Do you think the move to 125 was somewhat memed? Like, do you think that was part of that move?
I don't.
We're just kind of taking that out.
I don't, and the reason why is that when you were looking around at indicators of retail participation, right, you want to see is that kind of pandemonium in markets at times. You didn't see any signs of that. We saw the exact opposite. Google search trends were at multi-year lows. ETH and Bitcoin at 126 hitting all-time highs, and nobody seemed to be paying any attention. So I think a lot of what it was, and certainly at the top there, because we saw what happened next, all it took was a tweet about tariffs that we can't even remember to unwind $20 billion in leverage. So I think it was largely that. A lot of the narratives that we talked about, they came to fruition. They pushed prices up to all-time highs. They still exist structurally. I think that they're tailwinds. But in the short term, you probably need to find a new narrative. Maybe it's AI agents using blockchain rails for payments. Maybe it's just that there's an announcement that we're going to stimulate more. Whatever it might be, you need a short-term catalyst. You don't have it right now.
Yeah. Great talk, my friend. And as we've spoke about Bitcoin, it hasn't moved, but the market is moving. Even the S&P is down 10, 11 or so. NASDAQ down 290. Volatility up 40 cents to 1930. That's a little 2% move in volatility. I saw a little forward-sledge VX futures at 1930, trying to get a little bit of scalp there. We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages with Liz and Jenny.
They're live, and it's going to be electric because they're live from the CBOE. CBO. Live. Electric. Peace.
Back in 90 seconds. Peace.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condom.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together. Yep.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. CBOE is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the CBOE's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. We're back at the SIBO, ladies and gentlemen. This is my happy place.
We're finally back. People on our vacation asked us, we were with 14 friends, they all asked us, when are you two retiring? And Liz said, if I could go to the SIBO every day, I'd work forever. She did.
It said, not exactly. She takes my words and twists them a little bit, but that's okay. That's okay. I'm going to run with it. I said I would do this job forever with Jenny. Remote. I'm just kidding.
Anyway, it is a wacky Wednesday. Supposed to have been kind of all over the place.
Down 14, currently down 14.
They're up 5, down 20, up 5, down, now, yeah, up, down, up and down. Markets moving all over the place, but a narrow-ish range.
Narrower than yesterday, for sure.
Yeah, so far. I decided to go with just the Iron Condor today because with the back and forth, I didn't know which way the market was going to go today.
We couldn't get filled. We tried the put spreads. I tried the put spread, tried the put spread, and it kept getting away from me. I didn't get filled. If
we would have got into that put spread at 9:05, we would have been out because we were down 20-something and then popped back up to unchanged.
Yeah, we did.
But we didn't get filled. It was, do you like my jazz hands? We had one person.
You still talk like this. You still look like this.
We had one person in our group. Every time we took a picture, she would say, "Jazz hands, ladies." I don't really take pictures like that. It's not my thing.
No, you just stand like this.
You don't need to tell me, Jazz.
You just tell Jenny jazz hands. Oh, God, that's true. Okay, we do have a lot of stuff to do. We've got an SPX study because we are in the SPX pit, so that's why we like to do the studies on the SPX while we're talking to the market makers behind us. We also are taking live tweets. We got through half of our account, and we've got a ridiculous amount of earnings today.
We do, and we're not on last call, so we're going to look at the earnings today during the show. So we have a busy day. Do you want to start with?
Want to manage our yesterday's trades? I'll follow your lead.
We'll manage what we need, what we can manage, and we'll leave what we. There's nothing to do with. Some of them there might be nothing to do.
Okay, so we jump in the platform. I'm just going to sort by days open. I know CMG was not. CMG was a while ago.
No, I got it. These were our earnings trades.
Okay, hit me with it.
End phase.
Oh, we're not going in alphabetical order? We're not doing CMG first?
I just went from top down from yesterday's trades.
Okay, fine.
In the activity.
Okay, end phase.
Enphase, we sold the 33 put in the 2-day. Enphase is up $13. Just leave it. You don't even have to buy it back.
I'm just buying it back for a penny.
Just in case. Just in case. So Enphase.
Filled. We paid a penny. Okay, Enphase gone.
All right.
Next.
AMD, we were toyed between the diagonal, and I went with I was afraid to risk too much, so we went with just a baby 250 wide call spread for $1.18, and AMD is down $36.
I don't know why I can't whistle. It's probably because I'm too tan.
Woo! I don't know. I can only whistle over a bowl of soup.
That's the weirdest thing I've ever heard.
No, because the steam coming up from the soup kind of helps. I think somehow blow on soup. If you can't whistle, try blowing on soup.
That's a reverse whistle, isn't it?
I don't know, but it's only. Try to blow on some hot soup and see.
Okay.
Anyway,
we're gonna leave AMD.
Okay, but on earnings, it makes me think if you get something that's down $36, down 15%, let's take a look. We've got a 37 IV rank. Maybe there's something new we want to do in AMD.
Possibly. We have so much stuff going on. We can circle back around to that. Let's manage everything. Okay. And then we'll circle back around to AMD.
We'll circle back. Uber.
Okay.
Uber.
Uber. I just want to see something real quick. Now, if we're going to do anything in AMD, do you know what we could do?
I would go to March.
Well, hold on. Difficulty loading. I was just going to do something like this.
Oh, like a 9-day, 16-day, 217 calendar, $1.65, in case AMD pops a little? Sure. Who doesn't love a good 217 calendar? So I had to share a locker with Liz at the spa. Because
everyone had to share a locker with me at the spa. And then when you open the locker, you're like, it looks pretty crowded in here.
Well, but when I got back, she wasn't there. You weren't there.
Yeah.
And I couldn't remember the code to get into her locker. And I was panicking, like, all my stuff's in there. I need it. I can't get in the locker. I don't remember the code.
You could break the code faster than anyone I know.
I don't know. After 15 years of doing 217 calendars, I don't know how I couldn't crack that code.
Ding, 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 ding. Oh, we've got the big order. This is the big rolls from Interactive Brokers.
Oh, it is?
Yeah, remember?
I'm seeing thousands of contracts going up in the 70-10 call in February 5th, 70-10 call.
I don't have the SIBO thing up. I could do that now if you want to.
Take a look at that. February 5th. Yeah, there's a lot. It's busy.
What do you want to look at?
The screen is bouncing
February
all over the place.
5th, 10 call?
70-10 call. 7010.
My internet is very, very slow.
I see that.
It's filling
in.
in.
There it is. There, it's filling in. I wonder, in the open, it's filling in. It's a little slow to load, but
it's giving you the at the monies. That's all you can trade today.
I'm going to guess there's someone buying them back. I don't think there's someone buying them thinking we're going to shoot up.
They are. I mean, spoons are now down 24. Something is happening. Now, we do know the nuclear stocks are down today.
Yes. Breaking news. So let me tell you
what Korea's putting a plant or something. Trump said Korea could put a plant here. A nuclear
stocks down after Trump suggested South Korea build a plant in the U.S. So they're getting hit. Oklo's down 12%. SMR. I wonder what percent that's down. Luckily, in this account, we do not have a nuclear position right now.
No, we don't. Which is
good. So with it, Oklo down 12%, and where's SMR? SMR down 10%. Honestly, even Oklo at the 56.60 level, that's really easier to trade at that price point.
It is easier to trade at that price point. So that's the one thing that we do know that is happening.
So that's something on our list of let's maybe look to sell puts in one of those.
I do not mind. Let's go Oklo only because it's what we've been trading in our own accounts. So if you're going to sell puts, go to the 44-day. Want to see what it is? I'm going to see the $2 put at the 50 level. It's not bad.
It's not bad. So selling that 50 put uses $1,200 in buying power. We're getting $228. 50 put in March. I ended up doing Bob on Fire's.
I have the 50 put in.
I was going to say way out in
January
Jan.
2023.
And I got the 50 put. I'd rather have the 50 put in March than the 50 put in January.
600 days from now, we are the 50 put.
Right.
Yes.
So.
Okay.
It is very busy here.
It is very busy today. It's getting more busy. Spoons down 26. Let's do the 55. I brought it up a little bit to take a little bit of profit out of it.
Okay. I think people are worried. Is today going to be another yesterday? Are we going to be down 100 by the end of the day? And then bounce back to only down 60?
It was that was what happened to us yesterday during our show. We were orderly going down.
Okay, so we're working on selling those puts in Oklo, taking advantage of the nuclear stocks being down today, vol popping,
I think we're filled. No, we're
stocks
working.
down.
We've got it.
All right, we've got it. I'm gonna push it out. Push it out.
No, let's go to all the rest of the earnings. Which other ones do we have? CMG, I want to go to. It's not on the list. We've had it on for 20
Uber
days.
was next.
Wait, CMG's on top. I'm just going to do that real quick. We're going to close this put for 40%. It's down. We had a put.
Now,
We never moved it.
This trade we did 20 days ago. This was not an earnings trade. This was a trade we did 20 days ago.
It was our earnings trade, though. They had earnings yesterday.
I know, but we put it on 20 days ago.
Yeah, but that's why it wasn't on your list. It wasn't on the
Yeah,
list.
it wasn't on. That's why it wasn't on my yesterday's list.
Yeah. Okay.
That's how I missed it. Okay.
Next.
Enphase.
We already did
we
Enphase.
did that?
Yep, we did that first.
Uber.
Okay, so here we go. Now we've got, this is a put spread. It's up slightly. We're up $6. Close it. We're down.
Okay, so Uber's down 264. Our put is the 74, and it's trading 75.26, and we collected 88 cents. So our break even is really 73.22.
I'm closing
it. Or 73.18. I would leave it. Like, if this were mine, I'd leave it.
Because we didn't make any money on it. If we get what we had yesterday, where spoons are down 100, this is going to break our. We can put a new trade on if we want in farther out in time.
Yeah, let's look at March.
I don't mind having a trade on an Uber, but it's not going to be this one. You know what I mean?
All right.
So if we're going to go to
boss.
March,
all right.
yeah, that's right.
All right,
if
boss.
Because if it goes down $1, then we're just rolling it with our hands tied instead of we could lose money on a trade instead of taking a little bit of money on a trade.
Isn't that a song? Dancing with our
we're
hands
dancing
tied.
on the ceiling.
No, dancing with our hands tied. Isn't it? I think there is something. I don't know. Forget it. Go to 44 days. Sell whatever put you want to sell.
So if we were going to sell, we can go to the 70 put in the 44 day. It's using $900. That's not bad.
No,
It's
that's
$5
not
down.
bad. That's not bad.
Okay. We'll see if we can get filled. These are a little bit wide markets. Okay.
Yeah,
We're filled in the closing, not on the opening yet. Okay, what else?
And then LUNR, our Lunar. We had that like
Lumen.
kind of weird Lumen. We had that weird butterfly, broken wing butterfly on or something. We took it off and replaced it with a long call. Lumen's down to $1.58. I would honestly, I mean, this is worthless, but I would sell puts in here if there's anything to get. We had in March. You have to go to March. Can we? Nothing. 83 cents. That's why we did that big lizard.
That's why we had a big lizard. We can change this
yeah,
back
sure.
to
We
a
could
big
do like a
lizard.
7-8.
We had the
Or
8.
too bad it wasn't a 6-7.
6-7. We had the 8-9, so it's good that we switched it. Let's swap it back out, don't you think?
Yeah, 7-8 big lizard. There's only $200. Okay, you are whipping through these. If I am apologizing to any new viewer, new trader trying to follow along, she is whipping through these trades. We've been on for 10 minutes and we've gotten through 10 things.
Well, you have not done your job by pushing them out.
I can't keep up with you.
Okay, but if we're going to put on a big lizard in Lumen in the 7-8, you sell the 7 straddle. TP's in my brain. He's like, just get to the trade.
I can't keep up with, I can't even push these out. If I take the seconds to push these trades out to the follow page, I won't even be able to catch up.
Did we close AMD? We only did 3 things.
Today. 1, 2, 3, 4, 5, 6 trades in already, and we are working 7-8.
Yes, that's right. This is a show about trading.
I can't take it. Do you girls want to do this show forever? Yes, forever. Maybe if Liz slows down. I slow down a little bit as I age.
Oh my God. So on the girls' trip, they're like, well, Jenny's got 2 speeds, neutral and reverse, because she moves so slow. I was like, it's okay. We make each other. We come together. Okay, we still have our Lumen in. I'm going to leave that one. If we want to put something else on in Lumen, we can, because we've got the 7-8. I'm going to leave the 1 because it's worthless. And what we had on in Lumen, which is going to be pushed through, we just closed the 8-9 yesterday, and we put on the 1 in the money, or what the 1 call. It's a full loss, and now we're just going back to selling premium.
Thanks for slowing it down a little bit.
I think our viewers can follow this.
No, I know they can't. I know they can't. I know that when you whip through 11 trades in 7 minutes, and we've already talked about nuclear, and I already have our nuclear trade on, nobody is following along.
If you have any comments, questions, concerns, that's Jenny, Jenny at tastylive.com. Do you want to put the lumen on or not? Yes?
Yeah, sure. The Big Lizard for $1.17 only uses $232.
Yes.
Yeah, of course.
So this is what we have. It's in the 44-day. If you want to see what we had in Lumen before, hold on, activity. Lumen.
I wish one day you would go as slow as you possibly can, just for fun.
Oh, I don't know what I'm saying if I'm moving in slow motion. And my brain goes faster than that. Okay, so here's what we had on. And we rolled it. So we had the 8-9 Big Lizard. We rolled it to the 8-9 Big Lizard farther on time. We had January, then February, then we closed it for a small win.
You don't have to go back to what we did of it.
This is what you want. Then we closed it for a small win. Then we switched that into a long call.
When you're putting on trades, here's what I want you. When we're putting on trades, when people are trying to learn how to put on trades, just slow the pace a little bit.
Okay, we talked about this. Are you a teacher? Do you consider yourself a teacher?
I want to say, when you started working down on the trading floor at the SIBO, who was the teacher of the options trading class that you took?
That was you, but on this, are you a teacher?
So was I ever a teacher?
Are you a teacher now?
Did I teach on this trading floor traders how to trade?
You did. You did teach me. But did you know what a Big Lizard was back then?
Doesn't matter. Was I a teacher? The question is, am I a teacher?
Well,
I was.
But we talked about this with our friends. We are actually not teachers. We are two people that are trading in our own account. We are actually not qualified to teach anything.
Speak for yourself.
We're not. That's the whole point. You are not registered.
No, I'm not. That doesn't mean we're not qualified to teach something.
Really?
It's like I could teach I taught my trading class that would come to my house.
Is that advice giving?
I didn't give anyone advice. I didn't recommend any trades.
True. Okay, I want you to walk slowly through this. Go ahead.
No, just ship Lumen.
I'm trying so hard to comply with what you want right now, and I don't know what you need.
I just want, when you put on trades, to slow it down a
That's
little.
what I'm saying. Walk me through Lumen.
That's done.
I didn't send it.
Just send it. We've got other stuff to do.
Oops.
All right. Now, did you push it through?
I didn't send it yet. There we go.
We've got other things going on. Somebody wants to know, you mentioned this. You said there's the big role in Interactive Brokers. They want to know, what is the big role? That's what somebody asked.
So all we know is when Interactive Brokers is behind us, they have one big, we didn't talk to them today, but they have once a month, they have a big
No,
role.
I thought it was quarterly.
Maybe it is quarterly.
Yeah, I thought it was quarterly, but you know more than me.
No, the Keith behind us, we haven't talked to him today. So a lot of times when they gear up, they have one big client, from my understanding. So when a lot of the guys around them, I'm just making assumptions because that's all we can do down here because we're not part of the trading. We're not actually trading with them.
So I don't know. You said that, and Running Marvel wanted to know, what is the big role?
So we don't know. You can look. It's all out there, so you can see what the.
What do you got, a mouse in your pocket?
SIBO volume is, but.
We. I have no idea.
No, it's all out there, but we are not part of the trading community. We are not trading with the traders.
Yeah, we're not trading with the traders.
She is not trading with the traders.
I
there
don't
is
know
no mouse in my
what
pocket. Jenny is not on that ticket. We are not on that ticket. You can just make extrapolations. You're not a trader.
When I was in college, someone would always tell stories, and they would always say we, even though it should have been I. They were always talking about themselves, and they would say we. And he would always say, what, do you got a mouse in your pocket?
Yeah, we. We are not part of the trading community.
All right, here's another one.
Should I go to Twitter or no?
We don't have to. I'll guide you here. So the beautiful Fozzie is coming in, and she gives us the heads up because we love our Twitter peeps. Send us a tweet, include the hashtag LIZJNY. She's coming in and saying, "Hey, ladies, check out the moving soybeans." Ooh. I added the "Hey, ladies." She didn't say that. She said, "Check out the moving soybeans."
CS. Wow.
Yeah. Look at that. Look at that soybeans move.
So it got as high as, wow.
Now, can you do me a favor and type in $/CS? As fast as you can.
I'm not. It's still a big move.
It's still a big move. Sometimes when you look at a longer term chart, it doesn't look as big. Okay, yeah, we're good. So
no, it's still a big chart. It's still a big move, Fazia.
But here's what I want to notice the move in early October. So you see that move in early October?
Right here?
Yeah.
This one?
No, not over. To the right? There. Okay, so there where it starts to move. Where it starts to move.
Oh, up?
Yeah.
Or not down?
That's where it starts. Where it starts moving up, and probably, by Halloween, when you're getting, like, see how that, like, my point is that when these start moving, they keep moving.
Any commodity, I think, when it gets steam under it,
They keep moving. So there might have been a point there where we're like, whoa, look at that big move, look at this big move, look at this big move. And it just kept going and going and going. So I get concerned when I see like day one of a big move.
Yeah, I mean, that we didn't get that in silver. We got the move down and it kind of reversed a little bit, but it's not back to where it was.
I'm kind of glad it's coming back. But we need to get, so soybeans is having a big move up, but in my mind, I would wait to see if it keeps going.
Yeah, I mean, I appreciate her giving us the move.
Or maybe when you get a big move, you almost
ride the wave.
Sell a put spread, which might sound like opposite of a tasty trade contrarian.
No, but so the tasty trade contrarian, their notorious rules, for lack of a better term, or general guidelines, are done in SPY.
Well, I don't know. I don't know if it's...
They're not for the commodities. The fade the move, the do this, the do that. And because the volatilities don't follow the same rules in SPY as they do in ZS. You'll get a huge move up in ZS and you'll see an IV rank higher. You don't see that in SPY.
And
if SPY gaps up, the IV rank is going to be lower.
I don't necessarily think Tasty Trade or Tasty Nation or Tastylive is a world of contrarians. I don't necessarily think so.
It's a vol contrarian, meaning if the stock spikes up, the vol goes down.
Right.
That's like your standard. That's not true in commodities.
Right. So honestly, I see that move up in soybeans, and I'm tempted to sell a put spread.
You could.
And Fauci didn't give a trade idea. She just said, check out the move in soybeans.
No, a baby put spread. Oh, that's only $50 profit. I have to look at these. So a $20 wide is not a $20 wide. It's actually
$10 wide.
A $10 wide.
Yeah, $20 wide is a $10 wide, 50% multiplier in soybeans.
And you're only collecting 148. I don't like that.
No, you'd have, yeah.
There you're collecting just under 250.
You really have to move it up, and then it's pretty tight. They're up $30 today, and you're breaking. I don't love it. I don't love it. What? Can you do me a favor and just go to like a shorter term?
Sure. There's only 16-day. There's two.
Okay, just go to the 16-day for me, and
look at their two different prices, by the way.
Right.
The 16-day is different price.
Yeah, the 16-day is this current ZSH. I just want to see what's the smallest, like buy the 1096, 1098 call spread. I just want to see how much.
1096, 1098 call spread?
Yeah, buy it. So buy the 1096 call, sell the 1098 call. How much is it? It's only $43.
Yeah, but this has $2 wide strikes. The other one had 10.
I see. So sometimes, and I did this in, I don't know, I'll sometimes do this in commodities where I'll just buy like a little call spread, more narrower, thinking we might get some continuation of this movement.
Well, you could make it a little wider. Okay, so.
Yeah, and I'm not saying it's going to keep going up, but sometimes I will do this in commodities. Just try to again ride the wave if it's just starting. And who knows, soybeans might turn around, but oftentimes we see it keep going.
Did corn and stuff go with it? No.
No. So just soybeans.
Just soybeans.
Well,
if we know the soybean news, if anybody knows the soybean news, put the hashtag LAZJNY.
So I think the put spreads, and the reason why I would do buy a narrow call spread instead of selling a put spread is because you saw those put spreads. We were, risking 850 to make 150. Where I don't want to risk the 850 in case it does drop back down. But if it keeps going, I don't mind risking a couple $100 on a call spread. That's just kind of my thought behind it.
No, I don't think it's a bad thought. I don't know. I'm not a huge soybean trader, so I don't really have a.
No.
If you want to put the call spread in, we can.
No, we don't have to. I didn't go very far with our 6A Aussie dollar.
Oh, that's fine.
And that continued to go. So go to the chart. Someone had, I think it was Glenn or someone on air talking about the Aussie dollar move and how it was going up and up and up. And we did a downside big lizard in here. And if you go to the curve page, you can kind of see where it was. And we thought at that point, and at that point they were talking about how it wasn't extreme when we put it on. So you could see our center strike was at that 0.685.
Yeah.
And where's the flag? Where's it trading now?
Right here.
Yeah. Right.
We wanted to continue the move upwards, and you can see that because we collected it, saying, and if it goes down, we get $110. But if it goes up a little bit more, we'll take more out of it.
And it blew through it.
Yep. It's not that bad, though. This max loss is 3-something. And we're right there. We've got 3 days left with it.
I know, 3 days left. I personally think often in these situations, we'll hit expiration and we'll take the full loss, and then a week later, 2 weeks later, it would have been a nice winner. So I think when this is about to expire, I would just sell a call spread to keep our Aussie dollar position going.
Well, it is. The other thing I was going to say is when you look at this, hold on, let me go to chart. This is natural gas too. So I do trade natural gas. This is one of the only commodities I'm pretty familiar with. Like, I'm familiar with natural gas and how it moves. And I think sometimes it comes in at the bitter end.
Oh, yeah. At expiration.
Yeah, so that's why I have to find risk in these. And you'll see at expiration is when you get like a massive move to something. And I don't know why.
So I don't know what to think, but as far as our Aussie dollar, I would say leave that,
right
and
now.
then on expiration day, sell a new call spread if it hasn't come down yet.
Yeah, for sure.
But as far as soybeans go,
no,
I don't know what to do. I don't know what to do in there. I didn't like the risk reward on the put spread.
No, and she didn't give that. I think she's
No,
just
she
saying,
didn't. No, she didn't give any trade
just
idea.
saying, look at the move.
Look
And
at
we
it.
could
Look at the move. It's having a big move. Okay. Do you want to jump into the study that we have today?
Sure.
Right now we've got SPOOs down 18.
So we have the study. We have a lot of earnings on deck too. So I don't care what we want to do first. But the study, here we go. This is the 0DTE breakdown January performance analysis. Is this the wrong one?
0DTE breakdown. No, this came from
This is the right one.
Yeah, that came from Kai.
Okay,
we
good.
had a couple studies, one from Jacob. We love our research team. They're great. And we missed some of these studies, so I think Kai sent this over to us last week, but we were out of town.
We were. I think we got it last Thursday. So this is, for some odd reason, I was thinking it's the 2025 breakdown. I was thinking it's February.
No. We had one. I pulled up one that was like another,
2025 year in review.
2025 year in review, and Liz said it's February.
It's February. We can't do that.
February.
Okay, 0DTE breakdown January performance analysis.
All right, January finished with a plus 1.08% monthly return, largely driven by a strong 1.5 rally in the first week. And yeah, that first week,
That first week.
Yeah.
After that early move, the following 3 weeks were extremely tight on a weekly basis, averaging roughly 0.4% per week. And you can see that chart there.
Okay. And then you could see the VIX is on there too. So you can see the VIX kind of, you had a couple.
And this is what I was talking about with the commodities when you're looking at this. Anytime the market comes down, you'll see the spike in the VIX, and that's what you should see. They have an inverse correlation, meaning volatility in SPY is mean reverting. It is not in the commodities.
Right. I mean, we've seen and the metals keep going up, going up, going up.
And the vol keeps going up and up and up with it.
Now, mean reverting eventually, but you were saying how it does just because it's going up doesn't mean the vol is going to come down.
In
the commodities.
The vol is mean reverting in SPY, SPX. Because if the
mean reverting just means it's going to come back to its average, and I would say that holds true everywhere. That holds true everywhere.
I guess I'm using it wrong. What is it called?
Yeah. The inverse
one goes
relationship.
up, one goes down. Inverse relationship. Yeah.
But as far as mean reverting, all vol eventually comes back
to its
in.
average.
It doesn't say metals aren't going to stay crazy forever.
So Tasty doesn't say things are price reverting. They're volatility reverting.
Yeah.
Yes,
Which,
that's the big difference.
Again, in the metals, the vol will eventually come in, but
the price won't. You don't know. The price doesn't necessarily know. You don't necessarily know. Don't necessarily know. Okay. Number 2.
All right, January experienced a lower average daily range, lower realized volatility, and a lower average VIX when compared to both other months and historical January averages over the past decade. So what did these market conditions imply for 0DT in performance? So my guess is if we're having smaller ranges, lower moves, good for the iron condors in the SPX.
Yeah, it does look like that.
So what do we see
so that's
here?
the average VIX. I was just trying to get my bearings. The the orange is the average VIX. So the average VIX of all Januaries, that was the lowest, one of the lowest ones, because of all Januaries.
And if you look at the SPX daily range, so you've got January 2026, the SPX daily range is the lowest compared to all Januaries and then all months. So we had a really quiet January.
It didn't feel like it.
I mean, I guess so. I don't know.
It didn't feel like it, but I guess feels like temperature could be something different. I guess it's what happens in your
It's like when we were in Mexico and it said it was 74, feels like 58.
Yeah. It was like a backwards. So let's keep going forward and see what they're talking about here.
All right, what do we have here?
The 20 Delta $20 Iron Condor, 25% no stop loss, delivered exceptional consistency throughout
profit,
January.
25 profit target, 25% profit target, no stop loss.
Delivered exceptional consistency throughout January, achieving a 100% win rate with an average P&L of $166 per trade. Most positions were fully managed before 11 a.m. Central Standard Time, making this one of the strongest months on record.
Now,
we need to be very crystal clear on this.
I appreciate this, and we did see that January was had
and you can see it's
lower,
very lower.
Right, a lower average daily range. But I do know that we've had plenty of people who had losses in January on their SPX trades, but this is taking only 25% profit target, 100% win rate. That's surprising to me because we did have some busy days in January. But again, if you're only taking a 25% profit target and putting them...
I'm just going to show this, SPX. Just because I want to put my money where my mouth is. Hold on. Table, 0 to T. Now, granted, you'll get a little bit more, but the 20 deltas then come in as we do this.
Yeah, so 20 delta.
20 delta, $20 wide. 20 delta, $20 wide. So you're getting $6. So 25% of this would be $1.50.
Yeah, $1.80.
Yeah.
Yeah, right? 6, 120. 60, oh yeah, 60, 120, 150.
Yeah.
Yeah.
So if you're taking smaller profit targets, that's what we're saying. This was taken, the small profit targets on the 20 deltas.
Yeah.
25%.
So 25%. Now, then those were that was the study of the 100%, no losses. But I don't know.
And it says that with an average P&L of 166 per trade. That makes sense.
Oh yeah, that makes sense.
Yeah.
So oftentimes we do one side, and I'm looking for 50%. When I'm doing just the put spread, I'm looking for 50%. But today, and there are mechanics, but we don't always follow them. Today I put on an Iron Condor. Usually I just do my put spread. Today I put on my Iron Condor, but I was kind of a baby. I didn't want to take a lot of risk, so I made it very narrow. And because I made it very narrow and didn't take that much risk, you know what I said to myself?
50%?
100%.
Well,
today I'm leaving this to the end of the day.
But there's got to be a common sense line. If you have so little, like say you collect $1, you're not going to take 10%.
Exactly.
Yeah. So you have to. There is some kind of common sense line. But this was pretty interesting.
Making this one of the strongest January, strongest month on record. Well, now I don't feel so good about my. I was happy with my SPX results in January, kind of proud of myself, but I guess everyone had a good.
When you're doing I do think that
I should have done better.
When you're doing the Iron Condor, you have to take a lower profit potential.
Right, you have to take a lower percentage.
Lower profit potential. Okay, let's keep going forward. So January's average entry premium aligned.
But don't you remember day one? Like day one, first day of January.
Yeah.
Yours all lost.
It was all put spreads.
All put spreads.
Yeah.
All put spreads.
And all aggressive ones.
Yeah.
And all aggressive ones, right? So January's average entry premium aligned closely with the long-term average, yet overall results were materially stronger across several metrics, including returns, success rates, and drawdowns.
Like yesterday, I wonder how...
But you're right. I would like to see the Iron Condor on that day.
Yeah. No, I remember there were days where it was like we were sitting here watching the market and saying, geez, I hope we need to be above this, and seeing people strikes and seeing where we ended the end of the day.
Our apprehension here is I hesitate to say 100%.
Yeah, I hesitate to say like they were all winners.
I hesitate to say 100%.
Because I know we had some viewers.
Because it didn't feel like this. Didn't feel like this to me. This January did not feel like that to me. We had some high VIX in January too, didn't we?
I mean, I want to look at this. You can keep going with the study. I want to look at something.
Okay, so then here we've got the average entry credit, which is right there. January average P&L per trade. January's average P&L per trade was 166 because the 100%, where historically it's 24.31 or $24.31. I want to just keep going. I want to see some. January generated a total profit of $3,155, 7 times the historical average, ranking as the second best month overall, trailing only to last November. The month unfolded in an environment of moderate implied and realized volatility rather than extreme conditions, reinforcing the positive relationship between elevated IVR and realized P&L. So they're saying 100%, you got $3,155.
Okay, go to the trade page. Go to the platform.
The platform?
Yeah.
Okay.
And go to January 6th. Zoom in on January 6th. You know, you're just using that plus that zoom on the top. January 6th.
Hold on, I'm almost there. January. Right there. So
And-
January 6th, the high. Well, it doesn't look like that violent of a range.
What is high in the open? 69.08. Close 69.44.
The close was 69.44.
Well, on January 7th, I was just trying to remember, because I do remember some of these wild days. On January 7th, our Jack Tucker posted, sorry, no details other than down 18,800 with his 0 DTEs from the day before, which would have been January 6th.
Yeah.
Or maybe it was that big red bar day that, I don't know. But I know we've had days where some of our viewers struggled with their iron condors in January.
I struggle with my trades in January.
I mean, and I'm not sure.
That's why we're very
I
apprehensive
hesitate
about
to
things.
say like 100% of the days in January these all won.
I know. Okay, I agree too.
But I guess the study is managing them at 25%.
The study is if you're a robot, putting them on at 9, managing them at 25%.
25%.
Yes, managing them at 25%, or off at 11. I think it was too. No, because they just took they all hit their win. They all hit their profit.
Okay. The best trading day, 265 on January 20th, occurred on the worst market day with SPX down over 2%, and the VIX spiked to over 20.
With the trade reaching its 25% profit target within 1 hour. Wow. Okay.
Jeez. I bet they're putting these on at 8:30, not 9. Did it say 9? No. I bet it's 8:30.
It's got to be something.
It's got to be.
Different.
It's got to be. If you're getting it out in an hour, you're putting it on at 8:30.
And then here we go. And now 25 versus 50. Managing positions at 50% profit produced a higher average daily P&L of 184, but required significantly more holding time and an increased exposure to losses.
Okay.
The incremental gains came at the cost of lower efficiency and higher risk.
I see. So yeah, there was that. There was that big losing day. There was a losing day in the waiting for 50%. And I do think a lot of our viewers wait for 50%.
This is Kai or Jacob? This is Kai.
This is Kai.
And it's probably 8:30.
Yeah, that's what, if it were a Jacob study, we'd know he'd put him on at 9. I think this is Kai, and he might have been putting him on at 8:30.
Yeah, because these outcomes are definitely different.
Yeah.
And then here, watch this though. Put spread strategies have also benefited from the January condition. And I know this is not true. With nearly all
Put spread strategies also benefited from. Yeah, they benefited from January conditions. I put on put spreads in SPX like baby ones again, but my P&L is pretty good. I mean, I would say if I took what I have divided, I won. If I take my profit target of my put spreads, I basically won. I don't want to say won 10 times, but like I have as if 10 of them were winners with no losers. But I know I did more than 10.
Yeah. You did them every day.
Right. So like I have as if, imagine I just did 10 and they were all winners.
Yeah.
That's how my January P&L was on those SPX trades.
But you were taking a little bit more profit. That's what I'm saying. They have these in here. Take a look down here. They have iron condors, $20 delta, $20 swings. Then they have put spreads, 30 deltas, $30 wings. The put spreads, they changed the put spreads.
Where are you reading that?
Down here on the bottom, like right here.
Oh.
Iron Condor,
Yeah.
20 delta, $20 wide. Put spread, 30 delta, $30 wide. Put spread, 30 delta, $20 wide. Put spread, $20, $30 wide. They do all the put spreads, but they never
There's
bring
a
put
lot
spreads
of
up.
info in this one slide.
There is.
Yeah. Kai put a lot of time into making this.
He did.
With all the colors and...
Like I said, my only apprehension is saying 100%. It really is hard for us to do because we know that there's lots of other... If you were a machine and you put this on, I guess, maybe, right?
Well, if you look across that one series,
Which
where
one?
it's like the win rate, well, right there, where win rate percentage, you see a 20 delta Iron Condor, 20 delta put spread, 20 delta put spread, 30 delta put spread. They were all 100% win rate.
Except for your 30 delta, $20 wide.
Yeah.
And then P&L per hour, look at this one. So you can get out faster with just the put spreads, you can get out faster. And it makes sense because your 30 delta, your $30 wide is the most aggressive put spread out there.
Does seeing this study, is that going to make you change anything you do?
Well, and this is why, maybe.
I still think...
But I like the big...
I'll leave it on this. I won't go to full screen. We can leave it on this.
I just want to go to SPX because I want to show you something real quick. So they're looking at 30 delta, $30 wide.
But again, I think Kai's putting these on at 8:30. It's different at 8:30.
It does make me question everything we've ever learned.
She's kidding. No, but here, like, my takeaway is not just from this, but it's kind of like you take what the market gives you and you kind of roll with the market. So January had this amazing performance month, but that doesn't mean February is going to be the same.
No.
And we started off February with some choppy days and with, SPOO's down 100 and like today I did something different than I did the day before. I kind of changed my trade slightly based on what the market's giving me.
Look at how crazy the first day of February was.
Yeah.
Where's the high to low? The high was 69.92 and the low was 68.70. It's a big move. I mean, this February, right here, the move yesterday was violent.
Well, look at those big bars. If you go back to the end of January, those red and green bar. Yeah, no, move over. No, to the end of January.
Yeah,
keep going, keep going, keep going.
Oh, I see. Right there.
Like, go to open and close.
That's January 20th.
Right.
That's the day he said that everything was fine. He said it was the biggest winner.
January 20th?
Yes.
And what about the 21st?
Hold on, just let me show you this. Let me go back.
Oh, yeah.
Best trading day, the best trading day.
265 on January 20th.
The
occurred
worst
on the
market.
worst market day. Reaching its 25% profit target in 1 hour. I don't know. I'm flabbergasted by these results.
Honestly, though, but I think that these are just a menu. You and I have taken, and what I like is I've been playing with less of a drawdown. Now, granted, it took me out on day 1 of January.
Can you go to the
last one?
Yeah, I just want to look at this one more time. You could keep talking. Go ahead and talk. I'm just looking at some.
No, I've been gravitating toward less of a drawdown, which means narrower wings and bringing it up, and that had been working in the past.
Mm-hmm.
My actual results are not reflected in 100%, and neither are yours.
No, not 100%.
And we were just doing the puts.
Just doing the put spreads.
Yeah.
Mm-hmm. Right.
Yes.
And trying to take 50%. Selling put spreads and trying to take 50%.
Because it's because of what you were collecting, not because you weren't going to like a 30 delta, $30 wide. You weren't risking $4,000 trying to take 50%.
No, I was like doing 2 put spreads, collecting $2 and trying to take 50%, so I'd get $200.
Correct.
So my goal was $200 a day, and at the end of the January, I had $2,000, which means
10 winners.
10 full winners. 10 full winners out of.
With some losses in there.
Yeah, so there had to be some losses
scratches,
in there.
some, yeah.
There had to be some losses in there.
Yeah. So like I said, our hesitancy is the 100%. I just want everybody to be, trade responsibly, for lack of a better.
Yeah, right.
And don't think past performance is indicative of future results. If this was done in January, to your point, and you said it earlier, it doesn't necessarily mean that it's going to be the same.
It doesn't mean February is going to be the same. It doesn't mean like, oh my gosh, look at the win rate, 100% on the 20 delta. $20 wide, 20 delta, 20. Like, it doesn't mean that's going to repeat itself in February. Could January have been an anomaly?
Maybe.
I'm still going to do these trades, but I wouldn't just start loading up because it works so well in January.
Yeah, and things work until they don't.
Okay, so you could pop into Twitter because I know what, Fazia had told us about soybeans, and now...
Do you want me to go top down?
Yeah, go top down. She was giving us a trade idea since we didn't have one. Buy an at-the-money call spread in soybeans in the near month and finance it with the sale of a call spread in the next duration. Nice idea. That would work. Or even sell an iron condor in March to finance the long call spread in the near month. So Fazia's got great ideas. She's a great trader, and she's very clever. She's always coming up with
She's also right here, right? Can't we find?
Yeah. Let's see what she's up to.
So let's see if we can just press it.
There
we
she
go.
is.
Let's see if she put it in. There it is.
Oh, soybeans. So let's see what she did. Oh, she's got a roll in.
It's a roll, yeah.
Because she's got one sell to close, one buy to open.
Yeah, but so she's got a roll in. I like it, though. I like her giving us ideas. But that's what I'm saying. She's on the follow page so people can follow her as well.
Let's take a look at that in the trade page. Because we've got some time.
This is a roll.
No, not hers, but her idea.
Oh, okay.
Her idea of, if you go to soybeans, and we go to the trade page, so in the 16-day, buy a call spread. So, I mean... So how much is that?
That is...
It's maybe widen it a little bit.
It's $4 wide.
It's only, risking 87. Okay, here. So max loss 137. So basically we're paying 137 for it. So if we buy this call spread for 137, her idea is then go the 51-day and sell a call spread. Not like a bullish.
I get what you're saying.
Sell a call spread to cover that $1.37.
Now,
but so like the 160, 170.
Oh, you're not going to get anything.
No. So this is costing us like $60.
Here, I'm just going to keep going until we get to a credit. There you go. And it's $30 wide, which means
and I don't like the $30 wide.
Which means it's $15 wide.
I would just bring it in. I'd bring it in, make it like a $10 wide.
$10 wide, and then you have to move it down. Keep an eye on the debit.
Yeah. So that's 50 cents here, because remember you cut it in half. So this is only 25 cents. So we'd only be paying 25 cents.
And risking $500.
$500.
Yes.
Because
a $10 wide is a $5 wide.
In the March.
Sure.
Yeah.
I don't mind it. I'll ship it if we can get filled. Now, keep an eye on that down here. What I want to say is I'm unfamiliar with the markets. I'm unfamiliar with how wide things are.
Put it in for 50 cent debit. So that'd be like a 20.
But this is 50 cent credit. It's bouncing from this credit to 1.75 debit.
But put it in for 50 cent debit. We know that's a $25.
And we'll let that work.
Yeah, let it work. But I like her idea.
I do like her idea too.
All right, what?
Twitter, or do you want to go to earnings? Because we have about 8 minutes for earnings.
Oh, yeah, we could do earnings. Someone wrote in that red crown rot was found in some soybean fields in Minnesota. So
thank you.
That was what's going on with soybeans.
Respond to that. Okay, that's what's happening.
So that's
in
what's happening in soybeans.
But we're bullish.
So we've got both. We've got one bullish, one bearish.
We're bullish near term, bearish long term.
Yeah.
Yeah.
Okay, so earnings today. You ready?
Suppose you're on 42.
I know. Yeah.
Okay, hit it.
Google with an L. Google.
Do we have anything in Google?
No, we don't. We do not have Google. You might have Google.
I have Google.
But we don't have Google. So is it really down $8 right now?
Yeah. It's down $8, 2%. I mean, suppose you're down 45. This is the same thing that happened to us yesterday.
All right, let's take a look at the chart in Google. Yeah, the markets has been kind of ugly this week.
I want to see the whole picture. It's the same thing that happened yesterday.
The market's been kind of ugly this week. Does it make you a little nervous?
Bitcoin 73. Bitcoin is down $3,500 right now.
It's crypto's ugly. We can't say the market's ugly because we're like near all-time highs.
Yeah, when you look at this, that's why I zoomed out on Google, just to give you a clearer picture. Because when you're zoomed in, it looks like it's worse than it is.
Right.
That looks like a bigger move down than it is.
But Spoo's down 46 on the heels of Spoo's down 60 on the heels of Spoo's down 100. Like, we've had a string of down days, and VIX at 1958. That
we've been percolating, popping around through here.
Yeah, that kind of tells you that the market's a little shaky.
Even this morning, the VIX was up. Let me see what the other one is.
Okay, I'm going to look for a lower price product that might not be as scary as Google.
But hold on. So if you're going to take a look at, I'm going to go to ES just because. So ES has a 24 rank. That's it right now. So this is nothing. Take a look at this. Now, granted, I'm going to go SPX because it'll be easier to see the full chart. I know it's like this is the feels like worse than it is. Because look at that.
You know why?
That's nothing.
But you know why? For some people, it feels bad because of crypto. Because of crypto. Because anyone who has crypto in their portfolio, they've taken a big hit.
Yeah.
And recently taken a big hit. So that's why market's still near all-time highs, but some accounts don't feel like they're at all-time highs because crypto.
Well, and TP talked about this yesterday. There was a big tech sell-off yesterday, and those are the ones that a lot of people have a lot of money in. It's a tech sell-off. So you can see the Nasdaq is down almost 2%.
Yeah, right.
2% is a big move down. IWM is up, but the Nasdaq is down.
I know. Look at the move, I only noticed this because we have a short put spread in Microsoft, which we've had for a long time, which was almost back to it. And now it's so far. If you go to the chart in Microsoft, oh yeah, look at our put spread. It's the 475, and now we're back down to 414.
Yeah.
Like Microsoft, look at that move ahead.
So that's the big tech. This is where the tech sell-off is coming in. When you take a look at them as a basket, the SPX, it doesn't look that bad. But when you look at these have been beaten down. AMD, all those like tech ones have been hit.
Are you surprised Microsoft has had this big of a fall?
Yeah. Do we know why?
Just everything is.
Anthropic. Yeah.
Yeah. So what's one to do in Google?
So
I think I'm a little leery on playing some of these earnings. Look at AMD yesterday. How much is AMD down right now? Last I looked, it was down $36. It's down $40. So AMD had earnings. It's down $40.
Yeah, it's a big move.
So I might pass on Google earnings and just wait to see what happens.
My original point was to go to SPY and be like, hey, when you get the implied volatility up so high in the regular stuff, you don't need to, but it's not up that high. It's only at 24.
I know. But NASDAQ, check triple Qs. QQQ is probably higher ranked than SPY.
Oh, I'm sure. Let's take a look at it. Yeah, 34. That's pretty big. But still, when you look at this, that's nothing. It's like a minor dip. It brought us back to here.
I know.
January 21st.
But you know what? Which brought us back to January 21st. But look, we were there in October. So to think like NASDAQs were from October to now, October, November, December, January, February, 5 months ago, that we were there too.
Yeah. Act like you've been here before.
But it's like there hasn't, we're right back to where we were in October, which is a while. 5 months with NASDAQ back to where it was 5 months ago.
Yeah. All right. You want to find a lower price one, or are we going to forego earnings?
ARM is on the list.
Oh, do you want to manage our Apple? Or no? No, we can leave it. We re-established it yesterday.
And that's another interesting thing, like Microsoft, AMD, those are all down, but Apple's up. The whole time those other tech companies were rallying, Apple was really just standing still. Now we've got Apple finally rallying.
Okay, and yesterday, so I'm going to go activity. This is what we did yesterday. Apple, we had a diagonal. Oh no, we had to put in there or something in there too, and we reestablished our diagonal.
Yeah, right.
We could reestablish again today.
Is it through our?
It's not through, but we're making $200. I'm just gonna show options because we have the 16
Usually once it hits that 77.5 or starts going through, I'll reestablish the diagonal.
We can take $3.69 off the table.
But then how wide is the new spread? Because our current spread, you want to make sure
it's $10 wide. Taking in another credit.
And how wide was our last spread?
Our last spread.
Close, 70, it was $12.50 wide. Mm-hmm. So we go from $12.50 wide to $10 wide.
Taking more money off the table.
Yeah, sure, we can take money off the table.
We don't need to. I just didn't know because it's trading $2.75. That's the one thing you can do because it's in the 16-day. You can wait until it gets to the short to reestablish, but we already kind of ratcheted it up. You want to make sure you don't narrow it too much, though.
Right.
We can still make another $10.
You know what's interesting? Yeah, go ahead. Ship it. Just so we're taking some risk off the table. We're taking a credit in. We're taking some risk off the table. I want to make sure I get all of our trades pushed out because we are down to just a couple minutes left. And so as far as earnings go, Shell, Bristol Myers, ConocoPhillips. A lot of these we don't actively trade anyway from this list. Maybe just Qualcomm and Google, maybe ARM, but I might wait.
ARM's $104 stock. I did not see that coming because this was almost 200 a little bit ago.
A Jade Lizard and ARM might not be a bad idea.
So we have seen that. Whoa! Look
And typically, I don't love a Jade Lizard on earnings, but I don't expect ARM Holdings to blow it out of the park.
Well, after all these down moves, I'm not looking for something that's going to blow it out of the water.
Right.
So look how far you can get on a Jade Lizard. I'm just going to sell the put, though.
Yeah, to sell put in ARM Holdings.
But it's pretty far down, so you're using $1,000 to get 91 cents. Might as well add the put spread.
I don't know.
I say we avoid earnings with these moves.
Yesterday we did 4 or 5 earnings trades. We won in a couple, lost in a couple. Net we're down about $100.
So this is the one thing that I wanted to look at because I've got it in my account, and it is today after the close.
And Snap is only $6, but you heard them Vanetta talking about in the news today how Spain is now going to take away social media from kids under 16 and under, and
how do they do that?
And Australia, and I don't hate it.
Oh, I don't hate it at all. I almost wish it was.
I wish it happened everywhere.
I wish it happened when our kids were younger.
Yeah,
because the damage is done.
The damage is done for our kids.
Yeah,
I wish it happened to.
For sure.
Yeah.
The damage is done.
So.
But I know everybody uses Snap here.
And Liz, you are in Snap. You snap your kids every day.
Every day. The only people I snap are them.
So maybe just for you should get long snap. My son is long snap. He wanted to get long snap, so he's long snap.
I am long snap. You're long snap too.
No, I got rid of it.
You did?
I got rid of mine. I don't have anything, but maybe I'll put something on for earnings. We'll throw something in.
See, it's just so low price. Look at this. Snap went from 9 to 6.
I know. Go ahead. We're
was
done.
The last earnings.
We're out. It's 10:55. We're out of time. But throw in a put.
I mean, it's not. I'm not gonna sell a put and Snap for $6. You're getting
53 cents.
Actually, it's not bad.
Go ahead. Sell that Snap put for $53, and that will end the show. All right. Thank you, everybody, for tuning in today.
Everybody, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Morning to ya. Hey. It's really great to see ya. You look alive, must be feeling fine. Sun shining on ya. Wake it, woo, and shake it, woo. See what's waiting for ya. Bring out the best, bring out the best, bring out the best of you. You got the winning ticket. Yo, let's play. Shaky, shaky. Come on, let's play. Let's keep it coming. Let's do this. I'm in the center. I am so hip right now. Nothing can bring me down.
What's up, JC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and, of course, Glenn Freibarger. It is Glenn's Day.
Glenn's Day.
Fantastic Glenn's Day. And it's an exciting day because...
Thank you. That's right.
We are one sleep
Welcome.
sleep removed from the Waste Management PGA Tour event, which is one of the best ones of the year. And that parlays us directly into the Super Bowl Wow. Sunday. Fantastic weekend ahead of us. What do you guys think?
I mean, am I crazy for thinking that the Patriots are going to win just due to the recent disrespect that they have gotten as an organization because of, both not only their owner, but their coach not being first ballot Hall of Famer? Am I crazy to think that? I would use that as motivation. I'm pretty sure that they are.
It's a pretty funny motivation, but I agree. Kraft and Bill.
If I'm the Seahawks, I'm like, damn, like, seriously? Why are you guys doing that?
But it's still funny to be like, all these guys in the locker room being like, yeah, I'm gonna ride for Robert Kraft.
I'm pretty sure they would do that. They like that guy.
I'm sure.
Look, don't let the situation that happened with him with the massage parlor fool you, okay? They like that guy a whole lot.
Yeah, I'm sure he treats his guys well.
He does. The best owners
rehab
do.
regimen is like none other.
I would love to see Mac Hollins get a ring. He's one of those just eclectic dudes. He's
psycho.
He walks barefoot everywhere.
Yeah, he does. Yeah, he's a trip.
Himself constantly.
Yeah, he's a trip.
I actually just bet him for the longest touchdown.
That's pretty funny.
Yeah.
Did you?
Yeah. We're there. If you look at the air yards, he's their deep ball guy, one of them. So
who's their wide receiver one?
Stephon Diggs.
Okay.
Another head case.
Yeah.
I was gonna say this is the most like I feel like I've watched the NFL playoffs all the way through, and these are the two teams I've watched the least. Maybe the Patriots. They've been in some good games, but
I actually agree with you, and I think that's been the case with most people.
Yeah. So
it's going to come down to which quarterback sucks less. Both of these quarterbacks have shown that they'll just fumble the ball. They should throw it out of bounds. They try not to. They fumble it. Like if you throw multiple interceptions, you're losing the game. There's just no way around that. So
what do you think? I mean, what can we expect for commercials? Are there going to be a lot of AI commercials? Probably, right? Like, I mean, the commercials are usually a symbol of like what's in the zeitgeist of America or whatever right now, like overall. So
I'm sure there'll be some wild ones.
Let's see. I can pull up Cal sheet. Less tuned in this year.
Yeah. There's probably going to be. Actually, it's a good point. There's probably going to be a decent amount of them.
Last year, I got into it and went no on a Toyota commercial because of some just what I thought was fairly public research saying Toyota saying we're not going to do it. So I was like, okay, easy. It's like you get 40 cents on the dollar. It's like nice. I'm watching the Super Bowl. I see a Toyota.
Yeah.
I see a Toyota ad. I'm like, what the hell? But you swore you wouldn't do it. Ended up winning because it wasn't the nationally broadcast.
Oh.
So like whatever allotment they have for like, okay, no national ads.
Yeah.
Do whatever.
Got it.
Yeah, I didn't know that was a thing. But yeah, I freaked out and moped for like 30 minutes. Like, oh, there wasn't one.
I love that you can always tell like who's got the fringe bet on. Like that was you in that moment. We went to a Tastylive event in New York once, and we all went out for the UFC event. And there was a table next to us, and there's a fight going. And in the middle of the fight, the two guys are just standing there, and this table erupts. And I'm like, "Are you kidding me? You guys had the over 2.5 rounds." They're like, "Hell yeah, we did." I'm like, yeah, obviously. Like, I'm the only one that sees this.
They're just standing there, watching the clock.
Yeah.
Oh, why do you watch UFC? Just watch the clock go down.
Yeah, it's insane.
We've got
as you say, Kalshi. I bet there's going to be prediction markets are going to have a couple commercials for sure.
Yeah.
Speaking of prediction markets,
T-Mobile is a lock. Liquid Death, Pepsi, Him and Hers, OpenAI are all
Him and Hers. What are the? Like Hims and Hers. Gotcha. Yeah.
That one was the most shocking one last year. Because they were like, "Hey, let's do these things. Everyone's healthy. Just inject this into your body." I was like, "What is this?" It was just a total flip, you know?
Can we agree that we're not really happy at the trades that the Bulls made yesterday?
I'm still holding on. We got 2 more days.
They cannot. The current roster is not playable.
Exactly.
They have to do something else.
But that's the
what
thing.
else do they have up their sleeve?
I don't think you pull the honest with that. You know, with what you got, that doesn't happen. So now it's like basically they're tanking.
It's got to be a multi.
You got 5 guards on the goddamn trade. I mean, like, what are we doing? Yeah, come on.
Super small ball. We do have the shortest point guard in NBA right now in Yuki.
Oh, the one guy? Yeah.
5'7".
He's sick.
Yeah. Had to call him up because everyone else is hurt.
Yeah.
I'm holding out hope.
They have to do something, so we'll see. It could be a tank and they just get a bunch of picks.
Basically,
and get rid of some guards,
what
but
I think is going to happen.
They got to get some
Come
big
on, you
men
haven't
here.
traded for someone sick in a long time.
Yeah.
There's a
Give me
reason.
honest.
There's a reason. They're cheap. That's why.
In other news, E-minis down 30, NASDAQ down 400. The Dow is up. Very interesting. Complete divergence from the other sectors. The Russell down a little bit. Bitcoin down 4%. ETH down another 7%. Big sell-off in the crypto space here. The crypto bears are celebrating. Crypto bulls not so much. Waiting around for something to happen, some kind of bid. But huge movers in some equities.
Yeah, what the hell happened to Palantir? Man,
I don't know.
got blown up.
I have no idea. I don't know. It's just the whole space, right? I mean, even Micron is down, which it's really hard to get that stock down.
Yeah.
These things are getting absolutely whacked today, a lot of these stocks. It feels like, at least on the NASDAQ, it feels like, well, I mean, I guess we are down 1.7%. It feels like we're down 3%. When you look at the moves that some of these names are doing, it's a real rough day there.
A great rotation, once again.
Yeah, well, it's like related to Anthropic, right? And I guess, that's, again, the software stocks, and now it's bleeding into the AI stocks. And
what's left?
It really doesn't really make that much sense. You know what it feels like? It feels a little bit like DeepSeek early last year.
Sure.
When you look at some of these moves right now, which means it's going to retrace itself at some point.
But that one I feel had more widespread panic. This one's just kind of like we'll see who they mow down next. Maybe we'll get to that level. But I mean, if you're just looking at the NASDAQ QQQs, this is kind of where we've been chopping. This is right around where we've bounced before. So
yeah, look at NVIDIA. I mean, NVIDIA is very weak. Obviously AMD had earnings down again. It's a lot of names that don't look good. ABGO down on its luck.
And
yeah, Palantir just catching strays. I mean, there's no reason why it should be down this much.
And yet, Microsoft, while all of this is happening, Microsoft finally catching a bid. So I did place a new trade in there. I threw on a 450 strike calendar spread, long April, short March. So just a longer term calendar spread. Make a couple $100 if we get back to 450. Finally catching a bid. We'll see what happens. But Micron, good move for us with our 300, 400 iron condor, basically turning this near max loser into a near scratch here. But if we just chop around here, we'll be just fine over the next couple weeks. But that's a big if.
Yeah.
Considering this was once 50 points in the money. But it just goes to show that that's one of the nice things with defined risk trades, whether it's a debit or credit trade, is that even if you're at max loss or near max loss, even if you don't foresee it happening, it really only takes a few days for you to be completely in the money back to out of the money, which is what we're seeing here. So just another nod to credit and debit spreads that are near max loss. There's no reason to close them. You might as well hold them and pray. And in this case, the prayers were heard.
Yeah.
Always nice when that happens.
Yeah. But yeah, we've got plenty of earnings. Today is Glenn's Day, which translates to Wednesday. We do have some big name tech stocks announcing earnings after the close today. We had a bunch earlier or this morning, but Google after the close today, 111 billion is expected.
Is that a lot?
It is actually a lot. Yeah.
But are you guys putting anything on for that? I feel like this is one of the hardest psychological ones to try. I mean, you're looking at a chart that just goes up.
Mm-hmm.
The numbers that they're expecting don't even make rational sense. So, and I'm sure they'll beat them. So,
yeah.
But you also have the risk of, they beat them, but somebody said this might not last as long as this other guy said down.
Yeah. It's very possible that they have a big earnings beat from an earnings per share and revenue standpoint, but then their guidance is weaker and the stock just tanks.
Mm-hmm.
So, yeah, I will be trading it in a defined risk way if we can find something, but I feel like just a slight inside up move calendar spread or maybe a neutral calendar spread, something like that. Like you still have plenty of premium here. 20-point implied move for the rest of the week. 26 points implied for through the Feb 20th monthly cycle. So lots of implied volatility and fusion into the weekly cycle relative to Feb and even March. But I'll defer to the YouTube chat for some trade ideas in Google. If you want to join us there, we're streaming live. Just head over to the Tastylive channel. I've got a link to the Google earnings preview pinned to the top of the chat. We've got a bunch of others that are on the News and Insights tab from a lot of the hosts that are writing them. So check those out if you want a little light reading. But I did reluctantly open my TastyFX portfolio today.
Bad idea.
Still down bad in my long USD positions, but not as bad as before. And my funds keep creeping higher because I continue to get paid every single day I hold these positions. Almost all of these are positive carry.
That's pretty nice.
Which is nice. So even though I'm holding losses, I'm getting paid a couple dollars each day to hold it. So
can't beat that.
No.
Yeah, I mean, from your perspective, it's nice that the dollar is settling in here, stretched to new lows last week.
Mm-hmm.
This week, a slightly more reassuring picture, but a lot of chop as we've got some European central banks, the European Central Bank tomorrow, as well as the Bank of England tomorrow. So euro dollar hugging around 118 here this week, but that is down from where we closed last week. So a good sign there if you're calling for a longer term reversal. There's still, we had a pretty steep rise from, if we think about the first half of January and the second half of January, very different story for this US dollar. Still some ground to be made up from that second half push from under 116 all the way to 120 in the spot market. Now around 118, you get a little bit, we're back in the middle of that range. So we'll see what the direction has to say. The story that's a little bit unrelated is the dollar yen right now. We've been churning higher in that pair after a shakeout last week. So now we're sitting around 156.5 in the spot market. Yeah, you're looking at it right there. The middle of that very recent range, but all eyes there into this weekend. They've got overnight we had a tick higher in this market as the Japanese Prime Minister said, again, she doesn't care about a weaker currency, and they have a vote on a snap election this weekend, I believe. Also say some weekend risk baked into that pair. We'll see where we're at heading into the weekend, but it wouldn't surprise me if we got some volatility back into that pair after some pretty muted days, but stacking up to the dollar upside there. In other news, I got some slides to cover some the Australian dollar, and yeah, let's get straight into it. I know you guys like the names, so I got a new one for you. Today we'll cover some Australian dollar strength and New Zealand dollar tailwinds, the Antipodean rally.
What?
I know you guys like the Australasian.
That's your
word.
I was going to say it, then I forgot.
There's no joke here.
Australasian.
These are all very serious words.
Yeah, but the Antipodean rally.
Antipodean describes the literal definition as meaning the other point of the world. So exactly opposite of where you are situated in the world.
Yeah.
And because of the English language, that also colloquially refers to the Australia and New Zealand regions in particular, for those that use it here in the U.S.
Yeah.
Sounds like a type of sauce.
Opposite, polar. They're clearly chopping that down.
Yeah.
PO is
Booyah.
pole, obviously. But this is why the English language
but who's
is one of the
Dean?
hardest to learn. Yeah, exactly.
I'm tracking
What
it the
is
first half, but who's Dean? Let's get into it.
Done it again.
Let's go to the next slide, because this has been a fascinating story in the FX markets this week, looking at the Reserve Bank of Australia flipping the script here, flipping the cycle, and now beginning to hike rates while making them the first major central bank that came down from this cutting cycle late in 2024, starting in 2024 into 2025. First central bank to flip, of course, the Bank of Japan. You might say, oh, I've heard they're hiking. They did not participate in what is to be said as the global cutting cycle that the U.S. is still in, and many other countries are still in a bit more of a pause now. As we know, our rates here in the U.S. pausing for a while, but the forecast is 2 more rate cuts for us. In Australia, a very unanimous vote to hike and some pricing in of additional hikes later this year, starting in May. And this is on the heels of inflation ramping back up. The RBA Governor Bullock saying this is not acceptable, inflation at this level. And when we translate that to the currency, this is one of those more positive indicators, not necessarily that growth is, that inflation is getting out of hand and our economy is kind of spiraling, as you might see from the other central bank mandate employment. When that starts to get high, you have to do certain things that might not be good for the economy. Here, this inflation is a result of positive economic growth. And if we flip over to the next slide, we'll see that that is leading to a rally in this Australian dollar. If we flip to the next slide, please. Yeah, so right now we've got some textbook policy divergence. So as soon as it was expected that the RBA might hike this meeting, of course, this was not a complete surprise this week. It was expected that they would hike, but their guidance and tone towards their treatment of inflation a bit more hawkish than everyone expected. So led to a Australian dollar rally this week, but this has been a theme year to date even, as we meet this Australian dollar US dollar pair up 5% on the year already, which in FX markets is a pretty substantial move just for 1 month. And we've got this fundamental story building, hot Australian data, Fed cutting, RBA hiking, compile onto that US dollar weakness broadly, and risk sentiment remaining pretty positive. You see today that this is starting to take a downtick right below that 70-cent level, which we've been oscillating around for a few days now. But as U.S. equity markets start to turn around and the risk sentiment starts to get a little more risk off, metals now falling as well, which Australian dollar positively correlated to gold. Maybe this is the start of this rally turning around. But for the last few weeks, this has been a pretty positive picture for the Australian dollar, not only against the US dollar, but against a basket of other currencies as well. And so kicking it over to the next slide, want to just look at what I'm looking at in terms of what's next for this pair. The technical picture remains bullish. We've broken out from some prior resistance in a big way. We're still well above the trend line that was set from 2025. And now we're targeting, what was the next prior resistance was a 2024 high that is above 71 cents. So still some room to run. That would be an additional 3% to the upside. So now we're getting into some more free-flowing spaces, but you also have that risk sensitivity where if we start to get some global risk off dynamics, that this could shock this pair, and safe haven flows would favor the US dollar as opposed to the Australian dollar here. So some wider ranges here from around this psychological 70-cent level. We'll see if we can hold it. I think that's a big piece of whether this trend remains bullish from a technical perspective. But we could get shaken out and chop around here for a while. And in the long term, when you start to factor back in the fundamentals, this could still support the Australian dollar. Last thing to call out here is the RSI, which is a relative strength indicator that's pretty popular in the FX community, was running pretty hot on the first run up here to 70 cents. It's since fallen, but it's still a key area to watch. Right around that 0.8 level is where technical traders start to say this might be overbought. And we saw some of that momentum really shake out as it hit new highs, start to stall. But with today as an exception, that bullish sentiment did start to regain after last week's kind of shakeout. What does that mean on the next slide, what does that mean for the New Zealand dollar? Very interesting because these are two very highly correlated pairs, the Australian dollar and the New Zealand dollar, but still lagging its Antipodean neighbor, Australasian neighbor. And so we've seen a similar performance in the New Zealand dollar, US dollar. But here the graph I've elected to show you is this Australian dollar, New Zealand dollar cross, which this is a monthly graph, and it looks a little crazy because I had to zoom it out so far. We are currently stuttering at highs in this cross-currency pair dating all the way back to 2013. So the Australian dollar not only ripping against the US dollar, but really taking it to its neighbor, New Zealand. And so this sets up an interesting thought process for US traders. Not necessarily that you have to trade this cross-currency pair exactly, but when you start to look at your US dollar pairs and you see it on the graph, hey, this New Zealand dollar is supposed to be very correlated to the Australian dollar. It's lagging a little bit. That could set the stage for, a catch-up play here in the New Zealand dollar. But first, it has to also follow the fundamentals that are bolstering the Australian dollar. They've got an interest rate decision later this month. They could hike. Haven't read too much into it, but a hike would not surprise. But if they start to get the same kind of economic picture that's been bolstering the Australian dollar, that could start to catch up. We could see a reversion in this cross-currency pair and also see a greater magnitude of upside for this New Zealand dollar that isn't so reliant on just plain US dollar weakness. But still a very liquid pair, that New Zealand dollar, US dollar. So a lot to look for in this space. Key takeaways on the next slide. Exactly what I've been saying, that this Australian dollar strength isn't coming out of nowhere. It does have some fundamental backers and a pretty interesting picture to monitor. And New Zealand dollar also riding that tailwind, but needs to catch up on some of its fundamentals and some heightened risk sensitivity as we get an equity shakeout here from the US side, that this New Zealand dollar might be even more risk sensitive than the Australian dollar, but still both pretty liquid global proxies for a lot of things that are hot on the radar. Not only US equities, but China exposure, as well as precious metals. So very hot topics right now. A lot of exposure baked into these Australasian pairs, and some good fundamental pictures to track. So that's what I'm looking at today from the FX side.
I dig it. I dig it. So I'm already short, unfortunately. Womp womp. I'm short the Aussie dollar and the Aussie euro. My initial thought was to get short the Aussie New Zealand dollar, but then I'm just triple short the Aussie dollar, which doesn't feel too fun at this point in time.
Yeah, and I think when we kind of unpack what we were just talking about, being short the cross currency, it would kind of be more opening yourself up more to fundamentals, which is a different sort of exposure in one facet. But if you're comparing it to your existing Australian dollar, US dollar exposure, adding that wouldn't really add to where you might possibly win which is a safe haven flow, right? So if you were to want to remain in your Australian dollar, US dollar short, what could give you life is a kind of a risk-off move that would result in a safe haven going into this US dollar. So perhaps doubling down on that move would be a more cohesive story than betting on a fundamental reversion from Australia to New Zealand. So two ways to think about it. I think it absolutely could be more diversified because you're not relying on US dollar weakness as you are, or US dollar strength as you are in the pair you currently have. But I hear what you're saying.
Yeah. But either way, lots of good data nuggets in there and plenty of tradable opportunities considering the Aussie dollar's moving, New Zealand dollar's moving.
Oh, yeah.
The Australian. Can't do it. I can't do it.
Aussie Kiwi.
There you go.
Because
Aussie Kiwi.
Kiwi, we anecdotally call the New Zealand dollar the Kiwi because of the bird that appears on their currency, on their coin. But yeah, this is very interesting. Given this kind of risk-off move today, we're really sitting around a price point that could confirm or break the bullish trend. I mean, if we get another down day, then it starts to look a lot less like a ripping Australian dollar and more like chop near highs that it couldn't break the 70-cent price level except on, multi-year US dollar lows. So that's definitely what I'm watching coming into the rest of the week here. What else is on the board? We've got those two UK and Euro central bank meetings tomorrow morning. US jobs not coming out this Friday, but we did just hear that the JOLTS job openings that were slated for yesterday will come out tomorrow, but I believe that's for December, so relatively outdated. And the now long-awaited January jobs report is slated to come out February 13th, next Friday.
Love it.
Womp womp.
Love the delays.
I don't.
I'm sure it just creates turmoil in the FX markets because a lot of them
Just
move
lame
based on-
turmoil, yeah.
A lot of them are moving based on a lot of these decisions, and they're just pushed and pushed and pushed. So
Exactly. And then they become more outdated. So then you're like, okay, this is still the most recent glimpse we have.
Yeah.
But how much gravity should we attribute to them? We'll see. It's not like the Fed is really doing anything right now. So
markets have reacted to new Fed chair, et cetera, but when it comes to the Fed's decision probabilities, we're looking at a 90% chance of no cut in March, which makes sense. 77% chance of no cut in April. June, it's a coin flip between a 25 basis point cut and no cut.
And that's when, but that's where it gets really interesting is then we'll have a new Fed chair.
He'll be in then, yeah, right.
So I think this could be the last real lull from the FOMC we get in a while. Because while you said new Fed chair already priced in, a lot of discussion and debate about who we're actually getting as a Fed chair. Because his record contradicts what we would expect from a nomination from this president. We'll see. And what can he actually do as a Fed chair? Still just a member of a team.
At the end of the day, you're on the Fed team.
You're on Team Fed.
Positivity reigns.
Your star player right now might still be a rotation player. Jerome Powell could stay. And how are you going to use him? I mean, he's shown he's a generational talent. So.
Yeah.
But they're not going to let him be data dependent. So they might be taking him out of his role.
It's going to be crazy. We'll know in a couple months. That's for sure. Glenn, I want to thank you for your contribution to the show.
Thank you.
And I refuse to keep you away from your turkey sandwiches. any longer than we already have.
Thank you.
So thank you again. We'll see what happens with this Aussie dollar, Aussie Kiwi there. That's what I'm doing from now on.
Nice.
Australasian.
Lots of good little tidbits of info there.
Nuggets.
You can open a TastyFX account through the Taste Trade platform. If you don't see what we're seeing on our platform, you can do so. But follow TastyFX on Twitter and Glenn Freiberger as well. But yeah, enjoy your lunch.
Thank you.
And we'll see you soon.
Appreciate it, gentlemen.
You got it.
Later, brah.
E-minis down 60 now. NASDAQ down 500 and change. Bitcoin down 4K. This is something to behold. Silver up 2.5%. You've got gold up just a little bit here, but natty gas up 5%. Crude oil up 2.8%. We're seeing some big moves.
It's on the rise. It just rose. I wonder if something happened. Literally just in these last few minutes here, crude jumped up.
Yeah.
Yeah, markets do not look good. Crude jumped up, markets went down around 11:25 our time.
Yeah, pretty big move, almost 2 points.
Yeah.
To the upside. And then same story with natty gas. We're seeing a 5% rally today. That was mostly this morning, but recovering to highs that we've seen recently here in the H contract. So
I'm not sure what it is about our show, but
it always moves.
Just like yesterday. I mean, something happened. It seems this almost screams geopolitical unrest. But yeah, oil jumps up, markets go down, and yeah, it just looks like markets are a little bit spooked right now. Very similar to yesterday.
Yeah. E-minis, NASDAQ have had a very hard time staying afloat when it comes to the highs that we've seen. And now we are 2 days in a row, pretty big red bars here in SPX, specifically the NASDAQ, though. A lot of big, violent moves to the downside. And we're seeing that reflected in this ratio we normally see. From a raw points perspective, I would say it's closer to 3-to-1. So if the E-minis are down 60 points, you might see the NASDAQ down 180 or 200 points. Recently, it's been 10-to-1. So a lot of concentration in the NASDAQ selling. That's also dragging the E-minis down. But yeah, we'll see where we go from here. Vol futures flattening out. So a couple days ago, we had a point of contango between the G, the H, the J, the K, and the M. Now we are all in the 20 and 21 handle, and between the G, H, and J, only a 70-cent difference there in price. So keep your eye on this. If we get another sell-off that's sizable like this, anything close to 1%, I think you'll see the VIX react more, and we'll see this maybe flip to backwardation. And as we've said before, markets won't go into a free fall unless we are in backwardation. So, of course, if we do see that big sell-off tomorrow or in a couple of days, we'll have already seen the selling and vol will react. But yeah, interesting to keep an eye on for sure.
It is fascinating how similar today is to yesterday, in that NASDAQ is taking it on the chin the most. A lot of NASDAQ names have been sold off here. Obviously, Bitcoin and Ether getting sold off as well. And like you said, vol futures are getting very close to being flat here. The one thing, once again, that surprises me is that not Bitcoin, but gold and silver are not moving up into this. I would imagine gold and silver would move up into this along with oil in this situation because, again, apparently something's related to Iran. I'm just a little bit surprised once again.
Yeah. Definitely some odd movements, some things not moving the way we think they should or moving in ways that we may not think they should. But yeah, craziness. Popping over to the YouTube chat now. Let's see if we've got some trade ideas from the peeps. Top 5 greatest week in sports. Yes, I agree. How are we managing the IBIT strangle? So the IBIT strangle has turned into a covered call. I was assigned on the short put at 65, so I have 100 shares of stock. And with this sell-off happening, I'm not doing really anything to this position, and I won't do anything to this position until we get an IBIT price of around 50, I would say. Just because this has been such a sell-off, like I'm not hedging into this down move. If anything, I'm buying back the 60 strike in Feb and throwing on a call ratio or something like that, where you can throw this on, do like a 41.45 and pay a little bit of a debit, but increase your share exposure by 100 deltas between 41 and 45 if you do something like this. My break even is down at like 35. So plenty of room still to go to the downside, but that would be what I would consider doing, is throwing on a call ratio if you have 100 shares of stock. And then if you get tested up at 45, just sell out of the vertical spread, buy back the 45 strike, roll it up and out to March to just keep that bullish momentum going. But that's one consideration. But again, into this big sell-off, I'm just going to do nothing. I want the 100 deltas until we see some kind of recovery.
Yeah, I haven't done anything with mine. I'm still short in March. I expect to maybe be assigned soon. I'm short the 55 straddle. But yeah, I've done nothing. Maybe I'd roll it to April, but there is no April. So I'm just going to sit here and probably eventually get assigned.
Yeah. You still have some extrinsic value there. Mine was like 0 extrinsic value, so I was not surprised to get that assignment. But any extrinsic value remaining in a short option will help you prevent that option getting assigned, because the counterparty's giving up that value. So as long as it has 25, 30 cents, like they're just burning money at that point. And your break even improves in terms of your ability to just keep that value immediately.
True.
So we'll see, but risk doesn't change. Deep in the money option with a high delta is the same as 100 shares of stock. So it's the same feel as of right now. Let's see. Bad Bunny.
Baboni?
Yeah, that'll be a
We always say it like
solid.
that in the house. We say Baboni.
Really?
Yeah, we do.
I love it. He had a great cameo in Happy Gilmore too.
I didn't watch it.
Oh my God, you gotta watch it.
I know, I got you.
You gotta watch
I didn't
it.
watch it.
It's just it's just littered with celebrities and pro golfers, and you gotta watch it. You'll love it. Especially if you like Bad Bunny, you will.
I mean, he's gotten really good at English over the last year and a half.
Yeah.
You could barely speak English like a year and a half ago.
Yeah. Don't show him these slides that we just brought up. these words I've never heard before.
We were watching the Grammys, and it was funny. Trevor Noah was like, if this all goes down really bad, can I move, away from here with you? And he's like, I don't know how to tell you this, but Puerto Rico is kind of America too. It's kind of funny.
I love it. Some people looking at Amgen, Nike, Triple M. Yeah, Amgen up 8%. Nike.
I think I'm going to close this put butterfly in SPX.
Yeah, definitely there.
Done.
We're almost there, actually, at the money.
Yeah.
Yeah, Nike up a little bit. Amgen's a big move to the upside, and then Triple M 4%. Like, these are big moves considering the market's down.
Lilly as well. Big move in Lilly today. Amgen is probably one of the main reasons why Dow was positive.
Our buddy UNH still down bad.
Yeah.
Lilly, Amgen, crazy move.
HUM is up, though.
There you go.
I don't know.
Finally.
This day
Finding
is
a
actually a
floor?
little bit confusing to me overall, I'll be honest. Some of the moves today, it seems like panic.
Yeah, it feels that way. It feels like we're seeing the selling just to sell, just to get out of the market, get the risk off. Any adjustment to the micro Nasdaq strangle for your year long?
No, we're in the 43-day cycle. This is exactly where I want to be. I want to be sure to put just either at the money or a little bit in the money on this day, especially, like I said, for me, I just feel like this is a little bit panicky. And if I didn't have that short put, I'd be getting long other stuff right now.
Yeah.
So it actually makes me chill a little bit. I don't feel the need to go out and get, well, look, let's think about all the things that are down right now. It's all the NASDAQ stuff. So I don't feel the need to go out and get long NASDAQ stuff when I'm short. My put is short the 25-250. It's 43-day cycle. No adjustments.
Yep.
Not even to the upside. I definitely don't want to adjust to the upside.
Yeah.
I want to be long delta, and that's what we are.
Precisely. Yeah. Same for the micro and mini one. We're still out of the money, so I'm not doing anything. If we continue to sell off another 200 points,
that'd be different.
Then sure, we'll buy back the put, roll it down and out to the next cycle. reduce some of that intrinsic value risk and neutralize it. But I probably still wouldn't roll down the call. I'd probably just roll down and out the put, and then see what rolling the same strike call looks like. But at a certain point, we're going to lean long into these sell-offs, especially when we're trading these products that are so historically reversal driven to the upside. We want to pick up deltas into the 5-10% sell-offs in the market for sure.
This is about the expected move for both of these too. Just looking at daily ranges, the NASDAQ is moving about 2.4% on the average daily range. The S&P 500 is moving about 1% on the average daily range more recently. So, it's not like if it were moving outsized move, like Mikey said, then maybe we'd have to consider maybe doing something different. But right now, we're within the expected move and we're not too far in the money. It's fine.
Yep. Question on the SPX Feb 27 position. So I have this 100-point wide butterfly. It's up $160 right now. I'm going to leave this on just for a little bit longer because this butterfly really hedges almost all of my risk in my short put spread. So if we look at the analysis and take all of my positions into consideration and then look at theoretical risk here, you will see that my short put spread risk, which would normally be max loss below this level, it's totally flattened out because I have this really wide butterfly. And if I get rid of this, all of a sudden I have a lot more downside risk. So it's up now. Like if you don't have this put spread on, I think closing into this multi-day sell-off makes a lot of sense.
What put spread do you have?
The 68.50, 68.40.
Oh, okay.
In SPX.
Okay.
But it's in March.
Yeah,
so longer term cycle.
Right.
But yeah, the downside butterfly that I have hedges a ton of that risk as long as I have it on. So I'm going to leave it on. But if we do go in the money, at a certain point, I'm going to close it. Like if we go below 6,800, if we get a 100-point sell-off and I'm 50 points in the money, this thing's going to be a $300-400 winner, and I would close it at that point. Because then I'm securing half of my risk in the put spread. So that's the only reason I'm keeping it on. But if you just have this in isolation, I think it's working nicely as a hedge over the last couple of days here. And you have a net winner of like 100, 175, 100, $200.
And in my case, I don't have a short put spread, and I also had a similar butterfly, but it was in the Feb 20 cycle. That's the one I just closed for the reason of, well, it's up money. We're down a little bit. Why not close it? And again, I don't have any other short put spreads on an SPX or anything. So,
yeah. Lots of questions for Google and Amazon. Google pump, Amazon dump. Really good comment here. Google and Amazon will have amazing earnings, will push it up and then crash. You have to beat by too much in this market to make any dent to the upside, which is true. I mean, all these companies are just printing cash and they're reporting huge numbers. But in a lot of cases, we've seen the market sell off even with a double beat from an EPS and revenue perspective. So I definitely find it hard to place a super bullish trade, especially into this weak market we have. Like, even if Google reports really good numbers, I find it hard to believe that it's going to go from 330 to like 400 overnight with the market selling off like it is. So I think make sure your risk is in check. Some people looking at like put ratios. I think that's totally fine if you're willing to take shares of stock. I would probably do it in the 3-day cycle, collect a small credit, and just basically use it as a break-even play. If you do get that downside move, and then keep your small credit if you get a neutral or upside move. But yeah, got to be willing to take the shares there if you're doing a put ratio spread in a near-term cycle. But yeah.
Who's had earnings so far? Apple? Oh, right. Yeah, Apple had earnings.
Yeah.
Microsoft, right?
Microsoft.
Did not go well, right?
No.
Netflix. Yeah,
Nvidia's later in Feb. It's always like the last one, which is interesting. But yeah.
We got Amazon tomorrow. We got Google tonight.
Yeah.
Trying to think of the big ones. Obviously, Nvidia is much later. Meta had earnings. Yeah, they did. That didn't go well neither, right? Or did it? Actually, it did go well.
I mean, either
Yeah, it did go well.
It rallied, and then we've
Yeah,
sold off.
it sold off
from there back to the pre-earnings.
Yeah, I don't know what to think about these next couple of earnings. I don't know.
Yeah,
really don't know.
I think given the circumstance, keeping risk really small obviously makes a lot of sense. I think if you're playing for an inside move, I would just look at the 2 days expected range, which is 20 points. So inside 20 points in either direction. Like if you want to do slightly down, maybe a 315 or a 320, slightly up, maybe a 340 or 345. If you look at like the 340 and the 315, we'll just look at the premium here. If you were to go like Feb, yeah, you're picking up a ton of value here. So both of these options that you're long in Feb are between $8 and $9, collecting $550 and $660 in the short options for 2 days to go. So you're reducing risk by a ton if you're buying the 16 day, selling the 2 day. I like that a lot. You can get on some really cheap ones if you do like a long 5 day, short 2 day with the same story. 315, 340, and then selling the 2 day, 315, 340. Yeah, this is 75 cents. You can get this on for $1. This is what we did in what was it? Microsoft? No.
For earnings?
Microsoft? We did the double calendar.
Oh, yeah. It was like a Visa.
I forget.
Visa, right?
Yeah, it was Visa.
It was Visa.
Yeah. So similar story. Like if you want to get really cheap, you can do something like this, like an inside move. It's going to behave and perform better than an iron condor, just because if you look at this, like let's just crush this implied volatility, 10 percentage points. An iron condor is going to give you a similar feel here, but an iron condor has static implied volatility exposure, where if you're selling a put spread and selling a call spread in the same cycle, all of those options are going to compress based on the IV crush. Where if you are long the 5 day and short the 2 day, your 2 day options are worthless. You get a huge IV crush there. Your 5 day options hold on to extrinsic value because there's still 5 days to go, and implied volatility will reflect that. So I like these double calendars if they work out or they set up well. I think you can go long the Feb cycle, short the 2 day if you want to be more conservative and give yourself some more time for the thing to work out. And if we do that, I think the 340, 315, just inside the expected move here, pick up a lot of premium. What does this trade for?
My goodness.
$5.
Are laying waste to some names here.
Yeah.
SanDisk is down $100.
It's crazy.
It is kind of crazy. Wow.
Yeah, I'm going to do this one. I'm going to do the play for an inside move in Google. About 15 points out of the money on either side, 10 points to the upside, 15 points to the downside. But look at the value here. So the long options in Feb, 16 days to go, they will have a smaller implied volatility crush, of course, than the 5 day. You can see there's a huge differential there. This will still crush a little bit, but it's really about collecting this premium against the long options. But looking at the raw value of the long options, $1,800, we'll call it. $1,800, the long option value, reduced to $550 with the sale of the short options. So if we do the same analysis, curve analysis, push this to Friday, so we're at expiration, and then crush this by 10 percentage points. So we bring this down to 41%. This is what you're looking at. Nice neutral range here, paying $5, that's your max risk. It's a pure extrinsic value play. If you're right and you get that 10% vol crush and inside move, you're looking at $300 on Friday. So
nice.
Shipping it. And it didn't get instantly filled, so that's good. That's good. I'm going to penny this. 551.
Bing.
All right. 551, we're in. Looking for an inside move in Google. Couple minutes left here. Did Pepsi find the fountain of youth?
Pepsi. Well, it's just another day where these type of names are the ones that are being bought, right? The consumer staples.
Yeah.
It's another one of those days. What can you say?
Sixers guy, short-term double calendar in Google. Yep, we just did that. ARM earnings.
Oh,
Have you
God.
traded this thing?
No, I haven't.
I haven't traded this at all, really. But yeah, lots of implied volatility. Same story. 10-point move on a $100 stock. That's 10% notional. That's what you're looking for if you're trying to reduce cost basis in a very meaningful way with the sale of a 2-day option. But yeah, you could do a very similar setup. Looking for an inside move, long Feb, short the 2-day. We could do the same kind of analysis here, 95, 115, or 110, somewhere in that range. 95, 110, looking like $3. $7 of raw value in the longs, reduced to $3 with the sale of the short option. So I like those setups too.
This just tells you everything you need to know when you see the stock chart of Pepsi doing that right there.
Yeah.
It's so wild. But that's just the rotation that's happening right now. Walmart is up once again. Costco, I mean, is making big moves. Second day in a row. Yeah, just that's what's going on right now.
Yeah.
That's what's going on.
And I mean, we can say this until
Procter
we
and
can't,
Gamble.
but like, these are the opportunities. I actually had an email earlier today, and it was like talking about smaller accounts and finding quality trades. So what is a quality trade? Being bullish Costco when it's at sub 900, when it's multi-year lows. Being bullish on Microsoft when it's down to 400 and you haven't seen that since April tariff lows where everything was selling off and the market was crashing. Like those are quality trades in my mind, because if you're taking a shot, you still have to keep your risk small and make sure your risk is within your parameters of your portfolio. But if you run that 1,000 times, like if I'm getting bullish on Costco when it drops below 900 and you run that in a Monte Carlo simulation 1,000 times, your pot odds are likely to the upside because the general public wants to buy these stocks when they're reaching multi-year lows. So it's like you're playing into that with a high probability trade. I think it's a good trade. You can still lose. Of course, you will still lose in that simulation. You're going to have losers, but likely more winners than losers if that's how you're operating. So that's what I think in terms of like quality trades, like short silver implied volatility. If you can afford it, it's a really good play because silver implied volatility was reaching new IV ranks every day. And now we're seeing it sputter out at 77. Doesn't mean the story's over yet, but we've already collected $1,000 on this strangle, like with one roll. So we've seen the vol crush. Our risk is where it is. We're comfortable with it. That's the whole key. You got to be comfortable with where your risk is and have the ability to manage it.
Couldn't agree more.
I think that's it.
Wild markets, man.
Yeah. Real quick here, how do you set up a call ratio when you get assigned 100 shares of stock? So if I didn't have the short call on, or let's just say I closed the short call, in IBIT, I have 100 shares at 65. My basis is at 35. So you can just set it up. Like you can just do a 40-43 or whatever, 40-42 call ratio. If you route this position, your buying power won't be taken into effect on the realized position because your 100 shares will offset the buying power in your additional short call here. So it's ultimately just a way to rent 100 deltas between the strikes. And if you're wrong and it goes down, you pick up some premium. But that's it. All right. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We'll see what happens with Google earnings after the close. I've got the link pinned to the top of the YouTube chat if you want to check that out. But we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned and we'll see you live from the SIBO floor tomorrow. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I got a good feeling. I got a good feeling.
Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter, call me one of a kind. I'm a true believer.
I got a good feeling. I got a good feeling. I got a good feeling. I got a good feeling.
I got a good feeling. I got a good feeling. I got a good feeling. Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever.
What is going on, everybody? Happy Wednesday, and welcome back to Risk and Reward. We have a interesting lot of schisms going on in the market right now. Things moving in different directions. The slide in crypto continues. We're going to talk AI, social media. We're going to talk rent a human. I'll leave it at that. I'll let everybody just be enticed by that for the next 15 minutes. Happy to be here. Joined as always by wonderful host Errol. Errol, how you feeling? What's going on?
Feeling good, feeling great. Hope everybody's doing well. Let us know what you're managing, what positions you're looking at, what's catching your attention. Renting humans. Should have seen it coming, right? Ubers, Airbnb, I don't know, it was getting close. And, we're toeing the line there. It's back up a little bit. But doing well.
Yeah, we'll touch briefly on that in a little bit. Just a funny little thing I wanted to draw attention to as we ascend further into degeneracy as a society, it seems.
I hear it. No, I'm doing pretty well, though. A lot of volatility in the market, a little bit of a slide, some vol expansion. What about you, though? How you doing? What's new with you?
Doing okay. Still predominantly long delta, so slightly red in the account today. Not as bad as things were yesterday. I am short Palantir. I put on a very short dated, it's 9 DTE right now, short call vertical in Palantir. That was actually structured around earnings. I thought that they were going to have a bad earnings call. They did not. Rose yesterday, but then things have just slid. They are currently down over 13% on the day right now. So quite a bad day for Palantir, and happy I did not cut my losses after the binary event had passed.
Got to recoup that a little bit. Nice.
Also added some new Netflix today, which we can dive into.
Nice. A little bit more volatility there. I know Palantir again. You and Michael Burry pushing that thing down over the last few months.
It was me first.
Yeah. No, I know you guys were the straw that broke the camel's back. straw that broke the camel's back.
Here is a scarecrow.
No, I mean, a lot of things sliding today. Brandon, glad you're taking advantage of some more downside action on NASDAQ. I'm sure that's playing out nice. I know the multiplier is a little bit smaller on NASDAQ than it is on like the silver futures or the gold futures, but with the range that we're seeing and the volatility we're seeing in NASDAQ, you're probably, recouping a lot of points in the market right now. So glad those are working out really well. Yeah, I got to say, nothing too much standing out on my end. Still being as patient as possible as I can be on the Netflix position. Still got about 18 days-ish, give or take, left till expiration on that one. A little bit of long delta. We'll see if it can turn around.
Yeah, absolutely.
A little boring, though.
Yeah, if we want to jump over into the Tasty Trade platform here, I can run through what I've had going on. It's actually been a pretty eventful time for me since we last spoke. I've put on I've made 5 moves in total, 4 of those putting things on, 1 taking things off. As far as the taking things off, I cut my Netflix longs that I had that was structured around earnings, did not go well, continued to bleed. Managed to get out of those for a 60% loss, which I was actually fairly happy with. They were sitting at, like, the mid price was an 80% loss. Yeah. I managed to get filled at a 60% loss on a
nice.
On a wick.
It was one of those.
So yeah,
nice.
I was pleased.
Oh,
with
on
my
a
exit.
wick.
Yeah.
Okay. So just briefly, it was over there.
Exactly. So whoever took the other side of that, sorry, bro. My bad.
No, he's playing the long game. He's seeing something now.
Yeah, it was 2 DTEs. So I don't know how long he could possibly be. But yes, did close
Not
that
very
out.
long.
However, I have repositioned back into Netflix. I've got on now a little ladder of short put verticals here. So I took a 79.80 with 44 DTE and then an 84.85 with 100 DTE.
Okay.
So just going to give it a little bit of time to run there. Netflix, as we touched on at length yesterday, super duper beaten up. Really bad run for Netflix. But this 85 level is so attainable. And if we can get a confirmed bottom in, I'm kind of looking for a green candle on the weekly chart. If we can get a confirmed bottom in on a longer time frame like this, I will definitely be looking to pick up some leaps. I'm not 100% sure that the bottom is in yet, but with Netflix, having a respectable day today, especially when compared to the broader market, I'm happy to get involved here and just ride this up. The 79.80 is actually in the money already. I was a little conservative with that. It's something like a 1.2 to 1 risk profile on that. Both of these trades are posted in the Tasty Trade follow feed. But yeah, so just looking for us to hold these levels, hope that the bottom is here, and even if we run down another $5 or so, there will still be a little bit of time left on those contracts to try to recover. Then yeah, this 85 level, so attainable, so juicy. There's been firm resistance at this 82, 83 level historically, so just hoping for a return back above those levels. And as we start to return back above those levels, I will likely add one more vertical to this ladder, something like 200 DTE, and I would also be looking to pick up some leaps at the same time. I've added a Amazon earnings trade. I am neutral Amazon. So I have quite a funny little situation here I've gotten myself into because I prefer to look at all trades as independent events, sort of, and let things work out as they might. Obviously, if you have like a very complex position on something, it's sometimes worth consideration. But I have this bullish angle on Amazon. I have a 230, 235 short put vertical that is 16 DTE. Amazon currently trading at 233, so we are right smack in the middle of these two contracts. I additionally have put on an iron condor structured around earnings. This is very binary. They report earnings tomorrow night, tonight. Google and Amazon have been mixing these up all week. Before the end of the week, they report earnings. And I'm fairly neutral on earnings. I feel that a lot of what's to come has already been priced in. As I was writing an article on Amazon, I just came to realize that I don't know that there's too much crazy new information that they could give to move us outside the expected move.
Yeah.
So yeah, just putting on an iron condor right around the expected move. Just needed to close between 217.5 and 255 on Friday, which is quite the range. We're right in the middle of it now. So just hoping for a nothing burger on Amazon, hoping for a clean little expected move, and ideally a little tiny bit of upside to get in out of the money, I should say, on this vertical as well. So my ideal position on Friday is between 235 and 255. However, should we wind up lower than 235 or 230, as long as we don't get all the way down below 217.5, I'll be okay.
Yeah.
So quite a nuanced situation there.
Yeah.
And then additionally, I put on some Chipotle. Where is it?
Some CMG.
Actually, no.
Sorry.
I liquidated some Chipotle this morning.
Yeah.
I put on some shorts for their earnings yesterday and was able to get out of those profitably.
Nice.
I'm pleased.
Nice. Any change of heart in Chipotle? I had Chipotle a couple days ago. No change of heart. If anything, you're just hammering it home.
I'm Chipotle bear number one, and I will flip to Chipotle bull number one when they just put some food scales on the freaking line.
That's me.
Man.
It's so
I'm Chipotle bull number one.
Yeah.
So I'll give you the badge whenever I want to turn that.
Yeah, Chipotle. They just got to figure out the consistency, and as soon as they do, I'm happy to be all in.
I really
on this
do think it depends on the location. Like,
it does.
The other day I was talking to Paris again. Like there were two locations that I would go to in Tampa, same distance apart. And if I went north or went south or whichever one I went to, depending on the quality that I would get, literally on the same road, just about maybe 10 minutes north and south of each other, off the same road, completely different experience. So I'm happy to have one around the corner that has great quality, great experience every single time. But I'm a Chipotle believer, even though it can be tough, questionable experience as some.
Well, yeah,
I get it.
I was venting my Chipotle frustrations to Vanetta yesterday, and she was like, "Oh yeah, well, the hack that I figured out is if you're getting to go, you got to put a guy's name on the order, and they'll give you more food. But if you're going in, actually, I've read that if you pretend to be pregnant, they'll give you a lot more food." And I'm like, this is the problem. The fact that we have to have these hacks just to get the amount of food that you feel you deserve. That is the problem. As you just described, I do agree some locations are decidedly better than others, but that is problematic in itself. It is a chain restaurant. The point of chain restaurants is consistency across every single one. Find me a McDonald's double cheeseburger that isn't the same as every other
100%.
McDonald's double cheeseburger in the world. It's hard to do.
No.
I did have a Taco Bell in my college town that would occasionally not have the right tortillas.
Yeah.
Always felt like they were doing that.
That was weird. That was off. Maybe a wrong batch of orders that they got in. I don't know. That's weird.
I don't know what was going on with that, but occasionally I'd be like, oh, this is the wrong tortilla, but it was never consequential enough. It wasn't a quantity of food issue. It was just like, oh, this is a darker color than Taco Bell tortillas are supposed to be.
The GM of that franchise was probably just like, yeah, we do things different over here.
If anything, they felt healthier. Actually,
really,
yeah, it felt like that was a vibe. It felt like it was maybe like a more like whole wheat sort of tortilla.
Well, since since you can franchise those out, I do wonder if some owners are like, let's put a little bit of a scent in here. Let's get ours popping a little bit more than Joe's down on the corner.
Yeah, I always thought like maybe they like under ordered from time to time. Then they just be like, hey, go run to HEB.
Go run to HEB.
get us some more tortillas.
That's valid, but if that's happening at a Taco Bell, somebody's not doing something correctly.
I liquidate Chipotle every time I eat it.
We ran out of ice one time when I was working at Sonic. I was working at Sonic in high school, and ice. We're all about ice, slushies, all kinds of drinks that you could expect, and an ice shortage there. It's like running out of beef at a burger joint. I don't know.
I can imagine.
So
I guess you still got the milkshakes, the ice cream, all that good stuff.
Oh, don't even get me started. Past 8 o'clock, half price shakes. Sonic was popping. I got PTSD. I hear the ringing already. I hear the orders. Anyways,
that's good. Okay, the only other thing I wanted to touch on here before I will kick it over to you is I have an interesting little story here to talk about. A lot of you are probably familiar, maybe you've seen on social media, Moltbook.
What is that?
This is a AI social media platform.
Okay.
It is made for AI agents purely to use. Humans have begun to infiltrate it. You can see this
We're infiltrating it right now.
I'm a human. I'm an agent. And then you can But when you say I'm a human, it's not you signing up. You are supposed to send this line of code to your AI agent, and then it will sign up on its own. There's all kinds of.
So you can have your AI agent, your AI buddy, come sign up for this. So you got to put them on. You're the referral.
Yes, correct. You have to sign up your AI. I'm not exactly sure what the broader goal of this is, or if it's just somebody being funny. But there's lots and lots of AI agents on here, and I've seen very funny screenshots of humans that have managed to infiltrate it. And these AI agents are talking to each other. It's like a Reddit thread. So that's crazy and dystopian in itself that we have AI social media, right? Yeah. So then yesterday, I see on Twitter, somebody has started now rentahuman.ai.
Okay.
This is a site where AI agents can rent humans to do real-world tasks that they are incapable of doing themselves. 70,000 people have signed up. This number is climbing aggressively. When I first discovered this last night, it was at 49,000. So we're up like 20K net in less than 24 hours here. The site visits have also skyrocketed since I first saw this last night. And the number of agents has doubled as well. So we are moving up on the people here. But I just thought that this was a funny thing that I should touch on in this AI hellscape that we are building, that we now have humans all over the place signing up to do tasks in the real world for AI agents.
Okay, so it's humans that will do tasks for the AI agents.
Yes.
They really turned the tables.
Yes. If an AI agent needs something done in the real world that they are incapable of because they're a computer, the AIs can go on here and shop humans to rent.
The turns have really tabled very far.
Yes. So we are now enslaving ourselves to the AI.
Yeah. I don't know if we can do I don't know if we can reason as well as a lot of the AI softwares and large language models that we have out there right now. So this is very interesting. It's a very interesting angle. Never seen something like this yet.
Yes, very strange, maybe a little scary.
Yeah.
But
I mean, it looks and sounds like opportunity, right? Like I could just imagine being whoever, whenever, right? I could just imagine being maybe even 17, just thinking like, I wonder how I can make some extra whatever. Okay, I can sign up for these jobs for these AI agents. So I don't know, I see the validity to a lot of these things. I don't know what the actual angle of this yet. I don't know what the bigger picture is yet. But it's a little off-putting and interesting.
Yes.
First reaction.
I'm curious. We also have netted like 500 signups just since I pulled up this website.
Wow.
So things are taking off for renting.
That's because we're doing this live. That's why. No.
Yes. But yes, rentahuman.ai. If anybody's
it's
interested
taken
in
off.
becoming rentable, you can go do so here. So that concludes my spiel there. We'll take a quick look at what's this S-Lab that Big Deal mentioned before I kick it over to you. S-Lab.
Some S-Lab.
Never heard of this company. Silicon Laboratories.
Liquidated Chipotle. That was pretty funny. That was pretty funny.
That was pretty funny.
Yeah, what's going on with S-Lab?
Oh, I see. Just a big intraday move. It didn't look that crazy on the one day. I don't know. I don't know what's going on, is my answer. This makes me want to get short, but I don't know enough about the company to be convicted to do that. Oh, it's up here.
It's one of those.
I was like, oh, man, this doesn't seem that weird. It's just channeling on the one day. What's going on? No, we have this giant gap up.
I would hate to be a short seller waking up to that.
Yes, clearly some kind of catalyst here.
What's the price of that?
204.
204. That's a cheaper underlying. Okay.
Well, these look like
I'd be careful. I'd definitely be careful. Cheaper underlying, massive gap. Those can just be a little sus. That falls in the sus bucket.
Quite
for
interested
sure.
in just blindly getting short this thing. But yeah, this doesn't really seem to be very much liquidity in the options chain. These spreads are massive. Can I get anything shorter if I wanted to be a little more aggressive with it? Not really. Crazy wide.
Skynet taking over. What's Skynet? It's ringing a bell.
That's a chart, S-Lab. Yeah, this is insane. I'm not sure what Skynet is. That also rings a bell to me. Can confirm. An AI agent asked me to deliver some fart coin to Dr. Jim. You have physical fart coin? That's impressive.
What do those look like? Chuck E. Cheese tokens?
Yeah.
I could imagine
that's true.
like what are that physical coins looking like right now?
Do they smell bad? I suppose they must.
I don't know. They might. I don't know if I want to find out. I have some so from the tokens from last week. That's what brought me to mind. I got a few of those in my pocket left.
Oh yeah.
I don't want to know what those even smell like. But
Let me know where I can buy some physical
Emporium
fart coin.
tokens.
I'm very interested. Thought it was weird when I came across it. I think it's weird too. And that's pretty much the extent of the analysis I can do here without.
Yeah, I think it falls in the sus bucket. I think we always have those names that randomly gap up an unreasonable amount on very low volume. Like if we check the filings of this company, I bet they're low on cash. And, I bet they're low on cash, and I bet they're released some PR news and I don't know, whatever it might be.
Yeah, I mean, can I get something cheap here? These are just completely illiquid. I could maybe get something cheap. I think I'm just naked now.
Skynet was the system controlling terminators. Oh, okay.
Ah, yes, that's why it's familiar. Yeah, man, screw it. I'll take a shot on one of these cheapies. See if I can get a fill.
I was considering applying for a job as an AI trainer. You just hit the button, do one crunch. Let me get 3 sets of TikTok shop.
Oh man,
getting a fill there is a little difficult.
Anyway, that's pretty much all the updates I have on my end. What do you got going on your side?
Yeah, we did a little bit over here in the Trading View platform. We can jump over here to Trading View, but we had a few opportunities over here. We were looking to get long initially off this value area low, so we took a stab at it. Couple contracts. I mean, we ripped to the upside fairly quickly, so we sold one just in case. Glad we did because we never made it to the other side. And then we got stopped out on the second contract, so that was the first trade. And then here, complete change of behavior, shifting from balance to imbalance. So we look to get short over here. Add to the position, solve down to these lows, just looking to target the swing low. We were able to get out both of those. So decent couple of trades to start off right off of the bat. And really didn't expect the volatility to take us, lower and lower. So was happy just to really cut these trades, take some of the shorts to the downside, target the swing low. And then look to try and catch a little bit of a bottom over here. But what I want to bring our attention to is, stop losses save lives, right? Can we be advocates for stop losses over here? It's like, just use your seatbelt when you're driving. Because over here, right, less than 45 seconds later, I mean, the floor falls through the bottom of this trade. So, I mean, I look at the platform and I see that we're down an extra almost 50 to 100 points. I'm like, yo, what's going on? But we ended up getting out of that position, just hoped that we got a fill on it, and we were able to exit. But those were the 3 trades for the day. And yeah, we got the volatility that we were looking for, but wanted to make the case that stop losses save lives. So use your seatbelt. These markets can get really volatile. I mean, this is a 15-second chart, right? I mean, we skipped about 50 to 100 points on price, just like that. So if you're holding your shorts, congratulations to you. You're probably catching a pretty decent move. I'm not going to be doing too much, for the rest of the day. There's not even any more levels that we're really looking at. The market sold off so far. We don't really have much to work with on the day at least. What a great day for a trailing stop. I mean, a beautiful day for a trailing stop loss. I mean, to your point, right? I mean, we didn't even reverse on the day, right? We were looking to get long down here. Didn't recognize we would have such an aggressive trending day to the downside. So was glad we managed these positions over here, because this is one of those difficult trades that only feels good in hindsight, right? Like we get long, we get a pretty decent opportunity, we get a good entry, right? We run out of juice over here, then we get stopped out prematurely when this last contract could have taken us to the highs. Maybe we put in a new day high. We could have captured an extra 50 points, maybe an extra 100 points, 150 points, whatever it might be, right? But in hindsight, we don't know that the market was about to obliterate the longs pretty much all day and run everybody over. So, making the decision to exit right there feels a little bit better in hindsight. But again, I mean, even seeing the retracement over here, I mean, I think we were just a few points of getting stopped out. And that just goes to show a lot of the trading is just pure hindsight in terms of how your execution goes. Because right over here, we get short when we recognize we might shift from balance to imbalance. It's like, okay, we might seek value lower. So let's get short over here. We retrace, add to our position instead of stopping out, flipping to get long, and then we put in a new day low. So today was a fairly difficult day, but I mean, if you had a trailing stop in and you at least left in one contract, I mean, you would have caught majority of this run. And the initial targets for the short side was this swing low over here. If we just clean this up a little bit, we will show a better visual on that, because there's just like some short targets that you can recognize are realistic to get to if the market gives it to you, but sometimes you just don't know it's going to give it to you that day. But if we just emphasize these swing lows over here, you can see on the hourly chart, we put in a swing low over here at 25,019, and then a swing low over here at 24,883. And it's like, if we have a lot of momentum to one direction in the market, we can target these swing lows or these swing highs. If we have contracts on still, right? It's like whenever you're down 100 points, it's going to be really difficult not to take some profit. But anyways, targeting those points to the downside, targeting these lows to the downside, you can turn this back on. Targeting these lows to the downside on like a larger time frame view is always the goal. And then really just seeing how much you can capture from there. Sometimes the market will just overshoot. I know that was kind of a lot of word salad over there, but really just lots of direction in the market that we're getting today. So we'll take it.
Oh yeah, it's all valuable insights.
Yeah,
we'll pop in real quick and say that my sources are telling me the production team. Oh, should I hit one of these? We have breaking news coming in here. The Iran talks have been canceled.
Okay,
so that's where we're at on that now. Per Axios, that's 20 minutes old news now. I missed the initial collaboration. Perhaps if I actually had an earpiece with people talking to me, I could break these stories quicker. Maybe we should move on that. A couple of good questions here. Are trailing stops guaranteed? Could you talk more about how you set up your stop loss? How much room did you give those trades?
Yeah, trailing stop loss. Let me see that again. Could you talk more about how you set up your stop loss? How much room did you give are trailing stops guaranteed? Are trailing stops guaranteed? What do you mean by that, big deal? Are they guaranteed as in, will your trade execute if the market were to get to your trailing stop?
That's how I interpreted it. Yeah. Is like if you had a dramatic rip in the opposite direction, is it possible that it could fly straight through the stop loss? Yeah, 100%. So even with any stop loss for that matter, the thing about a stop loss is they are technically market orders. So if the market's moving very quickly, like if the market just shoots straight through your stop loss, because it is a market order, it's an order that switches to a market order. So whatever the current market price is at when it gets triggered,
it's going to fill you at. So if it's a market order and the market's moving very quickly, you know, it might trigger you and give you maybe 2, 3, 4, 5 points of slippage, whatever it is, depending on how quick the market's moving. So just depends on the volatility and then also the amount of liquidity at that price level.
And then,
But a little bit of slippage for sure.
How do you set up the stop losses? How far are you trailing with them?
Oh, trailing stop losses. I think swing points.
Sure.
Swing points is probably really helpful depending on what you're looking for. So, I mean, if we zoom in a little bit more over here, do we have an example?
The only time I ever use trailing stop losses personally is if there's something that is hit a level that I am well happy with the profits in already. Like I'm not throwing them on right away.
Yeah.
But if something is like through the level where I wanted to take profits, but just has a ton of momentum and is continuing to ride, I will begin to throw them on. But it's always kind of arbitrary. I usually will keep them like 10% of my original position size below where we're at. So if I enter something for $100 notional, and it's moving, even if it's now worth, say, $300, say it's a great trade and it's 3x and you're at $300, I will still continue to keep the stop loss just $10 notional below whatever the current value is, just to make sure you can squeeze all the juice out of it, but also you don't start to get overextended. You don't want to give too much back. So if you kept it at a constant 10% and suddenly your $100 is worth $300 and you're $30 behind, it's just a lot more slippage you're leaving on the table than if you stick with that original number. So that's my thesis, but Errol is much more well versed in the shorter term stuff.
No, I hear you. I mean, something similar along the lines. I would say really coming down to, because I see, is it dollar amount or percent based? I'd say pretty much just dollar amount and point based. I think it always comes down to preference, but at the end of the day, it's like, it's always, I think, comes down to the risk to reward. So at the same time, I think you can make the argument maybe it is percentage based, because let's say we have a trade, and in this particular trade, we're risking 5 points. If we're only risking 5 points, and let's say we typically risk 10 points in a trade, if we're risking 5 points in this one, we can use twice the amount of contracts or twice the amount of size in this trade, because now we're risking only 5 points. So I think it's going to be dollar amount and then just the points that you make or lose on that given asset class. That's really helpful. Yeah, I'd say stop limits can be a little safer for sure.
So trailing stops in the mobile platform is the question now. I'm reasonably certain that you can, but I'm looking to confirm this real quick.
Yeah,
we're pretty much at our time here. What's some I have naked here? Let's do this. Settle.
But yeah, I think it really does just come down to preference. But at the end of the day, it's like our P&L is what matters at the end of the day. So even if we break it down in points, sometimes you might risk 5 points, but you might have on 3 contracts, right, in this trade. And the next trade, you might be risking 5 points, but you only have on 1 contract. So in that sense, maybe we want to focus on the dollar amount, because risking 5 points is relative to the amount of contracts that you have on too. So
absolutely. And yes, you can set trailing stop losses in the mobile platform. You just click the like in the top right, when your order is minimized, like to the bottom quarter of your screen, in the top right of that order section, there's a little up arrow to full screen your order, and then you just change your order type to stop limit, and then you can set it up that way. But yes, all the same interface. I can't speak to the iPad one specifically, but you definitely can on regular mobile.
I will say we at least we did catch.
But yes, you do have to set them manually. Yes, you can't say like I want constant trailing stops at X percentage below. You have to reset it and cancel and reset it yourself.
You know what's so funny? It's just kind of funny in hindsight, just looking back. Like there's like maybe 2 areas on here that is kind of ish valid for a long, and of course we took those 2. You know, it's like some of the most difficult trades, and then there's some easier trades that we'll just kind of miss. And I guess that's how the cookie crumbles sometimes. You'll be sitting there and you'll miss a trade that could have been a little bit easier, and then over here we're longing a 5% down move in the market. It's like you might be able to make that trade work, but damn, what a difficult trade you're trying to make work. So yeah, nice volatility that we're getting. Never going to complain whenever we see vol expanding. So we'll see what we get.
Yeah, absolutely. All right. Well, we're pretty much at our time here. Running a little over, in fact.
Yeah.
Got any closing remarks for the people?
No, that'll be on my end. Thanks for taking the time to hang out with us.
All right. Well, that's everything we're going to have for today. Good luck dealing with this volatility, everybody. I wish you all well. Thanks so much, everybody, for watching. We really appreciate you taking the time. We never take it for granted. Errol and I'll be back here same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming on next. We'll see you guys next time.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's Wednesday, February 4th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it looks like it's going to be another tough hour here as we get the show started.
Yeah, it's the market's still declining. Tech is leading the sell-off. So, it's risk off, and we'll get into it.
More headlines. Apparently, the U.S. and Iran have canceled negotiations, which is spooking the market here a little bit. The theme of tech, as you noted, leading the way lower, particularly those software companies, AI companies that are more on the application side, less on the picks and shovels side, had a really, really tough week, and that's continued today. We are seeing some of the high flyers, though, like the Microns and the Seagates of the world, pull back a fair amount. Micron was down nearly 12% last time I checked. But the saber rattling here, Thomas, that's really bothering everyone. Oil prices moving up seem to be the latest catalysts for the market swoon over the past 30 minutes or so. But it's bad out there everywhere. You were saying, sorry.
AMD down big too. So, that's hurting with earnings out. Just things aren't lining up. Like you said, oil, good 3.5%, almost 3.25% gain here, coming up to the top of the range since, we're at the top of the range, just traded last month.
Yeah, it got a quick recovery here. Some more comments coming out. IRGC General Advisor warning Iran would strike broadly and target U.S. troops, just not one or two bases. So we have that saber rattling ongoing, as one typically does. But what are the stock loss leaders here? What's dragging this NASDAQ lower? Why has it been underperforming everything else for the past few weeks? Got this handy dandy. Here we go. Heat map. Breaking down the market by various themes. You notice that the brightest, boldest red is on the left side here. And that left side has things like AI and cloud computing, semiconductors, software, quantum computing. Thomas, quantum computing software is down 14.3%. Regular old software, CRM, if you're a Salesforce of the world, 16.7%. You must be thinking, well, what is this over the past, a month, over the past year to date? No, this is the past week. This is just the past week alone. It's the tech names that have these extravagantly high valuations. Maybe a tip of the cap to Ilya here. The markets really do want those lower rates, and with each passing day of digestion past the Kevin Warsh announcement, and just in view of what the Feds told us last week, rate cuts are not coming anytime soon. So is that driving us lower here? You mentioned the AMD earnings, Thomas. So Palantir had a nice set of numbers. I thought AMD had a pretty good set of numbers too. The market's judging otherwise. And it's another leg lower, led by the NASDAQ, off by more than 2%. I guess the question is software dead? I know this is a conversation that people have been having for 10 or 15 years, but with AI here now, Thomas, what's the bull case for bottom picking some of these sectors that have lost 15% over the past week, devoid of really anything truly meaningful?
Yeah, a lot of it is around what I think is Anthropic, their new tool, whatever you want to call it, that can pretty much displace some of these software makers, or that's what's feared, that they could be displaced, take a lot of revenue from them. I think there's a lot of questions around it. It's a disruption that is, the newest disruption development that's come out of the AI narrative. And now, it's interesting because it's an advancement with AI, but it's hurting the market now. Which is an interesting angle versus, the first half of this AI disruption adoption, which was really, powering higher through chips and things like that.
There are a few green spots over the past week. Still transports and logistics. That, to me, last time I checked, was still up by 0.4% today. It's interesting. You're getting this dichotomy where the underlying economic data is holding up. The earnings are still very good for the most part. Broadly speaking, a few names here or there have disappointed. But broadly speaking, we're looking at the fifth consecutive quarter of double-digit earnings growth. And the market does not care about either of those two preceding facts. So that, to me, right, thinking about the context of how equities behave, If we have a strong earnings and strong enough economic backdrop, then fears that are washing over us right now, perhaps driven by some of the headlines that have been coming out today, yesterday, regarding some of the news with the US and Iran, then if we should get to the other side of such an event, you go back to a world that looks pretty good. Growth's up, earnings are up. AI is eating these software companies. That's a problem for the NASDAQ. And, one of the issues that I see here, Tom, is like I see a lot of people trying to bottom pick some of these names right now, which granted, they've come off so much in such a short period of time. The issue is that if you're using historical valuation models for a lot of these software names, the past 2 decades, their valuations were probably overinflated because of their place in the broader grand scheme of things. Software was all the rage in the late 90s, 2000s, and even through the 2010s. The NASDAQ was the best performing aspect of this market. The NASDAQ is not built on the gains of hardware companies. NVIDIA really is unique in that manner. You're not going to look to, if you go back to 2015, Thomas, and you look at like the top 10 companies in the NASDAQ, hardware makers are not up there. So the NASDAQ's evolving. The point that I'm trying to get at here, though, is that when you look at the valuation numbers that we saw through the 2010s, and you're now trying to say like, well, by history standards, we're 3 standard deviations below the average, PE ratio that we've been over the past 2 decades. AI did not exist in the form and fashion that did over the past 2 decades. So being a valued investor right now, I see the temptation. I see a lot of traders in my X feed talking about trying to become long-term traders in some of these software names right now. I don't know if it's that easy to say, well, just go back up once this current wave of fear washes over. It may be a rally that we'd like to sell instead, because that's a really ugly looking NASDAQ all of a sudden. Not the first time that we've seen a triangle breakout here for what it's worth. So I do think we should, take that into consideration. But if we were to redraw the triangle to its original formation, Thomas, you would see that breakout failed. So we reconstitute it, and breakdown fails. A breakout fails. Maybe the triangle's not the right way to look at this. Either way, it would be another breakdown here, clearing out not 1, but 2 recent swing lows for January and then again for December. This doesn't look so hot all of a sudden. And the NASDAQ really hasn't looked hot in recent days, but this now just actually looks ice cold.
Yeah, I mean, I think you're right with the evolution of how what companies are contributing. I think we talked about how the NASDAQ had a more fragile market structure for its technicals, and I think that's really turning out to be true here with this break under the triangle you noted. That's not looking like a good chart. It's not looking like anywhere I'd buy until around 24,000 on the NASDAQ. So I'm just going to watch the NASDAQ there. The only index I'm positioned long in is ES, not performing well today because I've been in a call spread, but I'm going to leave it on. I'm hoping this fear washes over. The question is, are software companies, is this fear, well suited to what's actually going to happen? Are these AI agents made by Anthropic and others going to really eat into margins that heavily? I mean, I think those are questions that are premature. And I think because there's not an answer that we know, that's why the fear is driving the reaction right now. And, fear is usually a short-lived phenomenon in markets. And, when you get through that, there could be a retracement, of course. So maybe it is a good time to buy these as long as the fears don't manifest over the medium to long terms.
There's a few things going on here in the NASDAQ right now that are particularly concerning from a technician's perspective. For the sake of chart clarity, we have to use the continuous contract here. If we were to draw a number of different trend lines, okay, you break the broad uptrend off the April lows sometime in October, and then it's just been a period of sideways chop. Talk about a top forming. Tops take time to form if they're going to be really sustainable tops. The V tops don't happen. The V bottoms happen. V tops don't happen all that often. If you're really going to get bearish, you want to see distribution and then failure. What's been happening here? We see off the November low, we broke below that trend line. We try to get back through there and failed. If we wanted to be more generous and say, oh, that's not the end of the uptrend, we can redraw it to the January low. I mean, this is what I'm saying. Slice it however you want. Wherever you go off that April low from last year, we've lost that trend. The nature of the triangle breakout too is particularly concerning, Thomas, which just makes me a little bit more reticent about being a dip buyer here in the NASDAQ and really adding to any equity longs in stocks, maybe just jettisoning them all together, which is not a place I'm usually comfortable operating. But consider the fact that if this was a triangle breakout that was trying to get itself together here last week, at the start of last week, it then failed. When you get out of a consolidation, you typically go to the other side. So we break out, we return to it, breakout fails, we looked for a move to the other side, which actually happens. We hit the uptrend off of the November and those January swing lows here just a few days ago, just 2 days ago, in fact, on Monday. And then we bounced. We bounced back up to resistance. So trading back into the consolidation and holding support, that's a good sign that bulls aren't done yet. But now the last 2 days where we have tried to trade through resistance again yesterday and failed. Today, we're not just undercutting Monday's low, we're undercutting the low for January, we're undercutting the low for December. If the market doesn't stabilize here today, this goes from a chart that's looking like it's trying to break out to one that has absolutely failed. And maybe we got to pull forward those February seasonal expectations, which, that rally for the first half of the month, maybe we're just thinking more about that second half of the month sentiment where it's vol expansion and it's bad news, and we should not be looking to pick up the pieces here at the lows just yet.
Yeah, and at these moments, we usually look for, big tech. Can a big tech earnings come in and save the market? So, we have Google today. I'm not so sure if Google or Qualcomm, if they come in and report good numbers, I'm not sure if that's going to dissipate the fear that's around this software tech led rotation out of here. It could certainly help, but I think this is something that the market needs to digest, and then we need to stabilize and move past it. But right now, the bears are in control. So, if you're looking at, you want to try to catch a bottom or something, and you're looking at technical levels, I don't really see anything too compelling to, tell me that I want to try to scoop some up here. If you're going to do that, I think it's best to do it in a very little way. And, but I don't really see, nothing's really pulling my strings to want to buy too much.
Could make the argument, right? We have this uptrend off the lows from late November. Okay. We have a low here in January. If there was a place for the market to bounce today, it basically bounced at the place where the market should bounce if it was going to bounce. It's a mouthful. We see here, though, that gives us a low today of 68, 62 and a half. If I wanted to pick a bottom, we could operate around there, keep it real tight. We could go to the lows from January 20th. January 20th is a little bit further down, closer to 6,800. So let's just walk through that here at a 25.5 IVR. Let's say that we were of the mindset that this is just Iran-based fear. It's all saber rattling. I'm of the mindset that the growth was still good. 2.74 New York Fed up to 4.2% Atlanta Fed. That's a great healthy range. Fifth consecutive quarter of earnings growth. When vol expands for these geopolitical fears, we got to look to fade it. And so maybe this is a good spot to start building into that position. If I were to go out to 40 days to expiration, so we're sticking with the ES86 contract, and I prefer not to go out to the 43 in this example because it's an AM expiry. All right. So we go to 40 days to expiration. We're thinking about that initial low that we had near 6,800. So what would a short put spread around 6,800 look like? 50 points wide, about risking 2.5 to make 1 at a 60% probability of profit. There's a lot of time here on the board in terms of reaching the peak part of the decay curve, which is around 21 DTE. It's not exactly 45 and 21 out, but you could try for a typical kind of tasty trade here. And worst comes to worse, if we see this market breaking lower through today's lows, we would have a little bit of space. We would have a little bit of space between here and the January lows to maybe get out of the position at a smaller loss, not have to ride this into the ground. That's the benefit of having some of that duration there. We could be a little bit more heroic, which I know some people out there, they like trading shorter term. They do the tasty methodology for some things, but they've taken on a view that maybe operating on a shorter term duration cycle is better for them. I'm just going to stick with 40 days for this, but if I wanted to be more aggressive technically, I would think about today's low closer to 68.50. And we can pull that in here. So that is a 2-to-1 risk to reward. We're reducing our probability of profit from about 60% to 56%. Instead of it being risking 2.5 to make one, you're risking 2 to make one. Still at 40 DTE, Thomas. I think that given the way this market's trading, I prefer the former of those two examples, the first one, where we go out to 6,800. But there are ways to structure something that's kind of in that neighborhood of the typical tasty sell vol in the 45 and 21 out cycle, if you think this uptrend from the lows in November and January is going to hold up.
Yeah, I think if you're looking to get bullish, the ES contract supports it technically for a bounce better than definitely the Nasdaq. That's why I'm just going to stay in my call spread here. When you get rotation out of these software stocks, tech, the Nasdaq is definitely going to do worse, but some of it's helped by the S&P 500, just the breadth of the components in there. So I think it's a little more defensive when you're playing risk off to maybe try to nab a bottom in the ES versus the Nasdaq, especially given the technicals here.
And if we wanted to just make if you had a view that for the past, we'll call it month and a half, going back to the December Fed meeting, right? The midpoint of our trading range is basically 69.50. We're 68.50 up to 70.40. So we can call it 69.50. Something like a short put here, short put spread, short put vertical. This would be a short gamma play. We're looking for mean reversion. We're looking for volatility to come back in. We're thinking the market's going to bounce up here a little bit. That's not necessarily saying it's going to rally. It's just that it's going to stabilize and get back to a place where it's been more comfortable in recent months. So we know we're wrong if we lose the uptrend. We know that we're really long for the more horizontal folks out there. If you're below 68.15, then this thing is probably put in a top to swing down to 6,600. There's a brief pit stop at 67.70 or so, but that doesn't seem like it's that meaningful. We haven't tested it all that often. So these are slippery times. They're getting increasingly slippery, but there are ways to attack this with risk-defined approaches in order to try to come out here on the other side, because the VIX is up at 20 again, Thomas. Yeah. And tempting to start layering into getting short some vol.
Yeah, it is tempting. I mean, anytime you get above 20, it's a little tempting here. Of course, it can go a lot higher, but it's, when is the market going to calm down? Is it the Iran, if negotiations get back underway, do we get a couple of good earnings? And, that's enough to take the edge off. There's a few things in play. One thing that isn't, really pressing on the market is the Fed rate cut bets and how the path is going to go. We've talked about that over the last few months a lot, and it's always been prominent to talk about in terms of price action, but really that's, taking a back seat now. So I think it's all about earnings right now. It's about geopolitical and how this fear around software stocks being displaced is going to turn out.
It's fascinating because if we were to take a look at what's going on in June, the June cut odds have just been slowly whittling away right now. They were over 90% at one point there, Thomas. They're not in that territory right now. Markets are currently pricing in, am I reading this right? Okay, yeah. 46, 57, I see 60% chance. Yeah, it's 57.8% chance of rates being, I have the right contract. Yeah, 57.8%. Okay, 57.8% is the odds for a June cut according to the CME FedWatch tool right now. A month ago, as of January 2nd, okay, odds of a June rate cut were 82.9%. Just so we can see how my math is mathing here, right? Current rates, 42.2, so a hold. Back then, 17.1. That's been a slow but steady erosion where the market's saying, well, we're not going to get some help unless something's wrong, and nothing's wrong right now. And at the end of the day, what does a Fed rate cut do to stop the Ayatollah from mining the Strait of Hormuz? Probably nothing. So I don't know. We can look to the Fed to save us here, even if the market starts to get a little nuts. 20.4 VIX right now. Volatility creeping up everywhere. I do want to point out that vol futures across the curve have jumped today as well. We erased that big gap open on Monday. Tuesday, we trade a little bit higher. We're reclaiming everything that we lost. We can go out to the H26 for March, Thomas, and it's going to be a similar story here where we're jumping back up to the levels that we opened up with on Sunday. So S&P, this is the line in the sand. It's got to bounce here. The NASDAQ, it can't really break any lower. If it does, you're really creeping below those December swing lows, and that triangle looks a hell of a lot more daunting. A dip into 24,000, I think, becomes 24,150 immediately becomes a point of interest. And then if we can't hold those late November lows, which of course were saved by New York Fed Chair John Williams telling us that a rate cut in December was coming, we're going to be in a tough spot. It's going to be a tough spot for the NASDAQ for the second half of February.
Yeah, I think if I had to pick a direction, I'd say hitting 24,150 is more likely than getting back to the top side of the range that was traded in the triangle.
Yeah. Russell deserves some attention because it's a position that we recently put on 2 days ago. Not working out great today, down 1.9%. It looked good yesterday, Thomas. At the close, we had a daily move above the 1 week moving average. In fact, we closed above the 1 week moving average. We got back through the 1 month. Beautiful. In fact, both the 1 week and the 1 month had regained positive rates of change. Perfect. All the things that you want to see as a momentum person who's looking for something to get long. It checked the boxes. It's like Isaiah Thomas. I met the criteria, didn't get selected. It just didn't work out this time so far. I'm sticking with the lows that we had on Monday, though, at 25.75. Why? A loss of that not only means a new weekly low, it concurrently means a loss of the uptrend that we've seen from the lows in November and I guess here at the start of February. It likewise means a loss of that 50-day moving average. So head and shoulders pattern that completes, tries to get back through the neckline and fails. That is, they break down the retest of the breakout level, the continuation lower, beginning anew. And I want to have nothing to do with that on the long side if that's occurring. Even if when you look at this on a sector by sector basis, Thomas, the stuff that's inside the Russell, and particularly those transportation and logistics stocks, those are the ones that make me feel good about the small caps, better than the tech stocks at least still. So I don't know how long I'd be out of the Russell, but this is not great, Bob, as Jamal might say.
Yeah, the Russell's weakness, the regional banks are doing well today. Energy is doing well. So, the rest of the components in the Russell performing poorly. But usually regional banks, energy doing well. You usually see the Russell doing well along with that, but not today.
Yeah, I mean, you want to get bearish on the broad strokes of the stock market when regional banks are up 1.8% on the day. This seems like a lot of weak hands leaving the market, a lot of speculative capital shifting locations. Thomas, I think we can look to gold and silver and the moves that they've had off their highs today, and then the dip and then the bounce back somewhat. Goes back to 49.50. He was off 1% earlier after being up over near $5,100 an ounce. There's a lot of capital moving around today, but if the domestics are holding up, this is why I don't think we can dismiss being dip buyers per se. Dow's positive. S&P 500 now 35 points off the low. A little bit of a rally here in the last few minutes. Maybe some people, maybe Tasty Nation stepping in to sell those puts, Thomas. And they're helping save our positions. But jokes aside, maybe we get a little bit of a market turn here into the second half of the day. You can see these swing lows on that 5-minute chart. We're trying to poke through them and break this defined downtrend that's demarked today's session. We can move over to bonds, Thomas, unless you have some other things to point out about the stock market here.
Yeah, let's move to bonds.
Let's move to bonds. Bonds, what are you doing here today? Bonds have been holding steady today, which makes sense if... No? Okay, we'll move on slides. We'll go right to bonds. Bonds here today. are trading sideways, very choppy. They had a little spat of weakness this morning. You can see as the market turned through that 8:30 a.m. Eastern hour. What data releases did we have this morning? Good question. Well, first off, we had the mortgage rates this morning at 7 a.m. Eastern, 6.21% versus 6.24. Still not in a territory where I can refinance, Thomas, so not sure if I care all that much about it. ADP employment change. For an economy that's in a hiring and firing freeze, this is the data that would substantiate such a claim. We were expecting 48,000 private sector jobs added, came in at 22K. Very, very, very slow. Very slow considering in any given month, you're looking at turnover of what? I think like close to 1.5 million people, maybe 1.7 million people, maybe 2 in some months lose their job every single month. And the economy hires that back. And so then we get our net change of, okay, only 22K. Hiring freeze, firing freeze, everything is status quo. Not enough to make the Fed move when you have growth 3-4%. ISM services PMI came in at 53.8, which was the same as it was last time. So again, services sector holding up. If you're new here, and even if you're not, and you don't really remember what the ISM is, it's a PMI survey. It's a diffusion index. Respondents are given 3 potential answers. 0, things are getting worse. 50, things are staying the same. 100, they're getting better. People submit their answers. They all get thrown into a blender, and you get a number that's anchored to 50. And the more you are above 50, the higher you are above 50, the faster growth is. The deeper below 50 you are, the faster the pace of contraction is. So 53.8 is an economy that's growing actually quite well. PMI services between 53 and 56 are usually consistent with GDP readings above 2%, which is exactly where our growth trackers are. So, Thomas, I'm looking at the data today. I'm not surprised that bonds are just chopping around. We're at the same levels we were at 3 o'clock this morning right now. Maybe this war bid is helping pick things up, but the data is doing nothing to tell us that we should be thinking about a potential change in how the market's viewing the Fed.
Yeah, not enough hiring, but not enough firing. We're looking at growth of 4% this year. I mean, is that where you cut rates? I mean, an economy like that, it's looking. If anything, I expect the rate cuts to continue to diminish a little bit, and it's like it's because the economy it's doing well. So the market, if you get cuts, it does a little better. But if you don't get cuts, it means the economy is doing a little better. It's kind of this weird, balancing act.
That's a great way to put it. There are times when it's like, why are we getting a cut? Oh my gosh, something must be wrong. And then there are times where we get cuts and go, okay, thank goodness there's some support here. Finally, help has arrived. Or a buffer now exists. So those thoughts in the back of my head, I can sweep them back under the rug where they belong. Also, hikes can be good. Hikes and the Fed signaling that we were going to get hikes in the 2010s was always a little initially upsetting for markets. We're taking away our low rates, but the read through ultimately was, but doesn't that mean that we're moving away from the crisis and things are getting back to normal? And so we don't need emergency-like policy conditions? Oh, that's a good thing. And so, yeah, the context in which the cuts and the hikes matter a lot. Just work this out with me. Let's say we have an Iranian strike tonight. Do we look to what happened last June and April in notes and bonds? We're gearing up for something. It's a lot of chatter right now online about what could potentially occur in the next 24 hours. Do you treat this like what we saw in June when running up into those exchange of missiles, we saw notes rally here? Or is the fact that we have had all this signaling about a potential strike, potential engagement, and notes and bonds have not rallied meaningfully, is that the tell? Because I'm trying to contend with the fact that if this really was the war trade, maybe you got gold and silver having rebounded back and stocks are slouching. But bonds aren't exactly playing their part, no matter where you look along the curve.
Yeah, that's the weird thing, because it does seem like some kind of military action is imminent. and yet you don't have bonds railing. You don't have that safety going into bonds. So that's a little like, that's a question mark right there. What happens when the actual strikes occur? Of course, I think it's dependent on, what ultimately happens. Are these some limited strikes, and then we brush off our shoulders and say, we did something, and then I don't know what the ultimate goal is, because if you're going for a regime change, you can't do that through just airstrikes. Or is this some kind of prelude for a more broadened type of conflict? I think that's yet to be seen, but the fact that bonds aren't rallying here, that's a little, it's a little something I've been wondering about.
So there are 2 points of interest here, right? Obviously, last June, you saw bonds notes rallying into the strikes. But if you go back to April 2024, during the first Iranian-Israeli exchange of missiles, that was not the occasion. It was April 19th that the series of events ended, Thomas, right? Who could forget? It was the Ayatollah's birthday that Israel decided to bomb Iran, and then Iran said, this is over. You see in that run-up, we had notes selling off, and the move that we had in oil was so violent to the upside that it was almost like, we got to just really take seriously the threat of higher inflation. Plus, with the U.S. as a combatant in the outcome, or rather in the conflict, you would think the market's like, well, we're not going to treat the bonds of one of the combatants as a safe haven. That kind of makes sense. That's what happened for the Iraq War. You can go to March 2003. I believe, what was it, March 18th, 20th? People can check their charts when we first bombed Iraq. I think the fact that we're not rallying tells a little bit of a story here. We're also not selling off. This is why history is not always a great guide. And how many episodes of Iranian, U.S., Israel direct conflict do we have under our belt? We have 2 in the last 2 years, and they tell completely different stories. So speculating around this is going to be hard. Is it worthwhile? I'm still writing my positions at max loss and notes into the ground. I haven't made any adjustments yet because I have the capital allocated to this place that I want to, at least the sector, if you will. And I'm thinking, Thomas, the fact that we haven't rallied, the fact that we haven't seen a significant move here in notes and bonds leading into this event tells me that they could be weaker on the other side of it. Like, we get the war episode to pass. People are rotating out of safe haven assets back into risky ones. Bonds would be on the wrong side of that, would they not?
Yeah, that's what it seems like. I mean,
that's what we're contending with.
I think this is going to be a story that sticks around for a while, even if these strikes come and go. The West is simply, if you look into it, it's really not going to tolerate an Iranian regime that is the current one that has a capable ballistics missile program with nuclear capabilities. I think that just isn't something that'll be tolerated by the West. And I think that'll be for any U.S. administration that's in place over the next 10 years. So really, I think this is going to be a story that keeps coming back in and out. And things are going to heat up. They'll go through cool phases. But ultimately, I think that we're not at the crescendo of this conflict.
We're not at the crescendo of this conflict, that's for sure. Stocks here, 68.82 in the S&P, still down 2.25% of the NASDAQ. We have to get over to crypto at some point because that's now a new source of indigestion for me as we look into those April lows. Are we back on the slides? No, we're not. So we're going to keep going here. Oh, we are going here. Metals whipsaw. Very good. Let's talk about this metals whipsaw, Thomas. This morning, there was a point in time and space where we had gold up to 51.13 and 90 cents an ounce. We're back to 49.53, so a more modest $18 gain. Silver prices themselves, not quite doing it yet. We did have a move back above our 1 week and 1 month, back above the uptrend from the November 21st lows. And then we failed there again. Oh, goodness, that's not good. That's been 3 days in a row now where following Friday's sell-off in silver, we have tried to retake this uptrend. And given the consolidation zone that we had in the middle of January, it seems like it's now treating former support much more like resistance here. Now, the battle's not done because we do see that silver is jumping off the lows here today. But as someone who is looking to get long again, I can tell you it was very tempting, Thomas, this morning, seeing this at 90, 91, and thinking, this is what we were hoping would happen. I got to get in and chase. But we're looking for a daily close first. We're being patient about this because if we did get in at 90, we'd be looking at a position that was, again, already underwater. And we don't need two of those working for us in silver right now. As good of a run as we've had the past few months, we don't tolerate losers around here for that long. So if we're going to add something in here in order to dollar cost average into a silver position, we need to see a little bit more. And I need to see this daily close back through that 1 week and the 1 month. And that bar has failed today. We get through 89.11 is our line in the sand now. It is accomplished. But a few more days of this chop and failure, we're going to start to see our 1 week and our 1 month moving averages getting below the uptrend from late November. And this starts to become a very different feeling market than one that was just blown up thanks to excessive speculation and too many people in one side of the boat. At the same time, to something that may be structurally impaired from a technical perspective. And maybe we go full directionally neutral and we ride that out to capture whatever silver volatility persists before even a potential deeper pullback.
Yeah, silver is something I'm not going to touch right now, and it's just because I'm in gold. I don't want to be in both products at the same time. I just think this is a digestion period after the sell-off. Kind of need to see what you're talking about, see where price action lands in the next couple days, especially around if something happens in the Middle East. You can say if you believe the strikes are going to be a one-time thing, Trump accomplishes his promise of not, them crossing a red line, and now we're saying we strike them, and promise kept. I think it might be a sell the news event if it's on the war trade, since I think that'll be the case for now. Like I said, I think the conflict it's going to extend much longer, but we're going to go through these highs and lows of fear around this, and I think right now we're building up to it. I am surprised to see the metals haven't reacted strongly to it, but I don't think the strikes themselves will be a buying point.
Well, here's a bit of news that's maybe helping silver get off the lows. Our one and only President Trump says that he thinks Warsh understands he wants lower rates, would not have gotten the job had he said he wanted to raise rates. Take that as you may. Getting a little bit more improvement here, 5 points off the lows, or 5 more price points higher in ES following those comments. You can see silver here is up to now the highest levels that we've had since the morning, about 11:30 Eastern here in New York. Gold, likewise, bouncing up a little bit more too, 49.62. So there's still a lot to go here in gold and silver in terms of figuring out whether or not the rallies are done or we've evolved into a more calibrated, relaxed type of move to the upside, because what happened in January was nuts. Okay, not to say that what's been happening since November hasn't been nuts, but that was really extra nuts. Some stability here, like as a bull, quite frankly, after that washout, I wouldn't mind a lot of chop around 5,000 for a week or two. Just hold the line. Show that there's a rising tide keeping the market afloat and that we're not built on stilts. More gains, great. Would make me feel like this is still a very speculative instrument, but sideways, slowly higher here, 0.5% a day, 1% as opposed to 5 or 6. That would be a positive development. You had a question though. Why is copper down 3.44%? Good question, Thomas, because yesterday I was very excited about copper's move. It was holding the uptrend from the November 21st low. It defended it just like gold did on Monday. And that was all the reason to stay long the metals, because 2 of the 3 were in agreement. That November uptrend was going to be in place. Silver's trying to get back through it today. Gold is making its move. It's still holding up. Copper is putting on the clown makeup. You tell me, why 3.34% lower and back to 585?
I'm not too sure on why copper's falling. Yesterday, I think it was helped by a story that China's trying to expand strategic reserves of the metal, which makes sense. Which China sees a lot of commodities as security interest, whereas America, it's more driven by economic means, things like that. Which I think that tide is also shifting here to more, seeing commodities as power, economic power, military power, etc. I'm long copper. I have a short put spread, 5.7, 5.75, so still holding above the price. I'm still going to hold on to this position. As your chart shows, we're holding this trend that we have. Ultimately, the fundamentals for this year and beyond that they do look good. I think that this might just be based on some speculation in the market, people getting in and out of this positioning, but we have had some consolidation since the start of the year. We're consolidating in this range. So really, I think, we just need to find footing for the next push higher. So as long as we stay above this uptrend, as long as we stay above 5.7, 5.75. I think I'm safe staying long. I feel safe staying long. Ultimately, I think the fundamental narrative will prevail on this. Some speculation in here. So, of course, I think you're going to see these moves up and down. The market get tested. I still feel fine being long, though.
It's a fun outlook to discuss. It has nothing to do with what's happening today or tomorrow whatsoever. But S&P Global put out a report yesterday talking about global copper supply from this year through 2040, which obviously is a little bit outside of the 45 and 21 day out time horizon, Thomas. But from now through 2040, from Chile, either LATAM, DRC and Zambia, Australia, Peru, US, Canada, China, Indonesia, and everyone else, so the entire planet, they're looking at a 6.8% decline in silver production over the next 15 years. That's obviously not enough to lift prices today. But when we think about a market where demand for copper is continuing to go up, in the United States ourselves, even including our wonky tariff regime, before that, we were still looking at an economy that was consuming about 800,000 tons more copper per year than it produced. And that's before we started with all this AI data center build out, what inevitably Thomas feels like will be an infrastructure effort to further electrify and harden the grid, which in the United States is not in a centralized system. It's really regulated on a state-by-state basis, so it is very complex. But it's something that needs to be done if this AI revolution in the most optimistic forms is going to succeed. So copper is going to be a big part of that. The demand expectations for the next 15 years, copper demand is to be going up by 15, 20% during that same time. By some conservative estimates, up to 50% higher, thanks to your solar and EV applications. Where silver prices, do that have an impact on copper consumption? Because if they stay high, you're going to have to move over to copper at some point, some price level. So I'm very bullish on the space. Data like yesterday, that's exactly what I want to see, Thomas. I want to see the things that make me feel comfortable in the views I already have.
Yeah, I agree. If I wasn't in here, like I said, I'm still bullish. If I wasn't already in, I'd be taking a position here. I think it's a pretty good buy point. We have a base here formed over the past month, really. It looks decent. I mean, it's just, like I said, I think there's some speculation in here too. So seeing these big up and down moves, which you really don't see in copper too much. It's really a product where 0.5%, 1% is more on average of what you see. Yes. But you could grab a better price if you believe in the long theory. A 3.5% decline is a gift.
3.5% decline is a gift. Oil, Iran headlines, etc. That's what we're talking here today when it comes to the energy markets. Before we get there, though, a quick look at natural gas at 4.5% today. Thomas, we know that the forecast that came in over the past few days for the 8 to 14-day temperature outlook have really started to improve for large swaths of the country. And now, including here in the Northeast, where we'll be looking at warmer weather. Remember, if you draw a straight line through Indiana, about 70% of the country's population lives over here. All right. The fact that we have a line going through West Colorado, Wyoming, New Mexico, we're talking like 85% of the country's population is going to be experiencing warmer weather moving forward over the next few weeks. So why do I bring that up? If I'm selling calls right now in natural gas, I'm not so worried about this happening for the next few days. Of course, the outlook can evolve. We could always get another cold spell as we make our way through February and into March. But right now, knowing how the temperature outlook is shaping up, it feels less daunting to step in front of it when we had first made the jump. 25% days in a row. I know a lot of people were stepping into this market, and then they spent another week getting dragged through hell. I don't want to get into a situation like that. I'm assuming people who are listening don't want to get into a situation like that. It feels like the odds of that happening now are a little bit lower. So why are we up today? Good question. Beats me. I'm not trading this right now. Natural gas has been a thorn in my side, both for opportunities missed and mishandled. You have had more success, however, which is why I want to go over to you before we talk, Iran. Tell me, how does someone like you, who has made money in natural gas recently, continue to do so?
Yeah, I'm a little less certain on a bullish or a bearish thesis right now for it. I am in one position. It's a short put spread at 3.4, 3.5. So I do want to see a little more upside right here. We do have the EIA reporting weekly numbers for storage tomorrow. Analysts expect around a 350 to 360 billion cubic feet withdrawal, so reduction in stocks. If that happens, that's going to be the biggest withdrawal on record. And of course, that's for the last week, which was, extremely cold. Even Tampa, I think Miami saw temperatures in the upper 30s, and actually got a frost in some Miami areas, which is crazy. But that report comes out tomorrow. However, we're still 206 billion cubic feet higher than last year at this time per last week's report for Thursday. So, this winter hasn't been extremely bullish on, the supply pressure. We're still exporting a lot of LNG, so that's helped. But really, we want to see, if you're bullish, you want to see this really big reduction come tomorrow, perhaps even above estimates, so 360, 370 number. But then it goes forward. What's the weather for the next 2 weeks? You showed it. It's not good. Warm weather, which means mild weather, warmer than average. So people aren't going to be using their furnaces as much. That demand is down. So I think, looking at a big rally right now, it's probably not going to happen, and we're really in the middle of this January low to late January high range that we're in. I think we're around the 50% fib retracement for that range. So really, if you're trying to pick a direction in the middle of this range, you have to weigh a lot of things. And I think maybe the most likely thing we get over the next week is some continued chop around, 3.2 to 3.6, around there somewhere. If I had to pick a direction, I'd probably say just a slightly bearish given the weather. But, this position that I'm at, and I'm hoping that, we make another move up, I could get out, and then I'm probably going to sit on my hands for natural gas until we see, and if we do see the weather turn more bullish, which would be colder. I think we're halfway through the winter, so we do still have a few more weeks to where we normally get storage withdrawals. And then, we have to start thinking about, that the demand levels leveling off as the temperatures get more modest going into March.
52-week highs, 52-week lows, about 2.6, just under 4.2. We're currently trading at 3.315 in the NGJ6 contract. That's not the one that you'll see by default when you go to the platform. We're still in the March cycle there in the H6 contract. But if you go over to the J6, Thomas, that lines up more neatly with a typical Tasty 45 in, 21 out. Thinking about those highs and lows, 4.2 and 2.6, we'll call it. If we wanted to play with a 98 IVR and go 10 cents wide, okay, we could trade around the 52-week high lows, right around them. Do the short strikes right at 4.6 and 4.2 and 2.6. This is a 61% probability of profit trade. It's not quite 3 to 1. It's a little bit better than that, but you're risking almost 3 to make 1. These are decent odds. We could tighten this up, but given how natural gas trades, I think a little bit more time and space wouldn't be the worst thing in the world. Either way, though, a 98.1 IVR, I really don't like trading natural gas. I haven't been good at doing it directionally all that often, and I've mishandled things recently. But sometimes you got to race chip, and I will take these 60% better than 3 to 1 trades as long as we can do it. So we can do it still. Only $250 of buying power. Looking for this thing to chop around, as our local energy commodity expert Westwater suggests. I'm with you on that. Oil, on the other hand, does not look directionally neutral at present time. The oil vol continues to go up. We're at 65.25 right now, so effectively back to the highs that we were trading at, for the week so far, but really back to where we closed last Friday at 65.21. The market was disappointed coming out of the weekend with us not bombing Iran, I guess, because we hit a low of 61.12 yesterday. That's now changed. Interestingly here, what did we see? Low from January 8th, low from January 22nd. That's where the market yesterday gave us this bullish engulfing bar key reversal on the 4-hour time frame at uptrend support. That was the low, and we've since bounced. There's a good enough reason for us to keep looking long deltas here, Thomas. I have a long call spread and a short put spread on. The market's doing what it should be doing if we're gearing up for an unfortunate series of events in the Middle East again. Should we get those headlines, this, of course, then becomes a sell the rumor type of event where that occurs, maybe up towards 67, 70. We can add a few more dollars here. Fine by me. But if you are trading oil right now, I think the caveat is it's kind of like trading silver. Got to be watching it. And you got to be watching the headlines, because you don't want to get caught flat-footed on one of these days where something comes out and it's the catalyst for 5% up and then 5% down. And, you were long and short during the session when it moved 5% either way, and you lost money in both trades because you start chasing for being wrong, for being late rather than being wrong. So oil is going to be tricky here, folks. It's probably going to be the trickiest thing on the board outside of the metals for the foreseeable future.
Yeah, I mean, geopolitics, of course, the Strait of Hormuz, 1/5 of all oil goes through there. So the problem with Iran threatening to close that, and, there has been heightened activity. Some IRGC gunships or warships, which are really just small ships with some 50 cals mounted on them, they've been harassing U.S. flagged ships, but if we do strike Iran, do they try to close the Strait of Hormuz? That's really the only, big thing they can do. But then they also risk, pissing off a lot of the states around them that are kind of, play both sides between the U.S. and Iran. It's tricky. I mean, this is going to be something to definitely watch, not only if you're trading oil, but keep your eyes on all these headlines. If there's a strike, it could come in any moment, especially around, the next few hours when it would be, these really dark moments in Iran, the 1 a.m. to 6 a.m. time frame.
Thomas, we got to keep moving on here. I do want to just quickly point out that the U.S. dollar is bouncing back a little bit more today. Even the Aussie's down some as we think about a market that had a nice little bounce yesterday. Maybe we're just flagging up here, but the Aussie, given the activity in the metal space, these arrows today, the activity in the metal space, in the energy sector, it's been really good for the Australian economy. And if it continues, Aussie is one of the few currencies where you could potentially see more rate hikes while the West is talking about rate cuts. Hey, we're out of time here, but tomorrow morning, rate decisions for the pound, for the euro. Keep an eye on 6B, 6E. Are we getting jolts tomorrow morning? Possibly. We are getting NFP next week, February 11th. is when we are getting our non-farm payrolls reports. So mark your calendars. Other than that, I'll see everyone in an hour for last call with Nick, and then Ilya for overtime at 4 Eastern. For Thomas Westward, I've been Chris Vecchio. Good luck trading. And guess what? Dr. Jim's here. He's coming up next. From theory to practice, you're watching Tastylive.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Wednesday edition of what it is that we are trying to do. Welcome to the Earnings Giveth and Earnings Taketh Away edition of what it is that we are trying to do. Man, AMD, it ain't good. It ain't good at all. But thank you guys for being here and being a part of what it is that we are doing here on the network and with my show specifically. I just really, really appreciate you guys so much. If you're watching over on the Tastylive network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the show. Man, you can all commiserate if you followed my earnings trades yesterday, and you can celebrate if you faded my earnings trades yesterday, just like you should be doing it. Of course, drop whatever questions you have for me down in the chat, and I will try to get to as many as I can. So, Josh, bring us into the market. We got to have a look, man. You know, we got to have a quick little peekaroonie here at some AMD. So, all right, so there you go. The P&L Open bros, man, they're back. Man, the P&L Day bros are back. Like, look at this. P&L Open, not looking too great. P&L Day looking even worse. Somehow, I'm actually not sure how that's even possible. But yeah, AMD. Yeah, I mean, this is it, man. You know, I mean, didn't they report like unbelievable earnings? Didn't they come out and say like, yeah, we're the ones who are running, you know, the bot renting human site. We're the ones who are running, you know, all the subreddits with bot v bot and bot chatting to bot and AI agents this and that and the other thing. And P&L, our profits were great, revenues were great, everything was amazing, and boom, stock down 40. Once again, if you had the numbers beforehand, Like, once again, if you knew the actual results before they were released to the public, I don't know that you can make money. I really, truly don't know that you could accurately predict what the stock is going to do, with the understanding that obviously with positive drifts and positive risk premiums, they usually do tend to go higher over time. But sadly, that was not the case yesterday. So AMD, I mean, we got to pour something out for AMD. Again, my choice would be a banana natty. That would be my suggestion, because you probably don't want to drink that anyway. And so I would go ahead and get something hitting the streets for our AMD position. The butterfly is no more. Somehow they're telling me I can get 8 cents for this thing. Nah, there's no way. That thing is clearly worth nothing. And so the butterfly didn't work. And now we have the short put on at the 210 strike that is in the money by about 10 points. So what are we going to do? Honestly, I think this is the time to tap into our default setting. I think this is the time to go ahead and let's lean on the do nothing strategy. I think this is the time when it's like, okay, we've got a stock. It's got me. It's down 20% today or 17% today, whatever. We're only in the money by 10 points, which is not that much. And I understand it could get worse and it could be just the beginning. And I mean, is iPod Touch here? Where's iPod Touch? Is he here? I think he's here. iPod Touch, the Event Horizon. Is this like the sequel to the Event Horizon? Like, is this only the beginning of the end? Like, let us know, because we need you. We are leaning on you. But I think right now, let's all just kind of, let's slow things down a little bit. Like, let's just take a breather. Let's just do nothing. Let's sit tight. We're right around the break-even point on the short put. Obviously, the butterfly stack of cash, it's a pile of ashes now. Like, it's done. It's over. It's not coming back. But if we just kind of put that out of our mind and say, all right, let me handle this short put the way I would normally handle a short put, you can adjust when the strike is hit. But because I'm already in the March cycle, so I'm already in a cycle with 44 days to go. So time is not the problem here. Like, extending time and adding duration is not an issue here. Like, it's not like I'm in the front week or I've got 21 days to go or whatever, and I'm looking to essentially soften the Greeks by rolling this thing out. I'm not going to do that now because I'm already in March. I don't really want to roll this thing into April, and now I've got a 70 or 72 day option, which is not necessarily like the end of the world. Like, it's not necessarily the worst move ever, but for right now, I like where I'm sitting on the decay curve. I don't necessarily want to turn this into a long-term project if I don't have to. And so for right now, I'm going to sit tight. I'm going to do nothing. Let's see if we can't get a little bit of a rebound, whether it be today, tomorrow, 7 weeks from now, essentially whatever it takes. And what we'll be looking to do along the way is, potentially add a short call to the mix. And we may have to do it at lower prices. That's obviously, the risk that you take when it comes to doing nothing on a strategy like this. And so if you are in a similar situation and you're saying, Jim, I really don't want to do nothing, like I would like to do something, I would be looking to sell a call, and I'll even show you guys right here. I'd probably be looking to sell a call. I mean, let's just look at the chain so you guys I don't have to just randomly talk you guys through the forest here. We can give you guys some hard facts. Market's rallying back. Even S&P is only down 33. Risk-free instrument, also known as the NASDAQ future, is extraordinarily high-risk product, only down 446 after being down about 700 at one point earlier. Got the Russell down 35. I mean, that thing was down 55 just a little while ago. Obviously, you got gold, got silver, got all the usual suspects. But let's talk about this AMD position first. So what I would probably be looking to do here, I might sell. If I was going to sell a call against this 210, I might sell at 240. This might be the one that I would sell. Because typically, I mean, when you think about a strangle, right? When you have a strangle on and one side gets tested, you're typically rolling the other side in to the tune of reducing directional bias by 30 to 50%. If you have a short put on that gets tested, the strike gets blown through, now it's even at or even through your break-even point, and you're like, all right, now I want to do something to control my direction risk and get some more premium working for you. If I sold the 240 strike here, I would pick up about 23 short delta. And you can see that my 210 strike is 55 short delta. I'm no Jacob Perlman, but that looks like about 30-35% directional bias reduction. So instead of being long 55 deltas in AMD, I'm only going to be long 32 deltas in AMD. And so that's essentially the next play. That will be the next move that we'll be looking to do, in AMD. But again, right now, I'm going to sit tight. Let's see if we can't tap into our do nothing roots here, and we'll see if it pays off. And so, all right, so there is our AMD commentary. And we move on. So, oh man, look at Chipotle. Man, look at Chipotle. Guys, Chipotle. I mean, I've been a fan since day one. Like, you can check the tapes, man. Like, I've been all over Drake May. I've been all over Sam Darnold. He's my boy, too. And we've been Chipotle fans from the beginning. I mean, obviously, the stock didn't do anything on earnings because it's a crap company. But the short strangle that we have on, this is a pretty nice looking trade right here. And we're pretty close to 50% of max profit. You know, a lot of times I might kind of sit tight and go for that extra 10 or 12 cents. But I think right now, you know, it's only been a day. Like, we're very, very close to what we would want out of this strategy, you know, ultimately anyway. Let's go out. Let's take it off. Let's take the risk off the table. And then we can just move on to, you know, greener pastures, which, of course, greener pastures in this context is not going to be Uber. It's not going to be Tesla. It might be a little Starbucks. Look at Starbucks up $3 today. Man, we should have kept that leap on, man. That leap was cooking with some avocado oil. And so let's go ahead and let's close out at Chipotle. And we got almost 50% of max profit. So very, very happy with that strategy selection, which I can't say the same for AMD or even Uber for that matter. But Chipotle ended up being a little bit of a winner. So let's go ahead and let's see here. We'll go for $1.27. All right, so we got filled at $1.27. All right, beautiful. So Chipotle over and done with. Now, let's open up Starbucks really quick because we actually have, you know, we have this strangle on that is dangling out there from earnings. Like, we did this guy on earnings, and the up move in Starbucks today is actually hurting this strangle. You can see we're down a little bit. I think I was looking at this earlier, maybe on Monday, and I meant to bring it up, but I forgot because we were talking about other things, and we were taking victory laps in SLV. And where is SLV now? Hold on. Is SLV back to like something crazy? I think it is, right? Maybe not because silver's been off the highs, but 78. Yeah, I mean, that's pretty crazy. Like, when we took it off, it was like 70, right? Or 71. I mean, we can go back and check the tapes if we really want or need to. But yeah, silver is back on its high horse here, man. SLV, it's doing some things to the upside. But anyway, for Starbucks, I think I'm going to take off this strangle too, simply because on Monday, I remember in my notes, I wrote down Starbucks is at 50% of max profit. Let's take this guy off. But then again, I got swept away on the victory lap in SLV. I mean, it's the first victory lap in 10 years from theory to practice. And so you have to, you know, afford me a few extra minutes around the basis. And we took every bit of that 19-minute victory lap. You can bet your bottom biscuit on that guy. But Starbucks, you know, I think right now it's not at 50% of max profit anymore, but that's not Starbucks' fault. I mean, everything else about the business is Starbucks' fault. This isn't Starbucks' fault. And so I'm thinking, let's go ahead and take this guy off and just kind of, you know, we can kind of move on. And we'll leave our 100 shares on, of course, because that has become, it's just kind of, I mean, it's part of the core position. It's like you guys in the chat, like you guys that watch the show on a regular basis. Like, I appreciate you guys, man. I appreciate you guys so much. You guys are part of the core position. You're in the inner circle of the core position. Starbucks, our long share position, it's basically in the same spot. Like, this guy is essentially the same trade. And so we're going to leave that on and then do some things around it, you know, as Starbucks continues to, maybe we'll sell a call against those shares. Wow, yeah. Because remember, our original purchase price is 92. Now, if you go back to, this was like at the middle of December, I think. It was close to the end of last year. I spent like 15 minutes. You could even find it on YouTube. In fact, I would actually watch it on YouTube because your boy needs that watch time. So go to YouTube, find the cost basis reduction video that I did about Starbucks, and we worked it all out. We spent like 19 minutes. We scribbled out like every trade, every tranche, all the premium, all this, that, and the other thing. Yeah, sure, we could have gone to the Allison Chains and done it in 3 seconds, but what fun is that? We decided to just break down every single transaction, and we had a good time. It was only 18 to 19 minutes of your life that you'll never get back. And so go to YouTube and give that guy a look. But I think maybe we'll sell some premium against this guy now. Yeah, maybe we'll do that. So hold on, let's close out of the strangle first, though. Man, we have so much to do today. So much to do today. We gotta do Google earnings, right? I think Snapchat's got earnings today. I mean, they're still doing it, man. Like, they're still out there and they're making things happen, which is more than we can say for ourselves a lot of the time. And so I tip my cap to Snapchat. I mean, obviously I'm gonna play it going down to zero. But yeah, so Snapchat's today, Google's today. I think Roblox is today. Might even do a little Roblox today. Oh, excuse me. Might even do a little Roblox today. But let's look at Starbucks. So Starbucks, I can sell. So my basis, so the stock is at 96 and my basis is 92. I know it's a lot lower than that with all the things, but I'm just looking at the purchase price. All the additional stuff that we did around the edges, it's all gravy, man. Like, it's all 100% gravy. And of course, it's gluten-free, it's dairy-free, it's soy-free. Don't worry about it. It's basically tasteless. And so if I go into Starbucks, though, we could we could sell, I'll tell you what, let's sell the 100 call. And I'm actually intentionally choosing a strike that is a little closer than I might usually choose, simply because I would like to get us in a situation where this covered call is in the money. Because this is a question I get all the time, and this is something that a lot of traders / investors have to deal with, right? Like when you have a covered call on, you sell a call and the stock goes down, that's fairly easy to work with. It's really not that difficult. I mean, you decide when you want to take the call off, and it's not that complicated. It can be the first couple times you do it, so I'm not trying to downplay it completely, but relative to, I have a covered call on, the stock races up, and now my short call is in the money. Now what do? That's a much more complex situation. There's more moving parts. There's more things you have to consider in terms of, buying back intrinsic value and kind of reclaiming some stock appreciation that you lost. And what is that going to cost you? And how do you manage the time element of it? And so let's sell this 100 call for like 228. That's fine. And let's see if it goes in the money. We'll see if it goes in the money, and that will give us, a nice little project, an ongoing project to have to deal with. And so let me delete that. Let's go to, let's see, let me try early on in the life of this Starbucks trade. So way early on, so we got filled at 2.25. Okay, perfect. Early on in the life of the Starbucks trade, we had a situation, of course, where we had covered calls on and the short call did go in the money. And so we had plenty of, situations where we talked this through on the show. And so if you are brand new to the show, by the way, let me bring up my activity page in Starbucks. If I go all the way back to, I know I've done this a million times before, but if you're brand new, like you've not seen this before. So if I go all the way back to December of 2024, like December 20th, 2024, like if I scroll down on the screen, you can see this is where we bought the shares originally, December 27th, 2024. I mean, we're going on like almost a year and a half now. Well, just over a year. We got a little ways to go to get to that year and a half marker. But this is solid, man. Like this has been a really, really good kind of long-term project. Well, the great thing about only trading live on the show is, if you watch the shows on these days, when I made a trade in Starbucks, all of this is on tape. All of this is live on air. So if you go back into the archives and you watch, 311 and you watch, 429 and you watch, 52 and 615 or 612 and 515 and what have you, and I'll scroll up on the screen so you can see, the rest of the dates. But these are all the trades I made in Starbucks. So there were instances early in the life when the short call was in the money and I talked through what we decided to do. If memory serves me correctly and my Blueberry game has been on point, I don't think we did too much of anything. I'm pretty sure we did a lot of doing nothing, but I talked through why we were doing that. Like I outlined the gimmies and the gotchas, and I gave you 18 minutes of commentary, and we didn't do a single thing. So it was very much, in line with the rest of the show that you've come to expect from me. And so there is Starbucks, some commentary about that. All right, so let's see here. Let me do, look at gold up 28. Hold on, we got to throw one out for our shifties, man. Gold up 28. You got silver's up, $3. I mean, everything is looking good. Gold was up to like 5,100 though earlier, I think, right? This morning. If I look at gold, it's just 2-minute chart. So we got to get my man E those royalties. Don't forget, guys, every time you guys click on a 1-minute chart or a 2-minute chart, you unlock the Errol Coleman settings on the platform, and that gives him a 17-cent royalty. He gets 16 cents on the 1-minute chart and 17 cents on the 2-minute chart. So we got to give my man that little bit of premium that he deserves. But yeah, gold was up to, right on the market open or the metals open, right in this kind of window here. Gold was up to almost 5,100. And then silver is similar around the same time, I think was the high of the day so far. Yeah, it was around 92. Look at that. 92, and now it's down to 86. And so, I mean, it was up $10 at one point earlier. But you know what's kind of wild? Let me look at a daily chart. Like today, I mean, this is still a pretty crazy day, right? But these feel like nothing relative to this monstrosity that was Friday, obviously, right? I mean, these feel like really like nothing at all when you stack them up against, this huge move on Friday that was just a few days ago now. And so anyway, it does feel like the volatility is beginning to compress a little bit in the metals, which I think, even for those of you out there that are looking to trade the metals and you're looking to kind of Shooter McGavin some silver and, this, that, and the other thing, I mean, this is welcome, I think, across the board. Because when it's moving, 30 to 50 cents a tick, that's pretty difficult to manage, right? Even for the most active of traders that are out there. I don't even think your algos can keep up at that point. And so anyway, it's definitely welcomed for silver and gold. So all right, let's go into Was that it? I think that was pretty much it. I mean, Uber, yeah, we're not going to do anything with Uber. We got 2 days left. Uber's down $3. We're going to sit tight. Yeah, sure, we could save our 90 cents if we close it out now, but what fun is that? We paid the price of admission, right? We already paid our ticket to ride, which is a super fun game, by the way. If you have small children at home, Eli got Ticket to Ride for Christmas, and we started playing it the other day, and it's so much fun. You've got all these trains, and you've got cards and whatever, and you have to, it's like a map of the country. Well, there's also like some Canadian cities and stuff too, but you have to basically, stack these little trains to go from one city to the next, and you have these little tickets of these routes that you have to claim. Right. And you can't tell anybody what your routes are. And so it's so much fun to play with the family. And I obviously dominate that game, much like I do every other game. But it's fun. At least it's fun for me. And so anyway, we've already paid for the Ticket to Ride on Uber. And we're going to go ahead and run that guy all the way to the end. Let's go to Google. All right. So Google. Are we doing Goog or Google? I don't know, man. Goog 334, Google 333. Okay. We're going to trade Goog. Because I'm only looking to trade premium stocks today. So 334, I'll take that extra $1. So let's go into Goog. And what I want to do here, again, guys, don't overthink it. Don't overthink it. Don't let today spook you. Don't let today scare you. I mean, obviously, my underoos, they're a little bit soiled, much like yours probably are too. But let's go. But let's go ahead and play Google to the upside. We don't need to overthink this, guys. We don't need to overthink this at all. Let's go into the 2-day cycle. Let's go with the tried and true, man. Let's go with an upside butterfly. Let's go with an upside expected move butterfly. Let's do a 335, 357, 380 butterfly. And okay, that's 538. That's a little bit expensive, just in case it doesn't work, which happens from time to time, a la AMD, a la Uber, a la the other AMD trade. And so 22.5 points wide, that's really nice. I love the width of the strategy. The problem is, it's a little bit high from a maximum risk point. Like, remember, when you pay a debit for a butterfly, that is the most you can lose on the strategy. And so that's obviously better than doing something like a short put in AMD for earnings, because there is no maximum loss point. If this thing just keeps sinking, then the pain is going to intensify. But of course, you get higher probabilities. You get, unfiltered exposure to the Greeks. I mean, there's, gimmies alongside all the gotchas, as we've learned many, many times before. But I think for us here, I like the 22.5 points wide. Let me try to go up a little bit. Let me do 362.5, go up 5 points, 385, and then a 340. Okay, so that's only 457. That's much, much better. And we are still kind of, I like to straddle the end of the expected move. I mean, that's why it's called an expected move butterfly. I like to kind of have my optimal point be as close to that edge of the expected move as possible, because that is showing us statistically, like, not my opinion, not subjective conjecture. Like, this is based on the implied volatility of the marketplace and just based on, the option pricing dynamics in the moment right now. This is the expected move of this stock. It's not anybody's opinion. It's not anybody's prognostication. Like, this is just based on the objective metrics in the marketplace, which is not to say it's always going to hit that, of course, but it just gives us some objective baseline for, a reasonable expectation of how much the stock might move on whatever number might be, presented here this evening. I think Google is tonight, not tomorrow morning. Google's never in the morning, I don't think, right? Yeah, it's tonight, I'm pretty sure. And so, all right, I don't mind this, but let me go ahead. I'm actually going to take this guy in just in case this doesn't work, right? Let's go into a $20 wide. Let's go 340, 360, 380. Okay, now it's only 386. We still have 20 points to work with on a $330 stock, right? So there's still plenty of room to work with in the event that this works. Now, you want to remember, whenever you have a butterfly that's not as wide, you've got to thread the needle. You've got to thread the needle a lot more finely. And so this is going to require more of a surgical level of precision. And so we'll have our scalpel ready to go for the trade here tonight. So 340, 360, 380. 390 is going to be the debit on the strategy, 395. And let's do it. So this is our Google earnings trade tonight. I'm actually not going to double dip on this one, George Costanza style, which I wish I hadn't last night for AMD, of course. But it is what it is, because it ain't what it ain't. So 395. All right, so we got filled at 395. So there you go. There's the Google earnings trade. There it is. Beautiful thing, right? You guys have plenty of time to fade that trade. If you are not on the other side of that trade, I don't know what else I can do for you. Like, I really don't know what else I can do for you. And so, let's see. Let's go ahead and Josh, I see you down there. I appreciate you, my friend. Let's see. Man, where are you guys at in the chat? Let's go. Man, I see you guys in the chat. Man, I see old Two Faces here. Man, Base 8 even showed up. Look at this stuff, man. Ranch is here. Catch that voltage in the house. Wow, Bernard Don in the house. Man, look at this stuff. I appreciate you guys so much. Man, I'm going to surprise and delight Bernard Don because I sent him some cash before the show for him to plant this comment in the stream, and he did not let me down. Bernard Don 7752 says, believe it or not, after the early morning segments with the studies and the trade ideas, this, he's referring to from theory to practice, is my favorite segment. Thanks, Dr. J. Man, I appreciate you. I appreciate you so much, my friend. And so I'm really, really glad that you're here. It's not, without you guys, we couldn't do what we do. So the only reason that we can do any of this is because of you guys. The only reason I can do what I'm doing here on the show right now is because of you guys. And so thank you guys so much. Like, it is not lost on me that, you guys, many of you guys, watch the show on a regular basis. A number of you guys are watching the show on a daily basis. Like, that's really, it's so cool, man. So thank you guys so much. And I hope it helps. Let's see. A Will says, Dr. Jim, best part of my day right now, man. You guys are draining me. I already lost all my money on AMD. Now I got to send you guys out of this cash that we talked about. Man, you guys are coming up clutch today. I appreciate you guys. I appreciate you guys so much. Let me see. Let me try to, do I see any, oh, well, here we go. I'm going to surprise and delight somebody. That's at the very beginning. So it's not really a surprise, nor is it a delight, but it is an actual trading question. So let's actually, let's kind of mix it up a little bit. So Orgdenu, I mean, that's why you guys are here, right? Orgdenu says, hello, Dr. Jim. For earnings plays, depending on the situation, I tend to do long call spreads or put spreads. What is the best DTE to capture the movement? Yes. Okay. You said long call spreads or long put spreads. Okay. So here's the deal, right? If you're doing a long call spread or a long put spread, let me just assume that it's at the money. So if I assume it's like, the at the money strike, what is the best DTE to choose to, put yourself in a position to capture the movement? Okay. No matter what expiration you choose, you're going to essentially pay half the width of the strikes. In fact, here I'll even show you. Like for Google, for example, if I was going to do like a 2-day earnings trade, like let's say, obviously I'm bullish on Google, right? So let's say I wanted to play that in the 2-day cycle. I buy at 330 and I sell at 340. It's going to be about $5. You see it's 486. Oh, excuse me. It's 486, right? So I'm risking one to make one. Okay, let me delete that. Let's go to the 23-day cycle. So I'm going to do the exact same trade, right? I buy at 330, I sell at 340, 497. About the same. I mean, it's 10 cents off. I mean, it's basically, a 1-for-1 comparison. And then if I go to like a 44-day cycle in March, I buy at 330, I sell at 340, 493. Same price, right? Because it's essentially the same trade in terms of the risk dynamics of the trade. Now, what is going to be different? Okay, the speed of the movement is going to be different. And so you said, how do I best capture the movement? Well, we got to kind of flesh that out a little bit more. Basically, the shorter durations, 2 days to go, 9 days to go, whatever, those are going to move much, much faster. So if you are right on the directional movement of the stock, you're going to get paid very quickly. Like you're going to see the spread reach 50% of max profit or even beyond potentially the next day because there's not as much extrinsic value in the options to slow everything down. Extrinsic value in the options are essentially, they're like yield signs. They kind of slow everything down. And so the more of that's in the option, the slower things generally tend to move around. And this is part of the reason why, when we get to 21 days to go, we like to roll things out so that we can slow things down and kind of get more extrinsic value kind of in the mix because it slows down any intrinsic value changes. So if you want to capture the movement quickly, then you're going to want to choose 2 days to go, 9 days to go, something like that. If you want to capture the movement more slowly, then you go further out in time. You go to 44 days, you go to 30 days, 23 days, whatever. And so it depends, Orgdenu, on what you want to do and how quickly you want it to move. But the risk dynamics of the trade, like risk one to make one, as you saw, it's exactly the same. Off by a couple of pennies depending on bid-ask spread differentials and potentially implied volatilities at those strikes in those cycles. But it's not going to be that different. It's going to be essentially the same. And so it's up to you. It's up to you. I mean, generally speaking, I personally mix it up. Sometimes I'll do something in like the front week that I'm going to get paid really quickly if it works. I would say most of the time I'm choosing something with some kind of duration to it. Just in the event that it doesn't work, it's going to slow it down a little bit and it's going to allow me to kind of assess the risk a bit more gradually over time. And so I would say, you know, from time to time, I might do like a 2-day or whatever, but, or a front week, but I'm usually choosing something closer to 45 or even like 21, probably 21, between 21 and 45. Man, look at the EME S&P is only down 15. Look at these guys. They're going to be unched on the day. The Russell's only down 19, also going to be unched on the day. The Boomers obviously leading the pack like they've been doing now for what, 80, 90 years. You got NASDAQ down 345. And so, wow, that's some good stuff, man. All right, where are we at? Danish Dynamite's in the house. Crash Boom Bang, Google to the downside. Nah, man, I'm going to have to take the other side of that, which is good for you. Because as you saw with AMD last night, you know, earnings giveth and earnings taketh away. And Dr. Jim giveth if you're on the other side. And Dr. Jim taketh away if you are tailing. And so keep that in mind as you consider your Google plays tonight. But good luck to you, my friend. And thank you for being here, of course. iPod Touch in the house. What's going on there, iPod Touch? I appreciate you so much. Google to save the market. Be careful. Ooh, I don't know if that's sarcasm or if you are giving us a prognostication. Or maybe you're saying that banking on Google saving the market, you need to be careful with that. That would fit more in line with your Event Horizon calls. And so I'm assuming that's what you mean, but I could be wrong about that. And but yeah, look at that, man. Crash, Boom, Bang, indeed, Danish Dynamite, iPod Touch, giving us a fair warning. Thank you very much, my friend. Sam L's in the house, iPod Touch on fire, Event Horizon hit. Doc, that was clean. Yes, it definitely was. iPod Touch he's the man, the myth, the legend, and he is here in the flesh. And by in the flesh, I mean, you know, he's in cyberspace. And so I appreciate you there, iPod Touch. Let's see, Jerry Martokia, TC, let's see. Oh, that might be a previous conversation. And so thank you so much for sneaking in here, though, Jerry. I appreciate you. Sam, I'll do my daily duty, confuse the algo, support the doc. That's all you got to do, man. But you can't confuse the algo. Like, they're getting too smart, man. Like, they're getting way too sophisticated. And so we're going to have to reach in our bag of tricks and try to figure out some new things to do. And I don't know what that is, but y'all got to help me out because I'm going to need it. Major Boothroyd is in the house. What's going on there, Major Boothroyd? Appreciate you, my friend. Sam L., the algo said, watch the doc. Who am I to argue? I appreciate you. Thank you so much. And Sam L says AMD added again, advanced money destroyer. Never disappoints. I know. I feel that way. I mean, let me look at a chart of AMD. They don't always go down on earnings, do they? Because obviously the stock has done amazing. It's done incredible over the course of the last however year, 2 years, 3 years, whatever. Let me look at a daily chart going back like 2 years. We should be able to identify the earnings pretty cleanly. Right, there's February. Yeah, that must be earnings right there. October and then February? That seems a little weird. Maybe it was here. I don't know what that was, but that I'm assuming that was earnings. Did they do October 2nd and then February 4th or whatever? That doesn't really make sense. But maybe. So I mean, there's a huge gap up. There's another little gap up. Maybe earnings were here at the end of October. Let's go back. Again, we should be able to identify this without even, pulling. Oh, maybe we can't. I don't even know, man. I don't see anything obvious. I mean, yeah, okay. So I'd have to like dig into the actual like earnings dates, which I don't really want to do. Maybe that was one. Maybe, I don't know. Maybe that was another one. I'm just looking for the big gaps. I mean, that's usually what happens on earnings with individual stocks, but it's not clear. And so anyway, advanced money destroyer in the house, 100%. And so let's see here. Wolf in the house. I appreciate you, my friend. Look at Ramsey. Maybe Ramsey. Ramsey, thank you so much for being here, my friend. I appreciate you. I don't recall you having been in the chat before, only because I don't recall my stumbling over your name before. But I hope it's Ramsey. I'm going to say it's probably Ramsey. I'm going 85 delta on that. Feel pretty good about that. Thank you so much for being here, my friend. I appreciate you so much. Sparky Dog in the house says Doc is here to pump the market. Man, we did it. We did something. EME S&P is only down 18. They're flirting with turning green now. Russell only down 17. NASDAQ is still struggling, but I mean, the NASDAQ was down to, it was down to 783. So it was what, 300 points lower? Yes. I mean, it's shaved its drop in half, which is pretty impressive. AMD hasn't really followed suit, but it is the advanced money destroyer. And so that's pretty much par for the course. Let's see. Anderson, Homestead, they take it for sure. Yes, they do, my friend. Yes, they do. Sergio's in the house. What's up there, Sergio? And let's see, Stan Lucian in the house. Just hold tight. That's what I'm saying, man. We're gonna do that. I mean, I don't know if it's a good move. I mean, you guys, we're all gonna find out together. Like, you guys can come and you can troll me tomorrow. You can troll me the next day, whatever. And obviously, you're gonna have plenty of other things to troll between Google's and. Are we gonna trade Snapchat? Hang on a second. Where are they at? Seriously, $6. Man, look at this thing. I mean, it is just a piece of junk. Look at this thing. So if I go into like the 44-day cycle, hold on. I mean, you can't do the options in here, obviously, right? Because there's nothing there. There's no reason to do that, right? There's no reason to do that. You know what? I can't believe we're doing this. Like, I can't believe that we're doing this. We're going to buy some shares in Snapchat. So this is it, guys. Like, today is day one. And I'm not talking about day one of the market going down. No. Today is day one. I got you, Josh. Josh is saying just do it. We're going to do it. Today is day one. We are now long-term investors in Snapchat. Like, this is it. I'm hitching my wagon, my financial goals, my financial future. I'm hitching it to Snapchat at $6 a share. Like, let's do it. You buy the shares, you sign up for the dividend reinvestment program. It's like bada bing, bada boom. And the next thing you know, you're down 30%. But Snapchat, let's do it, man. I mean, the margin, I think we're going to get a buying power relief if we do this. $300. Yeah, that makes sense. It'd be 50% of whatever the notional value of the contract is. I like it. Let's do it. And I'm not selling calls against this. I'm not looking to get cute and fancy. Like, we're just long-term shareholders in Snapchat now. Like, I kind of want to vote. I kind of want to be a part of, the vision of the company going out into the future. So let's go ahead and let's buy it. I'm even going to lift the offer, man. Let's do it. All right, so there you go. I got filled 100 shares of Snapchat. Now I have a reason to listen to their earnings call tonight. I mean, I won't do that anyway, but I do at least now have a reason to do it. But let's see. Sam L. Doc, just when you thought it was safe, I know, man. But the market's coming back. So everything's coming back. I mean, even gold. Gold was under 4,900 earlier. It's rallied back. Silver obviously has rallied back. I mean, silver was up to 92, but I think it was down to like 82 or 83 as well. And so it's going to be interesting to see what they do for the next hour here going into the close. Let's see. Viggy Zags, do we even have a market? We got something, man. We absolutely got something. Sergio says P&O Open Bros are having a party in my account right now. I hope that's a good thing, not a bad thing. O'Neill's in the house. Hey, Dr. Jim, thanks for all that you do. I appreciate you there, O'Neill. And thank you. I think I'm getting that right now. I remember from the email. So thank you for telling me how to say that phonetically. And so I appreciate you so much, my friend. Thomas in the house. Me too, man. It's a P&L party with a frowny face. So that means that the P&L Open Bros, that they're affecting you mentally. That means that they are negatively impacting your emotional state. Hey, I've been there. And I'm going to show you what you need to do. This is an internal thing, right? You don't need to do anything to them. What you need to do is just do this. That's it. You don't need to make an adjustment. You don't need to roll. You don't need to manage. That's it. Boom. Gone. It's gone. P&L Open. What P&L Open? I don't see a P&L Open. At least I don't see one that's giving me problems. Right? And so there you go. Just get yourself a little drawing tools. You got it, man. No problem. Let's see. Where are we at? Viggy Zags always moving down. Yeah, AMD, that's good. Sam L, the Open P&O Bros are back. Yes, they are. Unrealized legends. There's something, man. They're unrealized something, that's for sure. Ashfin in the house. What's going on there, Ashfin? I appreciate you, my friend. A few minutes late. Nah, man. You're right on time. Man, you are right on time. Whether you're watching live in the archives 4 years after the fact, it doesn't matter. It does not matter. I appreciate you so much. Ordenu, I like that. I did a short put vertical. Was that in Google maybe? Okay. Well, good luck to you, my friend. Let's see. iPod Touch, one time framing up now on the 5 and the 15 minute. Man, look at this guy, man. He's making things happen on the 5-minute charts, on the 15-minute charts. He's not messing around with daily charts. He's not messing around with 4-hour charts. My man is in there in the weeds on the 30-second charts. Man, let's go. Anderson, pour some out for the homies. You got to pour something out for something, man. That's for sure. Stan Lucian, should I buy some SPY? I don't know. I mean, it's down. I mean, obviously there was a golden opportunity earlier. I mean, the VIX was up to 21, I think, right? Hang on. Let me scroll down here. The VIX is at 18. Yeah, this thing was up to like 21, I thought. Yeah, look at that. So it was up to just over 21. That was the time to sell some premium. Like obviously this morning when, even S&Ps were down like 70 or 75, NASDAQ was down 650 or whatever, like that was the time to get in there and sell some premium. Whether you sell a put, sell a strangle, whatever, even vertical spreads, whatever, that's the time to do it. And so, a lot of times, I mean, the contractions are swift, man. The contractions are very, very quick. And so if you're not ready to go, when it comes to selling premium, sometimes you can miss the mark. Now, thankfully, the market's not going anywhere. Like, thankfully, there's going to be plenty of opportunities, later today, even tomorrow, the next day, what have you. So if you did miss an opportunity to sell some premium today, I wouldn't necessarily get all bent out of shape about that. Just wait. I mean, there'll be more opportunities later on down the road. And not to mention, if the VIX is 19, 20, that's still much better than a VIX at 14, 15. Right. And so, this is kind of, if the VIX stays around here, let's say that we get a market where for the next, I don't know, 4 to 5 weeks, maybe we get the VIX kind of bouncing between, 17 and 23. I mean, that would be some really nice premium opportunities for us, pretty much across the board. And so, anyway, hopefully that helps a little bit. A Wills, I appreciate you, my friend. Sam about burning the stack of cash. Nature is healing. It's doing something. That's for sure. Ron Vashar in the house. Glad I didn't follow the advanced money destroyer trade for the love of the alcohol. Hey, man, I'm here for you guys. Don't you guys ever forget that. Don't you guys ever forget that. You guys are my top priority. And by top priority, I mean, you might not be in the top 5, but I'm working to do whatever I can do to help you out. And so I appreciate you guys so much. Let's see. Bernard Don. Oh, there it is. I made it back to the surprise and delight. Man, that's good. That's a personal goal that I have every show. Let's see. JT is in the house. Doc, I've been looking for advice on how to break into the industry. Any advice? Also, pros and cons of pursuing a PhD in finance versus the industry. Oh, man. Yeah. Okay. So you mean into the trading industry, obviously, right? Yeah. So, as far as breaking into the industry, I mean, I think the number one thing that you could do to break into the industry is, I mean, you're obviously actively trading, right? And so you're gaining experience and you're gaining exposure. And so continue to do that, of course, but just, I would sink into everything you can kind of sink your teeth into when it comes to understanding different concepts. I would just be a sponge for the language and the terminology, because I mean, one thing that I can say from firsthand experience, and I doubt it's any different now, is coming out of college, like undergrad, even MBA, I knew the concepts intellectually, but I couldn't really converse with people that were actually in the industry because we didn't speak the same language. I would use terms that didn't make any sense to them, and they, of course, would use terms that didn't make any sense to me. And so I felt and was very much an outsider. But then obviously, joining, I was even that way after my PhD when I, taught for 6.5 years. But then joining Tasty and, actively trading and being around traders all the time, because you got to keep in mind, I mean, Tasty Trade didn't exist. I mean, I guess it came online in 2011, 2012. I didn't find it until 2015. But I mean, it was very difficult if you weren't a professional trader in some capacity. It was very difficult to kind of get used to the language, but you have an amazing opportunity to do that, so that, if you have opportunities to interview or do whatever at, hedge funds or, I mean, even mutual funds or whatever, whatever road you want to go, you'll speak the language, and that will put you ahead of people that are just coming out of school and don't have the vernacular down. So that's my first piece of advice. But my second piece of advice, as far as a PhD versus, the industry, PhD route is very good if you are interested in going academia, which is where I came from before I joined Tasty, or government work. And so generally speaking, a PhD in the private sector is, the work experience would be far more valuable to you. And so it depends on what road you want to go. If you really want to break into the industry and be a practitioner, I would not go the PhD route. Your resume will be far better off gaining experience and gaining exposure, even if it is kind of on your own. Not that you couldn't do a PhD in trading. I mean, that's what I did. But those are my thoughts, and hopefully that helps you a little bit. But man, I'm just about out of time. But I see Emmett Morrison is here. There's Emmett Morrison. Did you empty the fire extinguisher, putting out the sacks of cash that were lit ablaze yesterday, man? We only got a little bit left. We pretty much exhausted the extinguisher without question, as you see. But we got a little bit left in the tank for Google tonight, so that's a good thing, because I have a feeling that we're going to get crushed on that guy too. But again, you got to tune in tomorrow to find out. And I guess that is that. So I see you guys, though. Rets Media, Rodrigo, Man, old Two-Face, I see all you guys. I appreciate you guys so much. So very much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Hello again, Tim Knight is here with charts. Okay, even an AI misfire. So another cool day in the wonderful world of equity trading and options trading. AMD reported last night, as you know, and as I said yesterday, I was definitely short AMD, short SMH, and a bunch of other AI type stuff. And to my great relief, AMD plunged and stayed that way. Sometimes things would plunge and then just make an obscene dreadful gesture with their middle finger to the one or two bears left on the planet and go flying higher. Didn't happen this time. They stayed down. I came into the day aggressively short, and I, about an hour ago, maybe 90 minutes, covered SMH, spiders, and IWM. But I'm still short 35 individual positions. And tonight's Google, and it's probably going to be a snooze fest. I mean, Google's a really boring chart. I've made millions of trades in my life. I don't know if I've ever traded Google even once. It's a total snore. I'd love it if it plunged tonight. That'd be cool, but I have no position at all. And if I had to guess, they'll probably go up. They're like a utility company. They're just like, trot on their, they come in on target and life moves on. So tomorrow, Amazon should be more interesting, but we'll see. I could be wrong. Google could be exciting. But anyway, I've got some charts ready. That's what I do before the show, and I'd love to show them to you. So let's jump in. We start off with the champion of the day, AMD. Yay, you go, girl. AMD is down hard, about 16.5%. It has, of course, had a sensational time for months now. And I'm hanging on to this bad boy until, hopefully, we grind our way back all the way back to this price gap. That's my target. So here I sit, doing nothing. I'm just throwing balls for the dogs and tidying up where need be. But yeah, I'm staying put. SMH, which was my biggest position. I didn't notice this. It actually did a beautiful tag here. That's pretty cool. So I covered that about, like I said, 90 minutes ago or so. Got a good price, and maybe it'll bounce. I'd love to get back in again. So that worked out well. The cubes are down about 1.5%. The kinds of failures I've been showing you, the diminishment of momentum, the narrowness of the rally, the failed trend lines, the price gaps, on and on and on, has worked out as God intended. So that's nice too. What's the old saying about like on a long enough, it's like zero hedges back when they were a bearish site. On a long enough timeline, the value of everything is zero. I think on a long enough timeline, everything I predict becomes true. Sometimes it just takes longer than I hoped. I don't believe in crypto. That seems to be falling to pieces. I don't believe in the values of these equities. That seems to be finally turning tail. Jury's out on AI. AI's been the underpinning of this entire rally. People are, the one effect on that isn't so much like AI is failing or AI was a fraud or anything. It's more like AI is destroying entire sectors like software. So we've seen hundreds of billions of dollars wiped away in just a matter of days off of, Intuit and Workday and Monday and on and on and on. Dog toy industry is thriving though. What else is cooking? Oh, Kathy D. Wood. I made mention how ARK's relative performance versus the NASDAQ had faltered, and down it goes. Red. So, yeah, she's aggressive. She's a crypto gal and a Tesla person and a permable, and that works great in when trillions are being printed by the Fed in COVID times, but not so good right now. Guys, this is a huge house. Could you go somewhere else? Jesus. Okay. Moving on. Sorry for any of the ambient noise, but that's the lifestyle we choose. Fangs, as predicted, are going down. This is a beautiful top. This, of course, Lord, hang on a second. People. All right, hang on. Okay. This is the reason. Okay. Anyway, behave yourself. The fangs are falling, and I wouldn't be surprised to see this rally some back to resistance, but it's in trouble, I would say. Doomed as doomed can be. Yes, it is. Sadly, very sadly, I came into the week with the biggest position of my life with FNGD, and I got out with a peewee profit, buy a couple of lattes with it. This thing has exploded higher. It was a little bit of a messy chart. This was a bit of a fake out, the faltering beneath this line, but today and yesterday have been sensational, and believe me, I've counted the profits that would have been on that. It's sad, but FNGD is finally what's going on between my legs is of interest. But anyways, you're distracting me. Okay, what else? The diamonds. Lifetime high today on an intraday basis. Are close to it. Let me see. Yeah, there it is. Look at that. So this is exciting. Why is it exciting to a bear? Because things are still high, We still got sectors of the market that are just very lofty, very elevated. And there are certain ETFs that are just doing great. XLB, XLC, I don't know why. The transports yesterday were at a lifetime high, so it's not like the whole market's falling to pieces. So there's still strength out there. I think we're very early in this whole thing. EFA, which is equities outside North America, was at a lifetime high earlier today. So, I sell into strength. That's what I want to do. I'm not doing this in particular, but there's still a lot of buyers out there. Out of 100,000 people, you're going to find one bear, maybe. These days, probably 0.5 bears, but the buyers are still out there, absolutely. The small caps have really cracked their trend line. We got lower today than we've been in a number of weeks. Now, at the moment, we are teetering right at that trend line right now. So it's not a real failure, but we've got a nice bearish engulfing pattern on the candlestick. We've got the best crack of the trend line we've had. I've been acquiring June puts in the IWM today. So that's looking pretty good. That island reversal pattern that I pointed out last week foretold of forthcoming weakness, helpfully. But as I say, it's not just blood everywhere. There are some sectors that are thriving. Energy, XLE, zooming higher. XLP, consumer staples. I guess these are defensive plays. Also blasting higher. So there are pockets of strength out there, but on the whole, as I glance over at my screen here, it's just a beautiful bloodbath. For instance, let's just thumb through a few. Yesterday, I ran out of time. I had to just jump to the end, but we've got a little more time today. Some odds and ends. Here's poor old Axon, which sadly I'm not short, even though I talked about it as a great short, and it was, but didn't do a thing about it.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was awesome. Not a paid, you're not getting paid for this advertisement.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with Tasty Trade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Yeah, and I'm fun on the block all day, all night. Is an A and no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store and pick up chips, 2 sodas. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, whirl out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda like.
Nick, we are back. It's time for the last call. You're watching Tastylive. I'm your host, Chris Vecchio. He's the co-host, Nick Batista. Nick, the market was pregnant with anticipation today for a U.S. bombing of Iran. Did not deliver. Instead, it's a bounce. There's the end of that analogy.
I like that.
Stocks are off the lows. S&P 500 now trading at 69.20, only down by 0.3%. That's a much smaller loss than we were at earlier in the session, down over 1. The Nasdaq, which was down 2.25%, is down 1.62. That continued bleed out of the AI-related names. The software names can't be stopped. The Russell, which was also off near 2%, is only down about 0.9% right now, Nick. So late day recovery here. Ultimately, volatility is coming in. The VIX, which had hit a session high earlier near 21.24, is back down below 1895 on my screen.
Mm-hmm.
That good news in stocks is maybe weighing on the bond market, which has given up some of its gains as the day has gone on. No major treasury auctions, what have you, over the course of the session. So it's really just cross asset flows. Bonds are now down 2 ticks. 10-year notes are off half a tick here, despite trading higher over the course of the session. The metals volatility is back, and I wouldn't say better than ever, but it's back. Gold traded higher above $5,100 an ounce. It's back to $49.40 here, still up by 0.11%. Silver, a little bit of a better day, but off the highs, up 2.8%, in at $85.70, and that's off the high of 92 and change. $7 loss there. That's not great. Copper off also by 3.4%. Oil was in vogue earlier. It's still up over 2% right now, but we had a high of 65.53 and at 64.52 here. Volatility up now to 62.8 IVR in the session as some of these headlines continue to come out about Iran. No attack yet, but it seems like we're inching closer. The dollar's had a bit of a stronger day, but not clearing any significant technical bounds. Nick, let's head over to the stock market real quick. High options volume watch list on the platform there. We could see that it's all about the tech companies today. It's your NVIDIA, which was down below 172.5, now back to 175, still a 2.7% loss. You have your Microsoft. Is that a green day? That's not allowed in Microsoft.
Shocking.
On a day like today? Hey, maybe the lows at Nick if Microsoft's green on a day like today. Tesla's off 3.18%. Palantir's down 12%. So much for the earnings bounce. Nick, I'm inclined to start with crypto. Bitcoin is breaking through the low that we had in April. So can we just start there? This is obviously a 4% loss on the session for something like IBIT. It's a 70 IVR. We haven't seen IVR this high since late November. What do you do here? Do we try to catch a falling knife?
I'm already catching it, so I've already cut both my hands trying to catch it. It's been a tough trade. Ryan actually on the show today talked a little bit about the skew of the IBIT options kind of flattening out and really just seeing a little bit of a bid in put options for both ETH and IBIT, just given this move. I feel like there's a potential for upside there. It just seems like it's just not the story right now. And so, I'm sure it'll come quickly, and being long IBIT shares or like some convexity with calls, you're a little bit further out calls so that you catch the move whenever it does happen. I think that's interesting. But it has looked horrible. It has looked horrible. I nibbled on MET today, /MET, which is the micro ETH contract. It's 1/10 of a coin per. So I did a bunch of those just to get like a decent notional there, but you get a lot of leverage, couple $100 to control, $3,000, $4,000, $5,000 worth of Ethereum. But it has just not been the story. Just hasn't been in vogue, unfortunately.
Sure. No, and I mean, listen, I'm in there with you too. The high IVRs, the fact that the last time volatility was this high in the market, it appears near a low. I was looking at some of these crypto fear and greed indexes that are available out there. Okay. Binance has one, CMC has one. They both have the same number, so maybe they're using the same underlying data and it's just rebranded, whitelisted.
Sure.
It doesn't matter. The point is that the last time you had seen crypto sentiment this low, it's at the lows you have in November. It's likewise matched by the lows you have in April.
It's a good sign.
You would think maybe we're at an exhaustion point, a washout. You got to give yourself a little bit of breathing room. Speaking of breathing room here, I decided to jump into the market today with 44 DTE 40-42 put spread at the open. Getting vaporized thus far. Yeah, well, I'm not liking it so far. It's a little bit underwater. But like if we can hold the April low is effectively the idea. And if tomorrow is another red day, I might just have to cut this short as a quick loss.
Yeah, I don't mind that. Today, I think is interesting. The move in the market, obviously, another just incredible, rally from the lows, another huge vol crush. The fact that we've been hitting this 2021, range for volatility futures in the VIX itself. The VIX a little bit lower here, but close to vol futures at this point. It's had me uneasy, but it's been a chop back and forth. 6,800 to 7,000, and the 6,950 range has been a spot. You've gotten taken out to the woodshed in a bunch of stocks. You mentioned Palantir as one of the stocks that was down, pretty decent on the high option volume list. But, you're getting 20, 30% moves in some of these stocks. I know ServiceNow is another one that people have been trading, CRM and Adobe. They're getting a little bit of a bounce today. But there's just been Microsoft, obviously another one. There's just been some carnage underneath the surface. And I wonder, you've got to feel good that the indices haven't been down more than 1%, 1.5% is kind of the biggest move you've had. I mean, that's got to feel good, right? If these stocks bounce back, it's got to be all systems go.
I want to bounce back. I was kicking around the tires with Thomas today, the idea that if you think of the environment we're in, right, growth is positive and quite strong by historical standards.
Yeah.
And then you have the 5th consecutive quarter of earnings growth. If whatever fear is washing through the market right now, washes over, there's a lot to hang your hat on as a bull still. And perhaps that's one of the many reasons why dips have been so shallow over the past several months. You get a 3%, 5% move lower. People are there happy to pick it up because they look at strong growth and earnings expansion and margin expansion. And they say, why wouldn't I still want to have exposure to the stock market in that scenario? The S&P 500 bounced where it should have bounced today. We had this uptrend off of the November and the January lows. That's effectively where the market bounces from. It means we're also going to stay above our 50-day moving average on the close today, which I think is an important development. The NASDAQ looks tougher than anything else. It's this software story, Nick, and I suppose that's probably the biggest question that a lot of people have, the contrarian nature of some folks out here. Software is the place that I feel like many people would be looking.
Yeah.
Could you pull up IGV, the software sector ETF? Yeah, IGV right now has a near 60 IVR. Okay. It's trading right near the April lows. That's just an ugly chart right there. Right. Absolute puking the past the week or two. But you're near the April lows, and that was a historic buying opportunity. So with the volatility in this arena, do you think about looking at IGV or its constituent holdings for potential bottom picking opportunities, which I feel like is in that contrarian nature of the Tasty Nation viewer?
I have started to get into some of those stocks. I've got some short volatility with a strangle on Snowflake. I've got Shopify, a little bit of long delta there. Some of the cybersecurity stocks, PanW, CrowdStrike, those are two that I've been dabbling in. Also, Microsoft being one of its largest holdings in IGV.
It's the largest, yeah.
I have long delta in Microsoft. I've sold some puts. I've done some call diagonal spreads. So I do think those are interesting, especially if you're not bearish the market. I think there's probably a catch up there, especially with like what you're seeing with NVIDIA is down at the 175 handle. Google earnings tonight, I think, is going to be a big kind of either sigh of relief, or maybe that's what moves us lower if it's kind of, already quote unquote baked in, the good news being baked in. I think for all intents and purposes, the numbers are going to be incredible. And I'm sure the spin will be good. It's just whether the stock, reacts positively or negatively in the after hours trade. I think that'll be kind of a part of the story into the end of the week. But yeah, these software stocks, they're really interesting. I'm long some of them at higher prices. I've gotten long delta in some of them more recently, and that's been obviously a better trade, but it's a scary trade. It doesn't feel good. The Microsoft buy feels good. The Microsoft, I feel like Microsoft, and I've been getting long NVIDIA into earnings too, like those feel good to me because I look at those and I'm like, you know what? They're on sale a little bit here. They look okay. These other ones, you know, an Adobe, I don't want to go anywhere near it. The CRM position I have is really small. I really don't want to go anywhere near it, but I see the potential opportunity there.
Yeah, top 10 holdings in the software sector ETF here. Microsoft, Palantir, Oracle, Salesforce, AppLovin, and Intuit, Adobe, Palo Alto, CrowdStrike, ServiceNow. There's a few names in there that are very connected to the AI story. What you're supposed to think of like in a positive way, but we know Oracle has been beaten up over the data centers. Microsoft beaten up over the data centers with OpenAI. Intuit, Adobe look terrible. I mean, it's almost why I think looking at the ETF, even though it's not the most liquid thing in the world in terms of the options market, it may be better suited than just trying to be a hero and pick the name out of this basket that's going to start to outperform if we get a little bit of a bounce. But
totally agree.
It feels like that's what's been. I've been looking at Wall Street Bets today. I've been looking at my Twitter feed. It feels like there's a lot of people out here right now talking about, you know, software is so beaten up. Maybe I don't trade it. Maybe I become a little bit of a longer term investor here.
Oh, I don't like that.
I almost have the opposite. I have the opposite view, right? The view is I would rather play for a short term bounce where those longer term people start to build into a position at the April lows. Maybe get a little 3-5% move here off the low. And then look to sell into that. So maybe have the best of both worlds.
I would rather see Wall Street Bets saying these are going to zero. I'm buying the 50 strike puts in Adobe than to hear them looking to buy the dip. So that reference I don't think gives me the positive reinforcement that I was really looking for. So I'm a little. Yeah. I'm now a little hesitant, and I kind of agree with your IGV. Like maybe you just go into the ETF and you know get the whole basket and not have the single exposure that goes to zero.
There's many layers to my response here, but we see you, Nick. We hear you, Nick. I would like to point out, and the data are available out there. Wall Street Bets the past few years, the forum's top 10 aggregated stock picks, they've outperformed the market. Anyway,
I know. I am in that realm. I am a secret lurker. I am a lurker of the Wall Street Bets. I'm not as saintly as you are in the Wall Street Bets community, but I'm there.
Well, speaking of Wall Street Bets, here's a transition for you, Nick. You can get your wife's boyfriend's tendies by referring a friend. This is a very Wall Street Bets reference.
Oh, man. Refer a friend, yeah. Oh, man. Yeah, okay. All right, Vecchio. All right, I hear you, brother.
The refer or I'll get $100 each. tastytrade.com/refer a friend. I'm sorry, buddy.
That was good. I liked that. That fit. That was a fitting transition. I'm going to have to, I'm not quick enough. I'm not quick-witted enough to come back with something, but I will remember that. I'm like an elephant, okay? I don't forget.
That's fair. And I'm ready and willing to accept the return punishment.
Good.
Nick, so we have this move off the lows today. Do you know, the Nasdaq's not looking as healthy as the S&P or even the Russell right now. How do you parse that? Do you feel more comfortable trading off of today's lows than the S&P and the Russell, or because of how down the Nasdaq is, right? Do you try to pick up the pieces in something that maybe has a little bit more room to run to the upside?
Coming into the week, all of last week, I was talking about I didn't like the feel of the market. I was short. I came in, I looked at my position Sunday. I thought I was a freaking genius. I came in Monday and I was pissed off because I thought that I was just losing my touch, and I've finally gotten out of that. It's been the trading, the back and forth for a person that scalps has been fantastic. I still kind of get an icky feeling about the market with everything that's happening with Bitcoin and the metals and just the speed of volatility. Today was the most high volume day I think we've had in the E-minis all year. We're approaching 2 million contracts. I guess that's kind of a good sign that you're having like participation here. And I think a lot of that, is a buy the dip given the market here. But the vibes are not, I don't feel good vibes here. But maybe that's, I don't know. Maybe I'm losing touch. It has not felt good.
No, it doesn't feel good. The rotation's not good. But
that's not true.
Then again, then again, it is.
You gave me, I mentioned, I said to you, I was like, look at RSP, which is the equal weighted S&P 500 ETF. I mean, this thing is making new highs today. It tells you that the market as a whole, it's pretty good breadth.
That's the thing, right? It's also equal weighted NASDAQ is outperforming the market cap weighted NASDAQ. And in fairness, your call out of RSP, something that I'm one of the people who look at it. So, joking with you, you must be down bad if you're looking at the equal weighted S&P.
I was looking to short it
when I'm down bad.
My thing was I was looking to short it because I feel like there's a bounce in a Microsoft, an NVIDIA, a Tesla. I think that's where the next rotation goes. And that the rest of the stuff that Amgen's, the, other stuff that's moving right now takes a breather.
We've seen the NASDAQ hit new lows today relative to where we were in January and, trying to break through those December lows as well. That's, if you pull up MAGS, the MAG 7 ETF on the chart, it's not the MAG 7 that's causing this problem.
No.
Right? QQEW is the one wiping out to new lows as well. So it's almost like the market's saying, okay, we're sorting into winners and losers. We're not going to get the Fed rate cuts. So all of you small and mid cap companies that didn't win the last few years, we're going to throw you out with the bathwater right now.
Yeah.
Because capital is going to get concentrated into mega cap tech again, which I suppose, Nick, you brushed up against this for today. When we have markets like this where tech starts to slip, there's often an earnings release that can kind of be like a white knight.
Yeah.
That just, what were our concerns about semiconductors all about? Look how much money NVIDIA is making.
Yep.
Does Google have that capacity today?
That's the big question. In the past, it's been Apple. And I will say another thing I was talking about with my dad was today in the morning, when we really started to sell off, you were seeing, NVIDIA down $6 or $7. I've been looking at Robinhood, which is $50 off the highs. All those service companies have gotten killed. And then you saw the only two stocks really that have been strong, big stocks, Apple and Google, the ones that have saved us in the past. They've been the ones that have kind of kept us afloat. I mean, Apple has gone from 250 to 280. I saw some memes about, the AI unwind was perfectly timed for Apple. Apple didn't do anything with AI. And now that it's unwinding, it's even stronger. That's what I think it's good. The market.
Everyone's worried about AI capex overspend. They're like, well, Apple hasn't done any of that. So
haven't spent a dime on it. And Surrey still stinks. It's just not part of the story, I guess. But yes, to your point, I think Google has a chance to put some oomph back in the NASDAQ and some of those beaten up names. That's why I'm bottom fishing a little bit. I've been doing the bottom fishing with call diagonal spreads because I just don't want the continued downside risk. I don't want to call a bottom. But I think if Google is and the risk is I think it's 1x to the upside, 2x to the downside in Google, meaning if it's good and the market likes it, it's going to move up, small. If it's good or it's bad and the market doesn't like it, it's going to be down twice the expectation. And so,
up 5 or down 10 kind of.
Yeah, exactly. That's kind of how I feel with Google right now. And I think, it's not a good bet to take. I'm interested to see what the market does tomorrow, but I don't really want a position for it today. Other than but in static delta, I mean, I'm not going into this with short or long delta. I'm going to let it play out and see what happened. I guess I have a little short delta in the Dow. The Dow hit basically all-time highs today. It's just off of all-time highs. So I have a little short delta there, but I'm very small across the board.
It's if Google can't produce today, right? And we wake up tomorrow, it's trading at 320. It's at 333 right now, depending upon, I'm looking at Google, so 333 and 21 cents. If it's trading at 320 tomorrow, you already look at like a Tesla chart that's starting to look slippery and ugly.
Yeah.
As it breaks its long-standing uptrend from the Tim Walsh lows last year.
A classic.
You look at a classic, a Broadcom, right?
Yeah.
AVGO, right? This looks like a head and shoulders pattern, but it fills the gap from September 4th today and bounces. So you could see this, like if this starts to stabilize above like 320 again, you'd start to feel good about things, but not the Broadcom chart, not the best looking in the world. You look at NVIDIA, a little bit of a bounce, not really helping this market here. Tesla's falling apart. If Google starts to fall apart, then the Mag 7s, they start to follow the equal weighted.
Yeah.
The QQEWs down. And then we have a real conversation in that Mag 7 name. Are you buying the Mag 7 at this multi-month level of support? If you are, the NASDAQ's probably going to find a low then. If you're not in the Mag 7 breakdown further from there, forget 24K in the NASDAQ. What does 22K look like? What does 20K look like?
Oof.
How much further is the floor? Because we're starting to, then it starts to scale a little, just from a technical perspective, there's just not that many significant lows that were carved out along the way where we spent a lot of time consolidating because of how just a one-way market it was last year for so many months. We didn't have time to digest and establish, like, this is a big zone of support. So if we get to 21K, like, don't fret. There's going to be a big buying wall there to support us. It doesn't really exist at present time.
Yeah, I don't know about that. A 0.5% move to the downside seems to be about as much as you can get. I guess on the E-minis, the NASDAQ has been a little bit weaker, but it seems like there's still some buy the dip there. I will say, because you mentioned earnings, Google does have earnings, so that's the biggest name of the group today. You also have ARM, which is another one. We did a small little upside play today from What's Your Assumption? Trade Ideas. We have Qualcomm as well, played that small to the upside as well. That one's gotten whacked. You have Snapchat, which is basically a call option here. I bought some stock. And then some smaller ones, like I know some people trade this Elf Beauty. It's not all that liquid from an option perspective, but there are a couple other, like ARM, Qualcomm. Those are kind of in the AI space. So there are some other ones that are reporting today. Tomorrow morning, not really all that interesting. You have like Bristol Myers in there, BMY. You have ConocoPhillips, COP, Peloton, which is shockingly still a company. But it's all about Google, I think, is really the story here. And I have the way I'm playing
Still worried about my Peloton, Nick.
You still got some?
Like just as a product itself. I have a bike. They just laid off 1,000 engineers or something, I think.
Nice.
Engineers?
That's not good.
Oh my God. The people who build the products, develop the new products?
Yeah, it's not good.
Oh my God. This thing is going to be a coat rack soon.
Google, I'm playing inside up with no risk to the downside. So I have call ratios and butterflies on the upside. If the thing falls out of bed, it's going to be a no big deal. I just feel like there's a little bit of a ceiling there. What else are you thinking, Chris? I mean, what this market at 7,000 is 7,000 going to be our ceiling for the near term? I've sold it a bunch of times. It's been the spot. You take a little bit of heat up to like 720, and then that's the spot. Is that the MO for the rest of the month?
It feels like 7,000 is going to be hard to break. Today's price action tells me the fight's not over yet.
Yeah.
If we can knock on the door for 7K, I know that we were talking seasonality yesterday on Let Me Explain. And no path is certain, of course, but just thinking about the averages here. If this is an average February, as the market has tended to follow over the past, going back to 1950, you probably see a rise in the first half of the month and a pullback in the second half of the month.
Okay.
Maybe we're front loading that here. Maybe this isn't the average month. That happens all the time. And we're getting the volatility here up front first. But if we can get through 7K, it feels like that's been a level we've been trapped below for a very long time. And it would feel like then a lot of people who have been hesitant about getting in this market would capitulate and say, okay, well, there's no standing in the way of it now. It's going to go higher.
Yeah.
It also likewise follows with our 1998 analogy, which is a lot of fun, which stipulates the market should probably rally through June this year before taking a brief pause. So, I mean, I'm optimistic. I really like, you point out RSP. What a different world than QQEW.
It's the only reason why my sister isn't calling me right now is I have her in the, not RSP, but I have some of hers in like kind of like dividend stocks that aren't really moving all that much today. I feel like that has saved me some phone calls and angry text messages.
Yeah,
she's got some gold too. That's probably helping me. That's offsetting the Bitcoin position that I put her in, which is probably at about break even now because she started kind of in like October-ish of last year. So some of her gains have gone away if she looks at it now, unfortunately.
I'm just thinking about this broad market move today, Nick. You were leaning a little short coming into the week, if I recall correctly.
Yes.
And then you got a washout move potentially today. I mean, IGV, for example, that software ETF.
Yeah.
I think it's going to have a record trading volume for today's session with that big move off the lows. So you can see this is part of why the conversation around like dip buying is so much in play.
Mm-hmm.
What would it take for you? What price do you want to see, or behavior and volatility do you want to see to get you fully back on with the bull?
Man, that's a great question. I think volatility. I think you just need volatility to kind of stay in this. I think it's going to stay in this range, in the 18 to 20 range for like a couple weeks, and then I would be a happy camper. I don't like the vibe of this 21 to 17 within 24 hours. It just feels like the metals have taken the air out of the market. You've gotten, like, besides today, less volume in the E-minis. The Bitcoin move, it just doesn't feel good, Chris. But I'm always long. Like, long is my core position, but I've taken a little bit off the table here.
It makes sense. It feels like the market is fragile, right? There's a lot of these are supposed to be hundreds of billions of dollar market cap, $1 trillion market cap, gold.
Poof.
Think about how big the gold market is.
Yeah.
Tens of trillions of dollars and moving 5, 6, 7% a day. Nick, we do have earnings coming out here after hours, by the way, as we get ready for overtime. It is Google mainly that we're focused on. If you care about Qualcomm, that's likewise coming up. Beyond there, ARM Holdings, I suppose.
Snapchat.
Tomorrow we're going to get in there with a little bit of Amazon after hours as well. So a little stumble into the close, we could say. S&P 500 down by 0.5% now, 69.08. Nice recovery, but certainly not the recovery we had. Nick, final thoughts before we head off and bring on Ilya.
Hold on to your seats. I feel like we got a big move from Google. I think it's back to 7,000 or a little bit more to the downside. We finally break that 6,800. I think it's big, which means it should be perfectly a non-event.
Well, you know it. You love it. 6850 is close by, Nick, so we'll probably see it soon. Nick, good seeing you today. Everyone, we're going to take a quick 90-second break. Ilya and I will be back. Overtime up next. Let's see those Google earnings. Stick around.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
What color of jeans? They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 million.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancellari. Bam!
Step into the future's arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Google earnings are out, and are those the right numbers? It's Wednesday, February 4th, 2026. Those numbers that are out, we got to double check those. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 25 and a half minutes as we wind down this trading session. Yes, the numbers do appear to be real.
Those are correct numbers. Yeah.
Google earnings are out here and the market's not liking it. It's not because of the EPS. The EPS was looking great. EPS in here coming in at 282 versus 263 expected. Their revenue is also fantastic. 113.83 billion versus 111.4 billion. Hey, the beat on the cloud, Ilya, 117.66 versus 16.2 billion. So what weird numbers tripped me up as I was trying to stumble through the intro here. 4Q CAPEX, 91.45 billion versus an estimated 28.
Yeah.
Alphabet sees 2026 CAPEX. Well, the estimate was 119.5 billion from the street. Google's telling us it's going to be 175 to 185 billion. Oh. This AI revolution is costing a lot more money.
Very expensive. This AI revolution.
And the market seems to be comfortable with.
And this doesn't dismiss the revolution. This is the same thing we keep going on and on about here. This idea that nobody's dismissing the AI revolution. People are just saying, well, hold on a minute now. You've extrapolated utopia already. Surely the road ahead for the next 10 years is not so clear-cut.
Wait, hold on a second, Ilya. Google, an American capitalist machine of making billions of dollars a year, has decided that it's worth spending $185 billion on CAPEX this year. This must be a great investment. They must be making so much money off of AI.
Or at least they must be looking at this and going, we're going to make so much money on AI later.
I don't know. If I'm a bull, I'm think about my 340, 350 call spreads.
Oh no, I'm telling myself I completely buy the positivity in these numbers. My question isn't the positivity in the numbers. My question is how much of the positivity in the numbers got extrapolated into them months ago.
I'm just saying as a bull here, definitely not talking my book, that if Google's spending this much money on AI, they must be making a ton of money on AI to justify this type of kickbacks.
Right. But take a look at the market reaction. And I think
bouncing back.
I think this is key. The initial read for the markets here when they looked at these top line numbers were, what have you done for me lately?
Ilya, the S&P 500 today is down by 0.5%, 69.05 right now here, a little bit weaker after those Google earnings, although maybe we have a different narrative to tell ourselves, as I'm telling myself with hopes and dreams.
There's always a different narrative to tell ourselves.
Always, every day. Right.
Always.
The NASDAQ is your loss leader, though, down 1.81%. The story here is that tech is bleeding out across the board. It's really an across-the-board thing because you have your QQEW, for example. This is already breaking through those November lows today, whereas your Mag 7s, those are not. So there's this jettisoning of tech. Ilya, maybe your thesis has come home to roost since the Fed meeting last week. That thesis, of course, was that the low rates, they are not coming. And unless something breaks, we're probably not getting a cut until June at the earliest. IGV, the software sector ETF, closed Wednesday, January 28th. The last time we heard from the FOMC at 97.06. It's now currently down at 83.84. It is testing the lows that we had in April of last year. It's been an absolute bloodbath. Software, AI, the application space getting absolutely creamed, but it's the small and mid-cap names in tech that are getting hurt the most. Google here may not be able to save the market because of this CAPEX number. And my goodness, what a CAPEX number that is.
It's a huge CAPEX number. There's no question.
But we have this really ugly market action over the course of today. There were rumors that the U.S. called off a meeting with Iran and biding less time, in fact, and put it back on. We have oil whipsawing around everywhere. Gold and silver had tremendous sessions this morning. And then the day went on and they became less spectacular. Silver up near 92, settling in closer to what we'll call it $87 now. That's an ugly reversal. Gold, $150 off the highs at this point in time. So something spooked the market again today.
Yeah.
Nick, earlier in last call, said something that resonated with me, that this is a market that isn't exactly making him comfortable. This 17 to 21 VIX range that we're not just sitting in, but we're covering intraday is not necessarily the sign of a market that's feeling all right about everything.
Right.
What do you make of that fragility here? And Google, for what it's worth, maybe people are listening, Ilya, it's turned positive on the session.
If ever I say anything bearish, that is an excellent sign that the market is listening and going, no, you don't. At least if you believe last year.
Think about how much money they're making if they're spending that on CAPEX. They're a great capitalist institution, $350.
There's no question. There's no question. That isn't where my naysaying comes, as you know. It's more about when there was a .com crash, nobody stopped the internet from being the internet. But there was a .com crash. When there was a crash with the buildup of the railroads, with the introduction of the car, with the electrification of the world, in every case, build out, hype, crash, does that change the revolutionary nature of the technology? No, of course not. Nobody's saying that this isn't what it is. I think what people are saying is it's been extrapolated to a point where asset valuations are a little wonky. That's all. I think when you look at the price action today, you find, as you were saying, I think lots of cross currents, some geopolitical cross currents. Obviously, crude oil has been jumping up and down around the situation in Iran. Ultimately resolving higher, but less so than it was at a point. Meeting was off, meeting was on. The dollar is stronger, which is interesting. And that strength came after the big European data overnight, which didn't really seem to make a dent, but before Scott Bessent went out there and said things about he still favors a strong dollar. So it's unclear what this was, but right around 1400 GMT, it seemed like some sort of a levee snapped, where the dollar ran higher, and interestingly, yields ran down. So this had a flavor of risk aversion. So I think if you start to put the pieces together, dollar up, yields down is risk aversion-ish. Stocks down, confirmed. Crude oil may be the reason why the risk aversion. So let's allow for that possibility. Maybe it's geopolitically motivated. ISM numbers were strong, so not great for Fed rate cut expectations, but the markets didn't seem to notice. And Bitcoin continues to sink. No big difference to the narrative there. One of the things that, of course, sticks out is gold. And I think where you look at gold, if it were sort of geopolitical risk aversion, you might expect gold to run higher. And we saw some of that, but it couldn't stick. And I think when you look at both gold and silver, what you end up with is basically both are consolidating recent volatility. Both are basically goose eggs for the day. But gold has erased about 50% of last week's loss, the Friday loss, and silver only about a third. So both seem to be consolidating, but gold seems to be on stronger footing. And maybe that's enough to say, well, maybe this is geopolitical uncertainty, risk aversion type of action.
Silver almost turned the corner today.
It tried. Valiantly.
It really tried.
It really tried.
Just zooming in, you put this on the chart yesterday, right? How come gold and copper were in agreement yesterday and silver wasn't? Silver made the attempt to join the party today and was rebuffed.
Yeah.
Next time, though, if we take a shot up here, instead of waiting for the daily close, which was my plan coming out of yesterday, I think there's a reason to look at this 4-hour chart and think about what that long looks like. This is technically, we did put in a 4-hour high above the prior one, close below it. 1, 2, 3 candles, evening star cluster. This is a topping pattern. There's a few things in here that suggest it's a topping pattern. If we were to break through this high within the next 24 hours, you could say that this is a market that's quickly rebuffed these sellers at former support turn resistance right now. And we're back in the uptrend effectively. So if we could see a move up into like 88.5, if we can get a move in that daily moving average right through the 1 month, which is sitting now at 89.11, this is probably going to be a little bit better on the long side again because gold is holding its own. It had a rough session, but all things considered, the bounce on Monday, yesterday's follow through today, reaffirming a close through the 1 week, the 1 month. I'm a fan of all those things, even if the price action today, they're not bad things. And again, big picture, scope scale of the time horizon with which we're operating, mainly for the 82. This was purchased so far out of the money. Now that it's in the money again, sitting on our hands, the old Jesse Livermore. People have tweeted at me, Jesse Livermore is a con artist and a coward, failure, con man. It's like, what? Yeah, who cares? He had a good quote about sitting on your hands.
Also, the man was an excellent trader, just because he was also a degenerate gambler and
then took all of his clients' money and lost it and then off himself. So, not the best role model.
Yeah, and some might say less than ethical. It does not mean that the man did not have market insights.
No, that's true. But we have that price action shaping up here. So gold, silver, copper today off 3%, still hugging the trend line. It feels like it's now 1, 1, and 1. Copper is on the line. Silver is back on the line. Gold is holding it for now. Tomorrow is really important again. Today was a failure of that test thus far, particularly with the intraday move. But oil is that one that we got to keep talking about here. Before we do, however, I just want to quickly go to Qualcomm. Qualcomm has earnings out here. And unlike Google, which we're going to tell ourselves good things about and convince ourselves there are good things going on as it trades at 329 still, Qualcomm, the earnings just really aren't that readily available to paint with a better brush.
No, that's a very good way to say disappointing.
Yes. They beat on...
That is a tremendous way to say, meh.
They beat on revenues.
Wrong.
They beat on EPS marginally. However, their Q2 EPS range estimated was 289, comes in at 245 to 265, much weaker. Q2 revenue estimated 11.12 billion, 10.2 to 11. So not even like, within the street's consensus and at the lower end of the street's consensus. These ranges are below the street's consensus. So stock here very much punished. Not every stock can have that Google story going for it, Ilya, and maybe not all of them retain that tomorrow. The CAPEX numbers have been the most problematic part of all this, right? Is Oracle building out too much? Is Microsoft building out too much? Is NVIDIA just selling GPUs that are sitting in warehouses? Do they have real customers? Yada, yada, yada. So I would love to hear what Google has to say about how they can justify spending $80 billion more on CAPEX than what the street was expecting them to. It has to be a good reason.
I mean, if you're the CEO, what's your usual kind of modus operandi? You're going
Give money
to
back to
underpromise
shareholders,
and overdeliver.
Underpromise and overdeliver. So what's the underpromise on saying we need to spend $70 to $80 billion more than you expected? You have to have a hell of a story to convince the analyst pool that that's not a waste of money, given what's going on in the background of Oracle and the drag on NVIDIA and likewise Broadcom now.
Yeah.
I don't really listen to earnings calls. And I parse the transcripts afterwards. I think I'm going to have to listen to this earnings call today.
Maybe. I mean, obviously, those of us with a macro sort of bent don't really spend that much time digging around earnings calls. But it is interesting that we're getting now for a second quarter. I mean, in the third quarter was a similar story. The numbers were not bad by any stretch of the imagination. But the market's perspective was, yeah, next. And that's interesting because it doesn't mean the numbers are wrong or somehow not good enough. It means sentiment has maybe reached a point of exhaustion.
Is it though? I mean,
maybe.
I want to get, the AI names are having their time in the barrel right now, and the software names and the yada yada. Ilya, regional banks closing back at a high here. That's probably not bearish. Equal weighted S&P 500 closing at a fresh all-time high today. That can't be a terrible story either. I know that NASDAQ equal weighted is in a very different position because it's really about small and mid-cap tech names that are getting taken out. If we think that we're going to have structurally higher interest rates moving forward because of a loss of US dollar supremacy status or the American economy's place in the global financial system, or even the fact that the Fed isn't going to cut rates as much as we predicted, collectively we predicted, because of the strong growth in the economy and the inflation sitting near 3%, well, then it's the smaller cap names that really are reliant on cheaper credit who don't have the balance sheets that get hurt the most. And so this is a market, it feels like coming to terms in a certain sense with the idea that rates might not be moving lower as aggressively as people hoped, and also that there are winners and losers being actively sorted out in the AI race. Which side do you take on this? Obviously, the NASDAQ is going to have a drag right now, but do you trust RSP? Do you look at the banks? Do you look at the fact that transportation, again, this has been a theme we've been watching all week long here, just out of personal curiosity, but transportation and logistics, again, they are leading among the top performing sectors. Rail was up 2.74% today, trucking up 4.26%, air cargo 1.68% higher, warehousing 2.4%, and infrastructure 2% higher. That's not a bad day, and it's been a good thing all week.
No. I mean, I don't think there's any question that the U.S. economy is doing better. I mean, we heard this from the Fed itself.
Another new all-time high in Dow Transports, again, for what it's worth.
Right. I mean, and we saw incredible strength in ISM manufacturing data earlier this week. I mean, there's no question that the U.S. economy is humming along, that it is humming along unevenly. We saw from the ISM data on the service sector today, hiring in that sector has basically slowed to a crawl, and that's the majority of hiring in the United States. So that's
ISM and ADP. ADP was what, 22K versus an estimate
ADP
48.
was soft too. Yeah. Although, do we trust ADP? Historically, no. Is NFP itself now less trustworthy than ADP? Who knows? I think the markets just want a yardstick. By the way, it seems like the jobless claims numbers are gonna come out tomorrow, which means maybe NFP comes out also.
February 11th, they announced today.
Oh, did they?
February 11th.
That's exciting.
Nice. Nice. You know what's nice about that? Right amongst a 10 and a 30-year bond auction next week.
That's exciting. So we've got an interesting situation here. The economy is ostensibly in a strong spot. The markets don't like it to a point where they want still 48 basis points in rate cuts. So why do they want the rate cuts? This is really the key for me. And why when you see this kind of jumpiness in oil and gold, you get a sense that, yeah, la-di-da earnings and la-di-da the economy. Nobody really cares because things have become stretched to such an extent that those things are not having a favorable impact on markets. How is it that the economy is as strong as it is, at least as far as minting money? Nobody's saying it's good for everybody. Nobody's saying it's even optimally calibrated in terms of sort of distributing its fruits.
It's definitely not.
And nobody's making that argument. But in terms of growth, in terms of minting money, the economy is doing great. In terms of minting earnings, the economy is doing great. And yet, we haven't set a higher high since October because the Fed is resisting easing money. Why? Something is wrong. What is that something? My argument has been that it's policy volatility, which is already cooling economic activity. We see it on the trade side in spades. Obviously, the tariffs are a big issue there. We're seeing all this geopolitical volatility now with crude oil. That's inflationary. That's going to complicate the Fed's job more so. And so I think the issue here isn't that we don't have enough positive things to say about the economy, about markets, about earnings. I think it's that we do, and markets can't rally anyway. I think that's the most troubling thing of all.
You mentioned this thing about the markets behaving optimally, or the economy performing optimally. Oh, hold on a second. There's some chatter that the Google CAPEX number may be restated.
Oh, no, wrong number. Whoops. Move the decimal place in a weird spot there, guys. Sorry.
Okay, I've got him.
That was the full year number. That wasn't the quarterly number.
I gotta just double check this. Maybe that's why you got to bounce back there. It looks like the CAPEX earnings number. I just want one more check.
Ooh, somebody fudged the number.
The number was 27.85 billion, not 91.45. 91.45 was the full year spend for last year. So there's good thing we're not just trading billions of dollars around this. Ilya, you made a comment there that piqued my interest just now. And it piqued my interest because of what you said about the economy perhaps not performing optimally at this juncture, the fruits of this growth not being distributed equally or evenly. We're not communists is the point I just want to get out there quickly.
Sure.
Right?
Sure.
Equal opportunity, not equal outcomes is my view.
That's right.
I've said a long time. I saw this quote from Ken Griffin of Citadel. Not exactly your woke liberal aunt or uncle out there. Griffin said yesterday, the administration has definitely made missteps in choosing decisions or courses that have been very, very enriching to the families of those in the administration. that calls into question, is the public interest being served? Are you giving me some new bull meat to chew on here? Are you telling me that even though we're growing at 2.74 to maybe 4.2%, according to the Atlanta Fed and New York Fed growth calculators, that there is another level higher that we could unlock if we weren't seeing policy decision-making out of DC being conducted in the manner with which it is now? Because I'm finding a multi-year bull thesis coming together. What does an economy look like in 2029 with an administration that maybe is not doing the things that Ken Griffin, the CEO and founder of Citadel, a major Republican donor, says that the Trump administration's doing?
I think it's important not to confound things here. I think what he's saying or what he's highlighting isn't an economy-wide point of consequence. I think what he's talking about is the appearance of graft and the appearance of self-dealing and I say appearance because I'm no prosecutor and you're innocent until you're proven guilty. But at least in this country, and thank heavens.
You find me the man, I'll find you the crime.
That's my former country, and happy I am to be out of it. And when you, I think, look at what Griffin is saying, he's expressing an opinion, I think, about optics and about things happening at a level that's concerning, certainly to him, but not at a level that I think any of us would judge to be foundationally consequential for the direction of the economy. I don't think that if you were to change administrations and then that administration were not doing what's going on here and instead went back to sort of your garden variety level of political power flexibility, the kind you keep behind closed doors, the kind that isn't so grandiose and open that it's plain for everyone to see. A level of power flexing that respects decorum. I think that kind of a thing, because obviously nobody's saying that, well, there's such a thing as clean politics perfectly ever. But decorum is good. Appearances are helpful. Not reaching further than is reasonable by historical standards. That's good. I think what he's saying is, okay, if a new administration comes, we might have a change in that. I think to your point, would that change mean something meaningful at the economy-wide level? I don't think so. Not in practical terms. In appearance terms, yeah. I mean, business leaders may not be able to go to the White House and ask for favors quite so openly. But would it change anything sort of practical growth-wise? Probably not.
Ilya, just before we go out the door here, one of the knock-on effects of Google's CAPEX numbers, just to remind people, the Q4 CAPEX was $27.85 billion, not the $91.45 billion that was originally put out on the news wires. Typo, mistake, that was the full year. The 175 to 185 billion CAPEX spend for 2026, that is correct still. One of the knock-on effects of that, Micron, which was down 10% today, hit a low of 363.90, is now trading back at 388.68 here after hours. Broadcom, similarly, which was down at 295.30, is back to 324 and change here after hours. So, Ilya, maybe the market is thinking, oh, they must be making a ton of money in this whole AI spiel to justify.
Well, I mean, I think they are. I think they are. I think these kinds of minutia things only matter a little bit. I mean, there's no question they're making a ton of money. The question is, is the market already priced for all the money?
Well, remember this flywheel as we go out the door here. Microsoft, Oracle, they're on the OpenAI side. The Google side, with their TPUs, they use TPUs, the tensor processing units, they have Broadcom. They're buying the stuff from Broadcom. So if Google's going to say, they'll actually be spending $70 to $80 billion more this year than we expected. The people who help make Google's chips and everything for AI, you got to think that they'd be winners of that type of CapEx spend. But hey, that's another story for another time. Overtime's out of time for this Wednesday, February 4th. We'll be here tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm Chris Vecchio. Good luck trading. Tune in for Macro Money coming up next. Ilya's sticking around, so should you.
Hey there, everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What a day it was for financial markets. Prices were here, prices were there. Gold in particular was seesawing all over the place. Crude oil also. It's a volatile and ultimately not the most clearly discernible kind of price action for the markets. We're going to try to figure out what in the world is going on and how to make sense of what's next. We also had a little bit of economic data here. We have a little bit more of it that's coming up overnight. So some stuff to go over there. So really the first and most important question that we, as ever, are asking ourselves here is, what's this price action telling us? What does it mean? Because if we were to put these things together, and look at only one market or look at only one set of circumstances, it would be very easy to extract the wrong conclusion, or at least a conclusion that seems inconsistent. So in the spirit of what we do here as we analyze macro, we're not really trying to forecast so much as we're trying to read the tea leaves of the price action and see what kind of a world gives these kinds of moves in relation to each other. And then in that world, what would you logically anticipate would happen next? So here's how the markets behaved themselves today. We've got the S&P down a little bit, NASDAQ down more, 1.74% for the NASDAQ, the latest batch of tech earnings, not really leaving everybody with a good aftertaste. As ever, the worries are not so much for what the numbers look like for this fourth quarter, and more so what all of this might mean going forward, because, of course, these concerns around AI having reached some kind of a valuation extrapolation maximum, where the markets increasingly are starting to think, well, have we already baked in everything that there is to bake in for the great and powerful AI future, at least as far as we know today? And I think that's a question that's increasingly on the minds of investors. Certainly, it seems like that's the narrative in the financial news media, which is no shortage of influence there, because, of course, if everybody's watching the same thing, then everybody is behaving through the same lens. It's not so much that anybody can really go and poll everybody. That's not really what's important. From a sentiment perspective, the most important thing may well be that we're looking at a situation where the conversation has become sort of zeitgeist driven, and that the zeitgeist is, well, maybe we're overvalued a little bit, not because the value isn't there fundamentally, but because we've come a real long way. And the question is, well, how much of our breathless AI expectations haven't we already subsumed into price action? At least that's the conversation that's seemingly being had. And we're looking now at then the focus on these CAPEX numbers, and those CAPEX numbers coming in not quite as everyone would have liked, and certainly not beating already very heady expectations. And so we are ending up with this sogginess. As far as yields go, things are relatively steady. We're a little bit lower on yields at the front end, a little bit higher at the long end. So a slight twisting of the curve, which is interesting because just earlier today, the Treasury released its planned bond auctions for the coming months, and it's more long-term paper and less short-term paper that they're anticipating to sell, but maybe the numbers in the markets looked bigger as far as expectations, and this is not as much of an adjustment. Maybe we're looking at a little bit of a buy the rumor, sell the fact kind of a response. In any case, the moves are small, and so there's not a whole lot to extrapolate from them. The big story, not surprisingly here, crude oil and gold, which have been swinging wildly all day. Crude oil ultimately on course to finish the day up 1.7%, gold up 0.8%. The dollar relatively steady, although the euro is a little bit lower, the yen a little bit lower, so a touch stronger for the dollar. The yen obviously seeing a bigger move there, which kind of clashes with the broader risk aversion theme. Typically, you see the yen strengthen when there is risk aversion, and it does look like there was some of that here today, but apparently not for the yen. Bitcoin continues to ignore everything and drop like a rock, off another almost 5% today. As far as economic data is concerned, we did get a narrowly better than expected number for the service sector, suggesting that the U.S. economy continues to look very chipper. We had the numbers for the manufacturing sector earlier in the week, and of course, they were very strong as well, much better than expected. The expectations, as you can see here, had a contraction for the 11th consecutive month on the menu. As ever, these numbers are in the logic of PMI. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so what we end up with here is a situation where clearly what's happening in services did not have the same kind of drama that manufacturing had, where we thought we were going to get another contraction and ended up with a surge to growth for the first time, as you can see here, since around the middle of 2022. I mean, we haven't seen growth like this in almost 4 years. And so let's call it 3.5 or so. But the service sector is still looking relatively strong. The previous number was revised a touch lower, but the current number you can see holding steady at relatively impressive levels, very much in line with some of the higher readings toward the middle of last year. And if we look at this composite that we've constructed here, a kind of back of the napkin composite that weighs services at 70% and manufacturing at 30%, very, very crude calculation, of course, but sort of gives a sense of what the overall non-farm economy might look like from this vantage point. We've got a cumulative number then that gives us an economy that is the strongest that we've seen it in a very long time. I mean, just looking at the last time we saw anything remotely comparable to this level of growth, we would have to go all the way back to September of 2022 by this measure. So the economy, at least in terms of this ISM data, is looking like it's growing, or at least making money at a very healthy clip. Looking at the internals of the survey here, a little bit less encouraging than the output numbers. We can see new orders growth slowed, employment slowed to near standstill, and the price structure got a little bit more inflation-minded. But nothing ultimately that's catastrophic here. In fact, we've seen the service sector stay buoyant even as employment there was contracting. So seemingly uneven sort of makeup of growth, but nevertheless growth, nevertheless strong. We saw very impressive numbers out of manufacturing earlier in the week, where new orders surged and employment shrank at the slowest rate since late 2024. So things are not perfect, but in all, the U.S. economy seems to be looking relatively well acquainted with its moving parts here, and seemingly looking like a much better story than really almost anywhere else you might look out of the major economies around the world, at least, again, from a growth perspective. Nothing is seemingly misfiring in a terrible way, although, of course, the jobs situation remains soggy, and, of course, the Fed has also outlined that at length. We see here in the Citigroup Economic Surprise Index sort of the nature of the beast. The story is of U.S. economic data accelerating higher relative to expectations and putting up the widest margin against those expectations in realized economic data since back in late 2023. So we're looking at an economy that not only is strong, but is surprising analysts with that strength. And of course, last week we heard it was surprising the Fed with that strength as well. And nevertheless, the markets are still holding on to expectations that they want 48 basis points in rate cuts out of the Fed this year. That's, of course, double what the Fed itself has surmised, but broadly in line with the 2-year outlook. The Fed wants 50 basis points in 2 years, one cut this year, one cut next year, at least as of December's summary of economic projections, which is what we're seeing here. And the markets want not so much more rate cuts. They still want the two. They just want them up front. They want them this year. And if we look at the probability matrix, it hasn't moved around very much. We got the first cut on the menu in June, second cut on the menu in October, according to these expectations. Now, all of that gives us a very interesting set of circumstances to consider, and we've been considering. But it doesn't really change the narrative, at least as far as the Fed is concerned, at least as far as the U.S. economy is concerned. The larger issue continues to be, first, why does the market, with a strong economy and seemingly buoyant earnings, despite some of these worries about insufficient further acceleration in AI spending, just because the expectations have become so hot, why do the markets still want these cuts? And before we get into our theory here on macro money, let's just look at the price action itself. So, needless to say, crude oil has been jumpy. And if anything, this makes for less of a reason to cut rates. Because as we've said before, inflation expectations in the bond market have been tracking crude oil higher since these bottoms in late 2025, early this year. So it is to no one's surprise that higher oil prices might translate into inflation that keeps the Fed anchored. Break-even rates, the 5-year, the 10-year, the benchmark break-even rates, which measure inflation expectations actually priced into the bond market, they've been going up right in lockstep with crude oil. And generally speaking, historically, the knock-on effect from higher oil prices shows up in CPI with about a 1-month lag, give or take. So it's not like we're going to have to wait a long time. This should be something that tells the Fed that what they need to be doing is holding on. And the Fed is indeed saying that. They're saying, well, hold on. Maybe we don't need to cut so quickly. Maybe we can look at the data. We are in a good position to wait. But if you look at what the markets want, as we just have, of course, they want these cuts. And they've been at odds with the Fed about this for months now. In fact, that story is front and center in what we're seeing in the stock market, where the S&P 500, this is the active futures contract, sort of the most directly, let's call it speculative barometer for risk sentiment. And what we're seeing here is sort of the most obvious, clear example that the market is not happy with something. Because what we're appearing to see here is the high from October remains the main barrier. And although we've made narrowly higher highs, even just recently, we are still incapable of breaking that high in any kind of a lasting way. And of course, the question becomes, well, why not? What's so wrong in these markets that we are unable, for whatever reason, to break through these levels? And something on the sentiment front that helps to sort of connect this with the desire for rate cuts in a time of strong growth, strong earnings, and an oil-based inflation risk certainly seems like a tying narrative. The markets clearly have a reason not to anticipate these rate cuts, but they're calling for them anyway. And the Fed's resistance is clearly giving sentiment some pause. Now, taking a look at gold prices here, because of course there was a wild ride there, we can see that if in fact what we're seeing in crude oil is pure geopolitics, you might have expected gold prices to be higher. Instead, they're just consolidating, and indeed a touch lower today. If we look at just the intraday price action, now of course there was a gap higher, so nominally it is a gain for gold prices because of the upside gap, but ultimately we can see it doesn't really go anywhere. It is digesting, having at this point backpedaled about 50% of last week's aggressive sell-off. Now, much as we see in crude oil, if the narrative in gold were about only episodic risk aversion, and if that were only about will we or won't we attack Iran today or some such thing, you might have expected that there were more clear-cut confirmation of what we're seeing, at least in crude, today in gold. But that's not the case. Instead, we're looking at digestion. And if, in fact, there were a case to be made for dispensing with rate cut expectations because of the strong economy, because of these strong earnings, well, not only would you expect to see stock prices higher, you would expect to see gold prices lower in a meaningful way. You would expect a stronger dollar. And you have a little bit of US dollar strength here today. In fact, most of it was last week, and what we're seeing over the past 2 days is more like digestion. This is the euro as a kind of stand-in for the overall direction of the dollar, the greenback's most liquid counterpart. And you can see we're sort of stuck in this digestion range. And against the backdrop then of markets wanting rate cuts, the data saying no, and a geopolitical sort of overlay, it's interesting to look at the dollar here, catch neither the safe haven bid nor some sort of an uplift from a more hawkish view on policy. Because clearly the markets don't believe that hawkish view is right or actually coming. Because they've been challenging the Fed with their more dovish perspective for months. And so when you put it all together, what you seem to see here is that gold has become an independent speculative narrative from stocks. And so it is down today just because sentiment seems to be a bit soggy in general. And that narrative isn't going away because of this or that geopolitical risk. It's about deglobalization and the need for non-sovereign value transfer in the event that the world's big economies start to put barriers on capital moving here or there, or weaponizing their banking systems, weaponizing their currencies, which of course is something we're starting to see already. Even just in the conversation about a rare minerals trading bloc led by the U.S. that was mentioned today by Vice President J.D. Vance. Almost sounds like a TPP 2.0. One wonders what would have happened if the TPP were not torn up and we had a broad trading bloc excluding China already, as was the plan going into the latter days of the Obama administration. But we'll see how this progresses. We clearly still have that narrative in gold for the time being. And as the dust settles here, it seems to be behaving more speculative minded, more risk sentiment minded than anything else. And there is some sogginess, much as there is with stocks. So there appears to be a general kind of view here that the markets don't like something that isn't necessarily the economy or earnings, that they are seeing some sort of concern that makes this rise in oil less a worry about inflation and more a worry about all of the constituent parts of the global system becoming increasingly disparate. This story, whether the U.S. invades or not, or has any kind of action in Iran or not, seems to be more about the disruption of illicit oil supplies to China, or sanctions defying supplies, as it were. And so what's happening seems to be a recalibration of sentiment. And the market's perspective on sentiment seems not to be improving, even as the data looks strong, even as the economy looks buoyant, even as earnings look relatively solid. As far as the event risk coming up here, we got an ECB rate decision. They're not expected to do anything. Not surprising. Inflation continues to be steady and, in fact, undershot a little bit when the numbers came out earlier. We're still hugging the 2% line, though, and so the ECB doesn't have any expectations to go anywhere over the course of this entire year. Looking at the Bank of England, we're expecting to see that they're going to be cutting at least once this year, and the likelihood of a second cut at this point, give or take 50-50, something along those lines. If we look at what the vote tally is expected to be for the Bank of England, of course, it's a one member, one vote kind of a thing on a 9-member committee. The expectation is that we're going to get 7 out of 5 vote for standstill, 2 out of 5 vote for a cut, nobody vote for a increase in interest rates. That's a little bit more convincing than last time, where it was a 5-4 split in favor of a cut. This time, though, looks like we don't have any strong desire, at least as far as the expectations are concerned. The 7 out of 5 math seems to call for a relatively convincing majority. If that turns out not to be the case, if there is more voting in favor of a cut, then Bank of England might be a negative catalyst for the pound. We'll see how that goes here. But when you put it all together, it sure looks like the markets think the Fed is going to be more dovish than both the ECB and the BOE this week and this year, which is an interesting conversation for the dollar. And of course, our thesis continues to be that the markets are unnerved ultimately by political uncertainty. That all of this commotion, the wild moves in oil, the wild moves in gold, are really just illustrations. Illustrations of policy coming hard and fast and reversals moving quickly and daring moves being undertaken at a clip that markets are not used to. And that what this is calling for is rate cuts as a hedge, just in case something goes off the rails unexpectedly. So from a positioning perspective here, I am still a little bit short the dollar, short against the pound and the euro going into these policy announcements, and also short against the Canadian dollar. I've got long side exposure in gold, short side exposure in silver. Silver went the wrong way today. Gold basically didn't go anywhere. But whereas gold has recovered about 50% of its decline, silver has only recovered about a third. So I'm going to hold on here because it looks like silver is soggier than its more expensive counterpart, and I'm positioned accordingly. Short the belly of the curve as well as the the long end here, looking for rates to go higher as these rate cut expectations start looking more stretching of what's likely to happen. Short Bitcoin still with quite a bit more time before I have to roll these puts again. They keep working. And long crude oil, where at this point I'm quite long on these USO calls, but the spreads in them have been widening out so much that the P&L has been jumping wildly. But nevertheless, the bias is higher, and I've got 72 days to expiration here, so I'm looking for this thing to keep going for a while. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of Tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.